Chapter 5 focuses around what is still one of my favorite strategies till this day, buying new stock promotions. Buying new stock promotions was a big part of the reason I was able to grow my account early in my trading days, and really still is one of my most consistent strategies. My thought process on buying new promotions is pretty simple, really. If it's a promoter with a good history, that has a history of producing large volume and liquidity, that has a history of putting together multi-day promotions, that have very nice percentage runs, people are going to be interested in buying them. So when the email for their new pick hits, that is going to act as a catalyst and spike the stock. Basically, just like a press release would spike a stock, you're going to see an email spike a stock if it's from a promoter that people believe can produce results. My goal when I'm trading these is to get in early and to profit off of the predictable spike. Now, in order to do that, you need a broker that will fill your orders. For me, the main broker I use right now whenever I trade these promotions, and really the main broker I've used the entire way, is Speed Trader. However, I've also had results getting fills through Centerpoint, although the costs can sometimes be a bit high. And while I don't have any personal experience trying to trade new promotions with these brokers, I've heard that it is possible to get fills through E-Trade and Scottrade as well. Maybe there are other brokers out there that are well suited to fill you upon the announcement of a new promotion. I don't know what those are, but it's worth looking for. It really goes back to needing to have the right tools for the job, because you could watch this whole chapter, you could understand promotions, you could do everything you need to position yourself to be in place to buy their next one early, but if you don't have the broker that will fill you, it's all for nothing. But how do you know which promoters are actually worth trying to buy? And how do you position yourself to be one of the first people to see that email when it comes out? In a minute, I'm going to show you the approach I've taken to help me answer both of these questions. There is a decent amount of work that goes into it, but for me, the work has been more than worth it. One of the first steps to trading stock promotions from the elite promoters is actually finding stock promotion websites in the first place. So one of the first and simplest ways you can do this is just go through the search engines. Google terms like hot penny stocks or penny stock picks or whatever really, and you can just go through page by page and sign up to all the top sites that come up in the search results. That's one way to get on a lot of email lists. What I like to do though, and what I pay closer attention to, is what sites are advertising. And the reason this matters to me is because the sites that are advertising, you see the ads up here at the top of the page and then down the side of the page on Google, these are sites that are actually paying Google money to make sure that they will be displayed first and that they will be the first sites that you see when you're searching for something stock related. And this is good because this means that these sites could potentially have a little bit larger of followings, and that also influences their ability to possibly push stocks a little bit further. So the advertisers are always the ones that I think might have a little bit better odds of moving a stock. So I'll just go through Google once every couple of weeks, and I'll just see what sites are advertising, and I'll sign up to all of them. Then I'll go ahead and do the same thing with Yahoo. And the reason I use two separate search engines is because sometimes the ads are different in different places. So it's just a way to be careful, make sure I see everything. And then anything that looks like it might be a promotion site, like maybe Best American Stocks or Bull Alley or moneymorning.com, anything that looks like a stock promotion site, I'm signing up to. Stuff like ShareBuilder that I know is a broker, I don't worry about so much, or TD Ameritrade. So aside from search engines, what else can you do? Well, another option is a site called stockpromoters.com. Stockpromoters.com is handy because you can see a list down the side here, most promoted penny stocks this week, and then it'll give you a list of tickers that were promoted and by what newsletters. And you could just go through, click on one of the newsletters, and just sign up to really all of the sites that are listed. That's always an option, and that is a way to get more lists to put your name on. Now, the one problem I have with stockpromoters.com is they don't always have the most complete information. So I've seen a lot of cases where they'll list a couple sites that are promoting a stock, but they'll leave off a bunch. So it doesn't really give you a complete list. But still, it is a way just to get started and to get on more email lists. Finally, one other place I like to look is on Twitter, actually at something called the Pump Tracker. Their handle is @thepumptracker. They also have a website, thepumptracker.com, so you could look there as well. But I like to look at them on Twitter just because, again, it's a way to get names of websites and also just see what is being promoted. So awesomestocks.com announces BPZ. Stock Situation Room announces BPZ. USA Market News BPZ. So it's just another way to further build up your list and round it out. And I do recommend just creating some throwaway email address, one that you don't mind if it gets spammed or whatever happens to it, and just sign up to everybody there, any site you come across. And then later, once you go through sorting out what promoters are good and effective and which aren't, then you can create additional email addresses that are maybe just for the promoters that you feel are a little bit more elite. And we'll get a little bit more into that next. So once you've signed up to a bunch of stock promoters, you need to be able to track their picks. And what I wanted to show you right here is my email address, my throwaway email address where I've been signing up to stock promoters since 2011. And since 2011, in about the 3 years this account has been open, I've received over 137,000 emails, and I've saved them all. And the reason I do that is because it can be very handy for a number of reasons. One is that if an OTC stock hits my scanner and I have no idea why it's moving, I can come into here, I can go up to this little search box, and I can punch in whatever the ticker is and see if I've received any emails on it. Also, it's great because you can go back and just enter a certain promoter by name and see all of their past picks that they've actually sent out. A lot of promoters on their websites will list off, oh, we've said you should buy this stock, we've said you should buy that stock. And at the end of the day, it's usually just a bunch of BS, and they're lying. So I like to have a nice history that I can see with my own eyes of what have they actually picked and how much has it moved. So what I did was I went ahead and I signed up to a new email, and I signed up to all of the websites that were advertising on Google and Yahoo about 2 weeks ago. And in that time, we've received about 202 emails, it looks like. And I also signed up to Stock Tips because if you're at all involved in the trading community and interested in promotions, you're going to have heard of Stock Tips unless you live under a rock. So I put them onto this email address as well. But what I want to go through here just a little bit step by step, we'll only do a couple examples though, is looking at different promoters and trying to get a feel for what are they capable of. So starting with Stock Tips, you would search stocktips.com since that is where the email comes from. I guess, just to even back up a step, if you open up a Stock Tips email, look at the details, it came from paul@stocktipsemail.com. So you could search stocktipsemail.com or whatever. And now anything that's come to you from stocktipsemail.com is going to pop up into your search results. And we see a whole lot of ECRY emails, starting all the way back on November 25th when we signed up, it looks like. So with a promoter like this, if you're new and you don't really know what's going on, you're going to want to go on up to find a stock chart and pull up ECRY. And I have that pulled up here, and you can see what kind of performance it's had since it was announced and since it's been running. And you can usually judge when a promotion started by the volume. So if you sign up in the middle of a promotion, just look back on the chart and when did the volume start picking up, and that's probably when the promo started. So ECRY so far, it looks like it started at about 26 cents when the promotion opened. And ever since, it's been pretty choppy. Got as low as 15 cents, got as high as 50 cents, it looks like. But they've held it together multiple days, and the volume has been in the millions of shares. So really, there's good reason to follow Stock Tips, as you can see. Really, this is just a process you need to go through with other promoters. You can track this in a spreadsheet if you want to. You can just try to do it by memory. But just go through and see what promoters actually can move a stock and actually produce volume. And the volume really is an important factor because it needs to be tradable. So let's look at some of the emails we've gotten here. And let's just pick a couple promoters at random. How about Stockmister? So Stockmister, it's at stockmister.com is the email address. So we'll just search stockmister.com. And now here is a bunch of different picks that they have done since mid-November when we first signed up to them. And you can just check out the charts one by one of all of these. Let's start with the most recent. It looks like PTLF is on full alert for Friday. So let's look at the daily chart of PTLF. And this daily candle here, this is really unimpressive. They alerted PTLF, it traded 40,000 shares today. So first of all, there's no volume. Even if it had been a stock that spiked on the daily chart, if it had traded 40,000 shares, it doesn't matter. That's not tradable. We're not going to have the ability to enter and exit that stock. But it looks like it basically just didn't move all day, and there really wasn't any volume at all. How about their one before that? NVGT on December 4th. And on December 4th, it looks like it opened up around maybe 8 cents and faded back a little bit. It's a red candle. Today it rebounded a little, but again, the volume really isn't that impressive. We talked about how stock tips traded millions of shares. Well, this traded 600,000 shares yesterday and then less than 200,000 shares today. And you wouldn't even consider it still a pick today because they moved on to something new. So I'm not going to go through every single stock Mr. Pick, but already we're getting the idea that these guys really aren't impressive. There's really nothing to see here. There's no reason to want to play these guys. So, we'll stay signed up to them. We'll keep getting all their emails, and maybe down the road we'll see a stock moved a lot, and we'll search it in our email, and we'll say, why is this stock moving? And see StockMister.com promoted it. And then maybe we'll say, if they do that a couple picks in a row, okay, now we need to start paying a little more attention to them. Because if they put out a series of good picks in a row with decent volume that are tradable, that's going to draw people's attention, and it's only going to help their next one. And just one more promoter here. I'm seeing a lot of emails on GLRKF. We'll get a little more into connecting websites in a little bit and trying to figure out who's related to who. But let's just pick one of these GLRKF websites. FinestPennyStocks.com. And yeah, it's info@finestpennystocks.com is where the email is coming from. So we'll search finestpennystocks.com. We got welcomed on November 17th is when we joined. And it looks like GLRKF has been promoted ever since. So again, let's go to a chart. Let's look at GLRKF. So these guys are kind of like stock tips in the sense that they'll stick with a pick for multiple days. However, if you look at the volume here, we've really only had a few days of volume that have been above 1 million shares. And so this really isn't as liquid as a stock tips promotion would be, but it has held together. And we said November 17th was our first email. Well, it looks like there's been big volume on this stock since early November. So it's probably safe to assume that they've been promoting this stock ever since the start of November. And in that time, it's gotten from 45 cents to a high of about 65. And then it's just been very choppy ever since. So this is a chart that, multi-day, if it can break out past 64, it could run more, or it could just fade off and end. We're not really sure. We don't know a whole lot about these guys' history since GLRKF is the first pick we're seeing them promote in our email. So they may be worth watching in the future. They're sticking with this for a while, but that tells us something about this promoter. They're not someone like StockMister who jumps from a new pick day to day. So now let's fast forward a few days. And Finest Penny Stocks has moved on from GLRKF, and they're now promoting their new pick, which is MEDA. And just to recap, with GLRKF, we saw that it wasn't a very liquid promotion, only a few days where it traded any kind of decent volume, but it was a slow climber from about 40 cents to a high of 65 cents, but also it lasted multiple days. It was a long-lived promotion. So now these guys are on to their new one, and again, since these guys are new and I'm just trying to get a feel of what they're capable of, I need to go to a chart and I need to see what exactly have they been doing with MEDA and have they been effective. And so we take a look at MEDA here, and it looks like, first of all, the liquidity is much improved. Day one, it traded over 40 million shares, and basically it hasn't had a down day yet. And the past couple days, liquidity has stayed okay, around 20 million shares each day. And we're now up from about 4 cents to 11 cents, it looks like. So these guys have really caught my attention now because they've put out a second decent promotion in a row, and this one has been more volatile, it's been more liquid, and they're showing that they do have the ability to move a stock. So I know that I noticed this. I'm sure that many other traders noticed this. So the next promotion, the odds are great that there's going to be a pretty nice opening spike when they announce it from everybody trying to get in early. In preparation for this next pick, and now that this is a promoter that I would put on my good promoters email list and really try to focus in on what they're doing, I need to know what all their websites are. And the reason for this is because different websites will release emails at different times. I want to make sure for the next pick that I'm one of the first people to know what the ticker is, because then I can get in earlier and I can get a better fill. The first thing we do, and the first place we start, is just with our current throwaway email address. And yeah, we know Finest Penny Stocks did GLRKF and did MEDA. But from all the other sites we signed up to that were advertising, did any others? So we search the ticker MEDA, and now we get a list of sites that have been promoting it that we're already signed up to, which is Smart Stock Choices, Finest Penny Stocks, Smart Stock Winners, and Best American Stocks, it looks like. We're on 4 of their lists. And here's an example of what I was talking about. Different sites send out emails at different times. So just look at the last 4 emails up here. Basically, these 4 sites released their emails between 2:54 and 3 o'clock. So if I'm on only one of the email lists, and I'm on the wrong one, say I'm on the Smart Stock Choices email list only, I'm probably the last person to get that email, one of the last people to find out, and I'm at a huge disadvantage when trying to buy the next pick. So I need to go through and I need to figure out what are all the sites that belong to this specific promoter. And there's a few ways I would do this. First of all, I'm going to start with what I have already. These guys who were advertising, so I found them and signed up to their sites. But next, I'm going to have to start my list. I want to actually make a physical list here so that I can keep it organized and stay on top of what I'm doing. And I just do that in Google Drive. It's easy enough to do. I don't need to buy Excel or anything like that. And I just create a new spreadsheet. And this is going to be where I track it all. And in one column, I'll just put the site that I have, so Smart Stock Choices. And I'll just go through and Finest Penny Stocks is one of them. But yeah, I'm just going to go through right now and I'm going to start my list. And I'm just going to put all the sites on that I have. And this list is going to grow as we go through this example. Smart Stock Winners and Best American Stocks. So where's the first place I'd go to see if I can find any websites connected to these 4? And the first place I would go is a site called YouGetSignal.com. And YouGetSignal has this really handy tool called the Reverse IP Domain Check. And you saw the description there, it said find other websites on the same web server. So we can take one of those sites that we were just going through, such as bestamericanstocks.com, we can hit check. And here we go. We just got a list of the 5 domains that are hosted on the same web server as bestamericanstocks.com. And so we have Best American Stocks, www.bestamericanstocks, that's obviously the same thing. Tweetprocessor.com, I mean, that's probably unrelated. That doesn't sound like a stock promotion website. But then there's Stock Tip Magazine. And that's one we don't know about. And so we can go ahead and take a look at Stock Tip Magazine. And yeah, this looks like a promotion website. And then you can go ahead, you can punch in your email address. But since it's on the same server, that basically guarantees that these 2 are connected. So I'm going to copy this server. I'm going to add that to my records when I'm tracking this. So Best American Stocks was on that one. And then the other news site, StockTipMagazine.com, also just going to copy paste that one. If I can get over these highlighting issues. There we go. And there's another one that's under the same umbrella. And sometimes with some of these web servers, you'll notice, maybe they're not on the same one, but I've seen promoters before where they'll be very, very similar. So in this example, the server is 198.27.66.153. I've seen ones where, Stock Tip Magazine will be on .153, and then another website will be on .154. And this works both ways. So you don't have to just search a website. You can also highlight and copy the little server here and change the number slightly and see if it brings up anything around it. In this case, no, it doesn't look like these are any promotion websites. But anyway, that's something that I would get into if I was really trying to dig. Right now, we're just going to stick to some of the basic stuff. So back to our list. SmartStockWinners.com. Let's check on them. And so there's 9 domains hosted on the same web server. Here's our web server, which we're going to copy and paste to our spreadsheet, just to have for our records. And then let's just take a look really quick and see if there's any other websites. And the only one that looks like it could possibly be a promotion website is favoritemarket.com. So we'll check that out. And that does not open a promotion website. That is just some gobbledygook. I don't really know what this is. So this obviously isn't what we're looking for, so we just move to the next one. FinestPennyStocks.com. And FinestPennyStocks.com brought up quite a few results here. We'll start by copying over the web server, but then if we go back to our list here, there are a ton of websites on here that we hadn't known about. AbsolutePennyStockWinners.com. We can add that to our list. StocksThatSoar.com. We can add that to our list. And again, I'm a lot quicker to add one of these to the list if it shares a web server. TheBestOfTheMarket.com. I guess that's one we should probably check on. Make sure that's actually a stock website. And yeah, it looks like it. Sign up here for your newsletter. So it certainly has the look. And all of these I would sign up to also with my throwaway email address. Just as additional confirmation, I guess. And also smartstockchoices.com is listed here. And that's one we already had. Now, one thing I will do here is I'm not going to automatically assume that Smart Stock Choices is still on that same web server. This is more of a list of everything that has ever been on that web server. But when I'm checking it out with smartstockchoices.com, I'm actually going to punch that in myself. And this example kind of helped me out here because this is one of the cases where it has moved. You can see it's now on a different server. But also, there's PennyStockRepublic.com. That is yet another promotion website. And so our list is growing here, and this really is just so far from using UGetSignal. And this is why it's one of my favorite tools. But now we've hit a bit of a dead end, because we're up to 9 websites now, but we're out of web service to check. So we've got to go into some other methods to see if there's anything we could have missed, or if there's any other sites that are on different servers that we wouldn't have found yet. So another way I would use this is I would go to Twitter and the pump tracker, like we talked about before. You could go through it tweet by tweet and see if you can find, any site that's promoting on MEDA. I don't like to look at it like that because, it's a lot more work than I want to do. So usually what I'll do is I'll just scroll it down here and just scroll it down, back at least a few days, just so there's plenty of tweets. And we're still only 24 hours ago and we've gone way down this page. But I'm just going to scroll it down here. Sorry if this is making anybody motion sick. And once I've loaded a large number of tweets from them, and that's probably far enough, then I'll do Control F in my browser. I'll search MEDA, hit enter, and there you go. And there's a site I didn't know about. ElitePennyStock.com announces MEDA as a 12/10/2014 promo. Now, this isn't necessarily a lock for them to be connected, because sometimes you'll see D-list promoters or bad promoters piggyback off of good picks, where they just want to get their name out there, pretend to be part of the action, and maybe trick some people who don't really know a whole lot about the stock world into thinking that they were responsible when really it was another group entirely that made it move. So Elite Penny Stock, I wouldn't necessarily add them to my list right away, but I would go to the website, and again, this is what the throwaway email address is for. And I would punch in my email address, promotertracking@gmail.com, and then tomorrow, or a couple days down the road, I can see if I'm getting any emails from ElitePennyStock.com on MEDA, and how they compare to other emails that I've been getting from Finest Penny Stocks, or the sites that we know that actually are behind it. And if it all matches up okay, then yeah, I'll go ahead and I'll add them to my list. Now, this is a case where I do know that ElitePennyStock.com is part of the group. I'm operating with a little bit of inside knowledge here because I have been following these guys for a little while. So just to move this example along, I will add them to our list. And once I have confirmed, like I would have tomorrow anyway when I received the email, but once I've confirmed that these guys are part of the MEDA crew, I would just go right back to UGetSignal and punch in ElitePennyStock.com. And it's taking a second here to load. But again, I would just copy in that web server like I had before, and then add all of the other websites on it. AmazingPennyStockPick.com. EquitiesThatSoar.com. StockStrategySecrets.com. WallStreetMagazine.com. Now here's something just to note. You've got AmazingPennyStockPick.com and you've got AmazingPennyStockPicks.com. And so these are on the same web server, so they are probably connected. They probably would just wind up putting you on the exact same mailing address. But with looking at other websites, it's important to note the very small differences in the domain names, because these are in fact two different websites. So there was a promoter way back when called Awesome Penny Stocks, who was a very, very good promoter, and they could really move stocks. And there were a lot of copycat sites out there, delisters just trying to take advantage of the name. And they would confuse people because they would make their website awesomepennystock.com or awesomestocks.com. And people would get confused and think that that was the same promoter. But in reality, it is a different website. So you need to really pay attention to details when you're looking at some of these guys. For example, finestpennystocks.com, don't go to finestpennystock.com, sign up to them and assume that they're a good promoter. You need to really be careful that you're getting the URLs exactly right. But anyway, even though these are on the same server and they're very close to each other, I will add them both to my list. And then they're all on this same server here. So our list has really grown now. And I guess we'll go back to the pump tracker and just check a little bit more here. And nope, they just had Elite Penny Stock both times, announcing Meta. So there's no other sites that they really have picked up on. So another example here that they don't necessarily get all of the sites. It's a good tool to maybe use to find a new site or two, but you're not going to get complete information from sites like these all the time. Moving on, what are some other methods? There's still some other ways I might use to try to find sites that are connected. And we've hit our dead end again. We've got this big list here. We've got a ton of websites, but there could still be a couple missing. So what are some final things you can do? And this is really more of a taking a shot in the dark type approach, where a lot of what you find won't be connected, but every now and then you'll get lucky and you will find some sites that you didn't know about. So let's just take a look at the website ElitePennyStock.com here. And what I'll do is I'll go through these websites and I'll look for key phrases that might be unique to the site, and then I will Google them and try to find other websites that have the same design. So right here, curious to find out what stock will soar next? Sign up quickly to find out. And I'll highlight that entire section, I'll copy it, and then I'll go to Google, put it in quotes, and right there, ElitePennyStock.com, WallStreetMagazine.com. So that's a way I could have found WallStreetMagazine.com if I didn't know about UGetSignal. And then one thing you always want to be sure to do is it says they have some omitted entries that you can include. So make sure you always repeat the search with omitted results included, because then it brings in all these other sites that we hadn't, seen on the first search, but that are connected. Equities that soar, absolute penny stock winner, stuff like that. So it's really important to go through the omitted results, and then you can just do this with different websites and punch in different keywords. Now, sometimes you will find stuff that isn't connected. Here's the bestinthemarket.com. Let's see if there's anything here that we could use. Oh, and testimonials are usually a good way to find other websites. So, dear editor, I wish there was a way I could thank you for your great stock picks. Like, let's just take that alone. And we'll search that in Google. And okay, so there's Best American Stocks, there's Best of the Market. Here's a site called SuperiorPennyStocks.com, it looks like. Now, these guys aren't necessarily connected, but there's someone that we can punch into our promotertracking@gmail.com email and find out tomorrow, or find out down the road. Are they sending out MEDA emails? Do they look like they're a part of this team? And it's a way to find more websites, and like I said, sometimes you're gonna hit it on the head and find sites you didn't know about, or sometimes you're just gonna find other unrelated promoters, like Amazing Penny Stocks, misspelled amazing. I would automatically probably guess that these guys are delisters. Again, we gotta do the omitted results here. OTCoffers.com, where we send you the best picks. I mean, I don't know if these guys are related or not, but they're somebody that you can sign up to and find out down the road. So anyway, those are a few of the methods I'll use. And again, it's just really important to go through this and find as many of the sites that you can, because when it comes time for that new pick that's getting announced, right at the opening bell, or gets announced by surprise midday, you want to be one of the first to see that. So one last thing we need to talk about before getting into the actual trading of these promotions is multiple email addresses and how you can use them to your advantage. So right here, this is my main email address. This is where I get the best stock promotions. Earlier we were talking about the email address with 136,000 emails, and 99% of those emails are garbage, and I don't care about them. They don't generate volume, they don't spike, I don't want to buy them, I don't want to short sell them. And that's the reality of the promotion world, is there are very, very few good stock promoters. And usually who is good or effective is rotating a bit, and it isn't always the same person. At the time I'm recording this, Stock Tips is the best in the game. By the time this DVD is released, that may not be true. It could be somebody new, or there could be a new major player. We have to see. But when you find somebody that you believe is the premier stock promoter, you want an email address where they're going to stand out from all the rest. You don't want them buried in 130,000 emails. When they email, you want to see it immediately and know that you have to pay attention. So that's where other email addresses come in. So this email address I have right here, it only is signed up to probably 3 or 4 different promoters right now, Stock Tips being one of them. And as you can see right here, today I got a Stock Tips email on ECRY. Why is there a little 6 in parentheses next to it? Because I've received it 6 times. And you might be wondering why I did that. Well, we talked earlier about how different websites could send out emails at different times. It's also possible that the same website could stagger their emails. One Stock Tips email list may hit 5 minutes sooner than another. So I want to be on the list multiple times, especially if it's a promoter that releases intraday picks. Now, Stock Tips in this case, they're not one of those. They announce their picks, or every pick up to this point, on Sunday nights usually. The reason I'm still signed up to them 6 times is just in case they change that up in the future and start announcing right at the open or intraday. But anyway, the 6 emails, let's take a look here. I got this one at 5:01 p.m. 5:01 p.m., 5:05, 5:05, 5:05, 5:05, and 5:07. So that's what I talk about when I say that these could be staggered. What would happen if I was signed up to Stock Tips with only one email address and I was on the 5:07 list? Well, everybody else who got the email at 5:01 has a 6-minute head start on me, and they probably got a much better fill than me. So this is why I take that precaution. So how do you set up multiple email addresses? Obviously, you can just make lots of different Google accounts. And you can see that's kind of what I did here. I have a lot of them forwarding all to the same place. This is 8462GRITTAT@gmail.com. And 400runner89 @gmail.com. But you can get your emails to all forward to one place. And what you would do is just go to the little settings tab here, click on settings, forwarding and pop/IMAP, that tab, and then you could tell it to forward a copy of incoming mail to whatever, and then either keep your e-copy in the email box or to delete it, or just whatever you feel like. If you make 5 email accounts, 10 email accounts, whatever, and you just forward them all to one place, and then you have that one email address open all day, as soon as emails start hitting, you're going to see it. And if you're on one of the early lists, which you hopefully would be if you've signed up 5 times or more, you're going to be the one who gets that 6-minute jump on the person who's on the list that hits later than you. So anyway, this is one of the last things I do for a lot of the major promoters. This was a huge asset back when Awesome Penny Stocks was around. Now, not so much, since Stock Tips does the overnight picks. But down the road, I'm sure this will come in handy again. The promotion game is constantly changing. Now that you understand what I look at when it comes to finding and tracking stock promoters, let's get a little more into the specific trading strategy, as well as some live trade examples. One of the first and most important aspects to this strategy for me is that I get in, I get out, and I move on. I do not buy these promotions as multi-day investments. I do not hold and hope for big 1,000% gains. I take the small, quick, predictable part of the move and I move on. And these 4 charts you see here really demonstrate why, because not all promotions by these major promoters are successful. Bottom left corner, you see a daily chart of RARS, and that's one of the first promotions that really taught me that lesson. It had a great day one. A lot of people thought that Awesome Penny Stocks was going to jump in on it. I think that the way RARS started was they put a few new websites out on it announcing it as the pick. And everybody assumed that these websites were connected. But then that night, Awesome Penny Stocks actually put out emails of their own saying we are not picking RARS, or saying their pick was delayed or something like that. And there was a huge gap down the next day and then 3 days of liquidation. And a lot of people got caught in that, and there were a lot of really ugly losses as a result. A couple of future Awesome Penny Stocks picks. If you look to the right of RARS here, you'll see VLNX, and to the right of that is SLIO. And those are other ones where, again, decent day ones, and then after that, it was just nothing but carnage. And the top right corner here is PGFY. That was actually a promotion by Stock Tips, a promoter that is still in existence and that we'll be talking about throughout this chapter. And even that one was just a disaster. One good day and then straight down, and then it actually got halted something like 6 days into the promotion or 7 days into the promotion. The point here is it's dangerous to make assumptions. One thing a lot of these had in common was I saw a lot of people justifying why they were still in when they were down a lot of money. They would be saying things like, oh, it's going to come back. Awesome Penny Stocks picks last for weeks, or Stock Tips picks last for weeks. And they're going to keep on promoting this. And it's that kind of thinking that will eventually lead to you getting crushed by one of these. So don't make assumptions. Just because it's a good promoter does not mean the results will end well. Anyway, back to strategy. When I first started trading these, I basically would just wait for an email to hit. And then once the email hit from the major promoter that I wanted to buy, I would just be buying as soon as possible. I'd be using my hotkeys. I'd be sending orders to multiple routes. I'd just be doing whatever I could to try to get the orders in as quickly as possible and just to fill whatever I could. Now there's been a bit of a shift. Now most major promotions hit overnight. So when an email comes out at 7 p.m. telling you, hey, this is our new pick, that doesn't do you a whole lot of good. And the next morning, the stock gaps up. And you're usually put in a position where you have to wonder if the gap up is too much, if it's safe to chase the gap. And the way I've learned to handle those is to actually buy pre-market during the time when the stock is trading very large volume. In a lot of cases, shares are trading hands between people who are involved in the promotion, and the price levels where those trades are going off is where I want to be entering, because usually it's pretty massive volume. Later this chapter we'll get more into that, and you'll even see it in a few live trade examples. The third scenario I was used to seeing was if we were expecting a promotion to be announced right at the opening bell. Awesome Penny Stocks used to do this a lot, where they would say, Monday morning at 9:30, our new pick is coming out. And in the vast majority of cases, once again, you could spot the stock pre-market before any email had even gone out. There usually aren't very many OTC stocks that trade a lot of volume during the trading day, let alone pre-market. So all I would have to do is set up a pre-market scanner to show me any stocks that are trading more than $50,000 in volume. And most of the time, maybe half an hour before open or 15 minutes before open, a stock would pop up on my scanner with no trading history and no reason to be trading that kind of volume, and you'd know that was it. And again, I would just start trying to buy in pre-market around those blocks. Here are a few examples of what I'm talking about. Let's start with SWVI. SWVI was an old Awesome Penny Stocks pick, and it traded a ton of volume pre-market. At first, you can see it was gapping up. It was spiking at the start of the day because really just probably people chasing and thinking, hey, this is it, this is the pick. But then around 9:10 or 9:15, you start to see a bit of a shift. A lot more volume comes in if you're looking down at the volume on the chart, and the price starts getting knocked back. And as it's getting knocked back, that's where those big blocks are going through. That's where the shares are trading hands between the promoters. And that's where I'm looking to enter, when the stock is being knocked back and dipping, not when it's gapping up and spiking like that first thing in the morning. And then come 9:30, market bell rings, emails hit, and you get that morning spike that you typically see on these major promotions. HIDC is another example from the Awesome Penny Stocks guys. This actually might have been their other group of sites, Victory Mark, I can't quite remember now. But point being, it was the same people controlling it. And it was very similar tricks. Before 9:30, you see a little bit of knockback in price. You see a lot of volume. I mean, if you look at the volume scale here, this is basically millions of shares trading hands. And once 9:30 rolls around again, you get that big spike. So there was plenty of opportunity and plenty of shares to be bought down in this 1.5 to 2 cent area. And pre-market, that's where fills would be easy. And not even half an hour later, after the market is opened, you have a doubler. But Awesome Penny Stocks is gone, and we don't have examples quite that ideal anymore. So let's take a look at WPWR. And that is actually a stock tips promotion. WPWR is probably one of their most effective morning spikes I've ever seen. And the previous day it had closed around 5 cents. So if you look at the pre-market levels here, already pre-market, it's trading in the 10 to 15 cent range. It's up a ton on the day already. But you do see a pretty good deal of volume go through around that 15 cent area between 9 and maybe 9:15 or 9:30. And then we get closer to that market open. And the pick had actually been announced over the weekend, so everybody knew already, and that's part of the reason it gapped up so much. But still, everybody who couldn't buy in pre-market, who didn't have a broker equipped to do so, they had to try to get in at market open. And since stock tips had been doing so well up to that point, there were quite a few chasers, plenty of people willing to buy higher. And as a result, you got this crazy spike up into the 40s. And finally, TGRO. This is another stock tips example. This is one that was before WPWR actually, and probably one of the first ones we really saw them have a kind of day one like this where there was quite a big all-day run. But again, it was the same sort of situation. The volume you can see is nothing like Awesome Penny Stocks was, but still it is significant. It is something your scanner would pick up pre-market. And again, this is one where it was gapping up because they had announced it over the weekend. So everyone already knew the ticker, but pre-market, the opportunity was to buy in around those blocks pre-market when there were easier fills. And that way you're not one of the people chasing a spike and competing for a fill when the market opens at regular hours at 9:30. So I said it's important to have the right tools for this, and this is one of the reasons why. If your broker cannot get you an execution pre-market, you're using the wrong broker for this strategy. And unfortunately, there are a lot of people out there who don't have a broker that will do that. And to a degree, that's part of what this strategy thrives on, is because when those people are buying into that morning spike and trying to get their fills, you're already in and you're the one selling to them and taking the easy profits. So which promoters do I currently believe are worth trading? Here's my list, and unfortunately right now it's brief. It just is 2 promoters, Stock Tips and Finest Penny Stocks. The 2 are a bit different because Stock Tips only has the one website actually sending out emails and pushing the stock, while Invests.com will write up articles on the picks. But Finest Penny Stocks has many, many websites to its name, any one of which could announce a promotion and be the one to lead it off. It's important to note that these guys do not put out picks very often. Stock Tips only put out 4 promotions in all of 2014. And Finest Penny Stocks is kind of new to the scene, so we're still getting a feel for how often they can put out picks. But from what I've seen so far, it feels like maybe 6 to 8 per year if we're lucky. So this isn't an everyday trading strategy. This isn't even an every week trading strategy. But when I start getting emails from these guys saying picks are coming soon, I take notice and I get ready because I want to be ready to strike when that pick hits or when I start seeing weird volume. Let me just stress one more time that just because these guys are the top dogs right now does not mean they always will be. By the time some of you watch this DVD, it's possible some of these sites don't exist. It's possible that these groups are both shut down. So draw your own conclusions. Use the lessons from earlier in this chapter to find your own promoters, figure out on your own which ones are worth trading, which ones are effective, because like I said, it constantly changes. Do not chain yourself to the assumption that these guys are always going to be good. Now let's get into some of the live trading examples, and we'll start with stock tips. With each promoter, I always keep in mind what their overall history is. Basically, how good of a day one did they have last time, and how good was the overall promotion. So for stock tips, let's take a quick look at their history leading up to this first pick that I traded on film. The first pick I ever saw from stock tips was AMMG, and it was a pick that didn't really catch my attention until midway through the promotion. Just because it was a random OTC that was running, the volume was nothing special. It was only about 1 million shares a day on average, maybe even less than that. But it was a multi-day runner, and it was one that I had gotten into my giant list of D-list promoters because I basically was signed up to everything under the sun. So one day I just happened to search AMMG in my inbox to see what was pushing it, and I happened to see it was a site called StockTips.com. And they caught my attention because it was a nice multi-day run. Their following pick though, PGLO, is where I knew they really were serious. The volume was much improved, and it was a massive run compared to AMMG. The promotion started around 30 cents, but it had a nice breakout after about a week and a half or 2 weeks and got as high as 96. And then they followed that up with almost an identical promotion, TGRO, except it went much, much higher. Again, it started in the 30 or 40 cent area, but this one got up to $1.60 almost. And again, it had another breakout midway through the promotion, and it had a very nice run as a result. So by that point, I was very aware of who Stock Tips was. I was very interested in getting in on their next one early, and that led me to WPWR, a pick that I really didn't wind up trading all that well. I never had that big of a score on it, but it was another very big runner for them and another very large success, where even though it was at 5 cents pre-promotion levels and they got it to 45 cents on that first day, they still managed to break it out yet again a few weeks later. And that 45 cent breakout resulted in it going to a high of 86 cents before it crashed and the wheels came off. But after WPWR, and after everybody was just itching to get in on the next one, and everybody thought that Stock Tips could do no wrong, they brought out PGFY, a stock they started at very high prices. And I mean, all in all, it wasn't a terrible day one. It opened up in the low ones, and it got as high as 170. So that still is playable. That still is a decent day one. But the problem is that after that, it had 2 very, very bad down days where anyone who had bought on day one would have gotten crushed. And after a slight rebound, the pick actually got halted, and everybody got really scared that the regulators were after Stock Tips and that things were just going to go south from there. So their following pick after that, and I think it took them maybe 4 to 6 months before they put another pick out, was ALKM. And there was a lot of goofy pre-promotion action on ALKM. I didn't really do anything with this one early either, but I think a lot of people were really waiting to see how was Stock Tips going to return. How were they going to be after their last pick had gotten halted and it had fallen flat on its face and it was a total disaster. And ALKM, I think they quelled some fears because they started it around 15 cents on day one after the gap up, and they got it as high as 50 cents. And it was another one that had pretty good volume throughout the life of the promotion. It was a nice long multi-day run. It went for over 2 weeks. And yeah, it crashed and faded like all the others, but still, they had put in that nice upward trend first and given people a chance for profits on the front side of the promotion move. So faith was restored in Stock Tips after that one, and that leads us into their next pick, which turned out to be ECRY. And we're going to take a look at ECRY now and how I traded it on day one. So here is ECRY, a Stock Tips promotion that was announced over the weekend. So pre-market right now, it is gapping up. So you can look at the daily chart here above, and for whatever reason, my Thinkorswim software decided to start printing pre-market prints on the daily chart, but in this case it's a little bit useful because you can see how much it's up already. Pre-market, I mean, it's only 8:48 and it's printing around 30 cents. It's already traded the most volume it really ever has. Compared to the 13-cent close before, that's up quite a bit. But what I'm looking for here is for the price to get knocked back a bit. I mean, I know it's going to gap up. I expect that based off of the history of stock tips promotions. They've all been announced overnight. And I still expect that there should be a spike along in the morning with it despite the gap up. So I'm watching the stock get knocked back now, and I'm watching the volume. And I want to see, where does big volume start to go through? Once I see big volume going through, the idea is to build in around that. So I already have a small order in at 24 cents, as you can see, and that's really just a feeler order. And I've filled now 50,000 shares at 25 cents. So that's about a $12,000 position. And I'm very comfortable with that because on a play like this, I go big on these. I have plenty of room to add, and if it gets knocked back down further to maybe 20 cents or even 15 cents, that's where I can really size in, and I can do it with even more confidence because it's really not that big of a gap up anymore, so it has more room to spike. But as we're getting it knocked back here, I'm just watching the action, I'm watching the volume. And you're also going to see that all of the orders I send through aren't through ARCA. Right here, I test a little 10,000 share order through ASCM because sometimes other market makers will fill. And I'm curious here. I want to see. I've got ASCM sitting on the ask at 25.5, so I put a 25.5 order in there just for 10,000 shares just because I wanted to see, will it work? And I filled, and now my position's up to 60,000 shares. But it's good to know because now I can route somewhere else and not have to worry about paying the ARCA fees. And I know there's another way to get filled. This also comes in handy on promotions where ARCA isn't active. While in this case people could route to ARCA pre-market, that's not always the case. Sometimes on the newer tickers that don't have much of a history, ARCA is inactive pre-market when all this is going on, and most people think there's no way to get in. But now we know for future use that ASCM would be an option. As the price keeps getting knocked back here, the volume is picking up. This 1 minute candle right now in pre-market is the biggest volume we've had all day in 1 minute. It was almost 180,000 shares. I just keep on slowly building in. I have an order in right now at 23.1. You see the ARCA 23.1 bidder on the level 2, and it only shows 2,500 shares. That's because I'm hiding my size. I'm trying to buy 20,000, but I have hidden the size. And where you would do that is in the little display box on the DAS Trader level 2. We had a 200,000 share print go through at 23.7 if you look back on the time and sales tape. And that's pretty significant, and that's very likely not retail trading. So these big blocks are where I expect that insiders or people involved in the promotion, or maybe people who are going to be controlling the promotion, are having shares exchange hands. And I kind of think of that as the base level that is being defined for the promotion. So I'm not thinking anymore like, oh my gosh, this stock is up all the way from 13 cents and I'm chasing a huge gap up. Where all these blocks are going off, where all this volume is hitting, that's my new base level. So I'm thinking of this as a stock where the base is forming around 24 cents right now. And so my 25-cent average, it's not 12 cents too high anymore because it closed 12 cents lower. It's just a penny above where all this volume has been going off. And again, I'm still only in 80,000 shares. There is plenty of room to add if it gets knocked back further. I'm just slowly working in, and as we get closer and closer to the bell, I'm going to get more aggressive. And we just had a nice slew of prints go through, 100,000 to 23.2. A couple hits of 25,000 to 22.8. A couple 50,000 hits at 23. These are the blocks I'm looking for. We've already traded 1.8 million shares today, 1.9 now. A couple more 50,000 share hits. I'm sitting at 22.6 hoping I get a low fill. A 400,000 share hit just hit at 23. So I put another ASCM order at 24 on the ask, and that fills. So now I'm up to 100,000 from 24.79. And I finally give up on my 22.6 order. And so as pre-market goes on here, like I've said a couple times already, it's just going to be a question of slowly building in, trying to get in around where all the volume is hitting. And then once the market opens, looking to sell into the spike that I expect. And it's still 22 minutes before market open. So I'm still not in a horrible rush. Even though it's starting to build back a little bit, I'm not hurrying, feeling like I have to get in or I'm going to miss my chance. And 25 starts to get heavy again, and it looks like there's going to be another round of knockback. And when I say it gets heavy, of course I mean all these market makers are piling in on the ask now. And there are a few hits going through right now, but it's nothing too huge. I put in an order through ASCM at 25 cents because I do want to fill a little bit more here into this knockback. 25 cents still is only a couple cents a share above this 23 base level that's forming. So it's just me taking another piece. And we talked earlier about how ASCM will work. Well, in this case, the order's been sitting there for a couple minutes now and hasn't filled. So maybe I would have been better off going with ARCA. But finally, it goes through at 24.8. And I'm up to 150,000 shares now. We're now only 15 minutes to go until the open. Still time for it to potentially get knocked back lower. So that's why I'm still not going huge. I just want to be safe and be sure. And again, we start to see a bunch of volume going through in the 23s. A couple hits of 100,000 shares at 23.9. There was a 50,000 share hit before that at 23.8. You can see I try to get another piece here down at 23.3. I have an ARCA order sitting and waiting. a 1,000,000 share print at 23.5. And when I see that, that's when I'm almost certain that that's the base. And I throw a bunch of orders in, trying to fill in the mid 24s. And I eventually even move up to 25. Because now we're 10 minutes to go till the open. We're up to 4 million shares traded on the day, and it's just pre-market. We have a very clear base defined. And so despite trying to add there, I had some trouble filling. And again, it was a case where maybe I would have been a little bit better off using ARCA instead of ASCM. And so I cancel out my orders. I'm sitting on 180,000 shares. I'd still like bigger. And I try through MAXM here. I route this order somewhere else. Again, because I'm curious to see if this route would work. I didn't get a fill though, and it upticked. There's a big wall of sellers at 25.5 right now. 7 minutes to go till the market opens. So I'm going to see if this gets knocked back one last time. If it starts to thin out towards 26, I'm going to buy more and just try to hit the ask. But the bid thins out instead. It starts to get knocked back. And so this last dip here is where I want to try to accumulate the rest of my shares. Back into the 24s and 5 minutes to go until open. And at open, that is when all the retail orders start hitting. Everybody who got the stock tips pick in their inboxes and doesn't know how to trade pre-market or doesn't have a broker that can trade pre-market, they're all going to be rushing in at the open. And that's when there's going to be the spike. And if there isn't a spike, I'll be able to see it on the level 2. I'll be able to tell something is wrong and I can get out. So I throw in 2 more orders at 25 cents because now we're just a few minutes to go from the open. It's clear to me that this base is in at 23. I'm up to 300,000 shares and I'm happy and I'm going to stop buying there. About a $75,000 position. Which when you think about it isn't even that much risk because this account that I was trading this in had about $180,000 in it. So I'm not putting my entire account on the line even or anything like that. And part of the reason I stop at 300,000 shares is because I want to keep the size reasonable in case for some reason the spike isn't working at the open and I do need to get out quickly. I don't want to have so much size that I can't possibly fill. And now we're in the last minute of pre-market action. You can see how much the bidders are stacking up now. The entire bid that we can see right now in this level 2 feed is between 25.3 and 25.49. Meanwhile, the offer is thinned up quite a bit. And we're going to slow down to real time here for this opening spike because it's important to just watch the level 2 and really be able to see it and what's going on. I don't want to speed through this. And so now the market is open. $25.8 is only showing 2,500 shares for sale, but obviously it's selling hidden size. There's a lot of orders going through on the offer right now. I actually put a couple more orders in. I decided what the heck, I'll try to fill through ASC. I'm going to get a tiny bit more. Because basically I like how stacked up the bid is. And I feel very confident that this seller is going to lift and we're going to uptick and spike. And so we get the uptick. I unfortunately didn't fill, even though I routed to the market maker who was selling. Sometimes that's how it goes though. But I'm still sitting on my 300,000 shares, and now I'm really watching the level 2 more than anything else. I am remembering that the pre-market high was 32 cents. That could play a role. It could run into some trouble there potentially. Just more as a psychological level than anything else. I see the 296,000 share bidder at 27. We have 7 market makers stacked at 27.69. And still a very thin offer. And we get the uptick. And again, all the bidders move up now. We had a few big bids there at 28. And this is what a very, very bullish level 2 looks like. Plenty of bidders still. And we're getting up towards the nice round number of 30. So I'm curious how 30 is going to act. And the 30 offer takes a bunch of hits and starts to thin up almost immediately. And all of a sudden there's only one market maker left. And still all those bidders. And the market maker gives up and we uptick. So the key with these is you have to sell when it is still strong. Or you have to sell as it is starting to turn and momentum is starting to shift. Because if you wait till it gets weak, you're not going to get a good fill. It's very hard to fill an OTC into weakness when you're trying to sell. Now with a new promotion like this, where it's a major promoter, I've seen enough of these that I know that usually the first time the level 2 action is turning after the spike, unless it's been a really ridiculously big spike, the first time it's turning is going to be a fake out. And then usually it comes and rips back for another leg up. So although I know this coming in, I still make the mistake in this trade of taking off some of my shares on the first time it starts to turn. And you're going to start to see that right here. You see a bunch of prints going through, hitting 32 on the offer. But 32 is not upticking like it was before. It's not thinning up like the ask was before. And there's only 4 bidders at $31.99. Now a fifth, but now another seller comes in. So I threw in sell orders right there for half of my shares, and I took off half here at 32 because this is the first time it ran into any kind of trouble. And yeah, it was a conservative exit, it was a safe exit, and that's okay. There's really nothing wrong with being safe and taking off when the stock is still strong. But I was upset after this trade because I didn't stick to my plan and I didn't trust that first turn was going to be a fake like it has been so many times in the past. And so the level 2 continues to battle here at 32. And finally gets the uptick. And now it's right back to being bullish. $32.99 stacks up on the bid. 33 is just one market maker on the ask. He's selling a little hidden size, but it wasn't much, and we uptick. And now comes the 34 test. And here we go again. We start to see some hidden size that's very notable get sold at 33.9. A 40,000 share print, a 65,000 share print. A couple hits go through at 40, or at 34, I mean. A 200,000 share, a 100,000 share at 33.9. A third seller has come in at 33.9. 33.89 just dropped one of its bidders. And we're starting to see more hits go through on the bid side now. And so this is the second time where momentum is starting to shift a little bit. Where even though the offer is taking all these sizable hits, it's not upticking, it's not thinning up. And in fact, the offer is getting heavier. So I put in sell orders for another 100,000 shares here. And I even put in my last 50,000 shares. And an offer drops down to 33.6. Start taking some big hits down at 33. And it looks like it's very possible this might turn now. So this batch of sells I'm okay with, because we've already had the first fake out turn. This is the second time now where it's getting heavy. So again, it's possible it catches, it's possible it keeps going, but I just want to be safe and get out the rest of my shares. And I do. And I've now locked in $24,000, which is a 33% gain in about 8 minutes of regular market time. And that's why I love these plays so much, is because they're liquid. You can play size in these. And as you saw, I really didn't have all that much trouble filling during the turns. Now, unfortunately, that was another fake turn. And the offer thins back up again. The bid starts to stack up a little bit. And we continue on to some new highs. So just continue watching here for the next few minutes. And see if you can spot the next time this is turning. And now it's really starting to uptick fast. Had a hit above the best ask there at 38. $36 bid stacks up very quickly. And so now that we've had 2 fake turns, it becomes even more likely that the next one's going to be the real short-term top. At this point, I'm not trying to get back in yet. I might rebuy on a good dip later. But I'm not going to chase spikes because I'm afraid of missing a few cents a share of the upside. And we're through 38. And look at how fast 38.48 stacked up, and then a 38 seller came in on ARCA and locked up the best bid and ask. So right there, it would have been near impossible to get a fill. And I've sped the action back up. But now we're down ticking, and now we're into the next round of pull. And so say I had still had some shares here, and I had still been long and I'd gotten caught, I probably wouldn't be chasing this panic pullback. I'd be waiting for the first time it bottoms out and has a bounce back up, and then I'd be selling into the bounce. As it's turning, I'll take a fill if I can get it quickly, or within a penny or two of the top. But after a while, I don't chase. And you can see the 34.6 bid builds back, the 34.61 ask thins up. And now we perk back up. But anyway, here's your end of day chart on ECRY. And as you can see, after that perk back up, it got back up to 38 cents very briefly, but then it faded off for a good portion of the day. It got back as low as 30 cents and spent most of the day just consolidating and not doing much. Sometimes you'll see these build back up and break out midday or in the afternoon. This one didn't. And at the end of the day, I'm very happy with my sells. I'm very happy with my profit. And I'm looking forward to the next release by these guys, because I'm going to do it all over again and take the conservative, easy gains. And just taking a look at the daily chart now for ECRY well after the fact, it turns out it was a pretty successful multi-day promotion. In these first few days here, it did look like it might be kind of a dud. It had panicked all the way back down below 20 cents, but they recovered it nicely. They broke it out past that high 30s top, and eventually it got as high as 59 cents before the big tank. So that's just another reason to be more looking forward to their next pick, because ECRY was successful on day one. It was successful overall as a multi-day promotion. So the next pick that they put out, I'm going to be looking to do the exact same thing. Buy early, get out into the spike. And as it turns out, that opportunity comes a few months later when they do a surprise end-of-day announcement on TLPY. So we're going to start in really slow speed here on TLPY, just so I have a second to explain what's going on, because I was caught completely off guard by this promotion announcement. As you can see, I bought just under 770,000 shares of this, and I got in at about an 18.5 average. And now, as I started this video, the stock is already up near about 21, 22 cents. And this really was one of the first times we've seen stock tips do this, because in the past, they always had officially announced their picks over the weekend. All the action would be pre-market that next Monday morning, like we saw in that last example with ECRY. So when I got an email at 3:45 saying TLPY is our new pick, I was nowhere near ready. To be completely honest, I had already mentally checked out for the day. I was watching TV shows on one of my screens. But once I got that email, I immediately began to start buying. And my 18.5 average might seem a little bit high. It might seem like I chased a bit. And yeah, I mean, it is high compared to where it closed the previous day. But the fact is that I noticed that only about 1.5 million shares had traded before my buys. So I knew that there were still going to be buyers after me. I knew everybody else was just as blindsided by it as I was. It's not like I was late to the party. I still beat most people in on this play. So I was willing to chase the spike a little bit because there hadn't been a whole lot of volume traded yet. So now let's jump into real time. And TLPY, it looks like, is starting to top out around 22 because we've got more sellers starting to jump in now inside of the 22 mark, and they keep on fighting their way down. And while this does look like turning action, I am thinking back to the ECRY example, how I sold a lot of my shares on the first turn and that turned out to be too soon. I know StockTips usually has more than just one push, so I'm sitting back and I'm being patient here. I'm trying to relax and wait, and I'll let it have its little dip here, but I do anticipate that there will be a rebound. And after a little fighting in the 21s, we downtick, and it's a pretty big downtick. It goes right under 20. And now we're back into the 19s all of a sudden. But there is a pretty good stack of market makers at 19.6 on the bid. And I won't lie, there is a bit of uneasiness on my end holding through a dip like this with the kind of size that I have. Yes, I'm still green on the position, but it's not comfortable to have a stock going against you when you're in big. And the ARCA seller at 19 takes out the rest of the bids, and now we're down ticked and we're into the 18s again. And as I'm watching this, I was hoping that it would turn a little bit sooner. Yes, it does start to rebound and uptick again now. But I was hoping that it wouldn't be that large of a pullback off of that initial spike high. Because it's going to be a lot harder for this to thin up and rip up to new highs now. And there's only 11 minutes left in the day, and I know I do not want to hold full size overnight. And I'm watching 19.8 sell pretty heavily here. It's only showing 5,000 shares, but you can see there's just a steady stream of green prints going through on the time and sales tape, and this 19.8 seller will not lift. And finally, he's out of there. But a new one comes back in now. Now it's NITE at 19.8. And it looks like we're starting to get heavy again, and we might get even another leg down now. So now I'm really concerned to see how the bid responds. Where it bottomed out last time in the 18s, will that hold again? Or if that breaks under, then there's a chance we get an even more significant pullback, and I need to start thinking about what I'm going to do with my position. But we do get some market makers jumping in between 19.5 and 19.78 on the bid side. They absorb a lot of size, and we get the uptick. So luckily it does not turn into a bad situation for me where suddenly we're at new lows for the pullback and I feel like I might have to chase a panic to downsize a little bit. And now the bid is really strengthening. We've got a lot of market makers in there, and we're testing this 20-cent area trying to uptick and get through. And a big bidder comes in at 19.94 through CSTI. And we uptick and we're back through 20. And I hope that this uptick is a good sign and that we're going to start speeding up towards the upside again. But 25 gets pretty heavy. And we start seeing sellers coming in and competing for the best offer because they want to get out their shares. So I decide I'm going to downsize a little bit here into this perk up. Because again, time is running out on the day. I know that I do not want anywhere near full size overnight. I'm just too scared about what if there's a halt, what if they cancel the promotion, just a number of things that could happen that would negatively affect my position. So I take a few shares off, just to be safe. And my sell orders really aren't getting the best of fills, so I wind up chasing a little bit here. I have to chase the pull back into the 20-cent area. And so far, I've only knocked out about 40,000 of my shares. And now I'm starting to fill down here at 20, but that's because the bid is stacking up and because the stock is starting to turn and strengthen again. All of a sudden, we have all these bidders at 20 and at 20.01. And of course, that is where my sell orders fill. Because when the stock is getting strong, that is when it's easiest to sell. So I'm a little annoyed with the sells because I wound up chasing weakness. But I do get my size down to 600,000 shares, a little more reasonable, something I'm a little more comfortable with. And TLPY continues to grind its way back up. And they start putting big bids in there too to try to push it up. A 1 million share bid at 2079 from CSTI. They flashed it briefly, now it's gone. But you still have that very bullish price action you're used to seeing on the level 2 now, where all these market makers are stacking up. 7 market makers on the bid at 2099. And really at this point, I'm just trying to hold off on selling most of my TLPY as long as I can, because really the main factor right now is that there's only 6 minutes left in the day. Like I've said already a couple times, I do not want to be overnight size with this. So I'm just hoping that it has a nice rip into the close and I can get out most of my shares last minute. And now TLPY is through 22 and it's testing a new high of the day. So since 22.5 was where it topped out last time, I'm watching to see how it's going to respond here. And I throw in some sell orders because 22.5 rejects the first time. I'm really just sending through a combination of orders. Send through some market orders, send through some limit orders. Normally I'd say don't use market orders, but with a stock this liquid, I'm really not too concerned about getting an awful fill. I'm just trying to execute whatever shares I can. And a lot of my sells fill here at about 22. I'm down to just under 400,000 shares now, with under 5 minutes to go in the day. And just a little more on my overnighting decision right now. So like I said, there's a number of bad things that could happen overnight that would absolutely crush me. One being if StockTips put out an email saying we're no longer promoting TLPY. Something that, doesn't sound very likely, but I've seen it happen before with old promoters like Awesome Penny Stocks. Or there could be an SEC halt. Super unlikely because I've never halted one this quickly. But still, it's just something to be aware of. This is a promotion. I'm generally not comfortable holding overnight with an OTC stock anymore because the SEC was much more active in halting stocks in 2014. But if things go right, and if StockTips does send out more emails promoting TLPY, it's pretty likely it's going to be a nice gap up and a morning spike on Monday morning. So I do want to have some shares still, so I have a chance to capture some of that upside, but I don't want too many shares. I don't want to get absolutely crushed if things go badly, because I'm just in too big. So I have to decide what size I'm comfortable holding overnight. And right now I don't want to take off more shares because it's been a 4-minute straight pullback. I'm hoping the stock is going to reverse and have one more push into the close, and I can take off more into that. And here we go. The bid starts to stack up at 2084 again. The offer's taking a lot of hits, and finally it starts to thin up a little bit. We lose one of the 2085 sellers. Another bidder comes in at 2084. But it just can't quite get that uptick. So I put in some more sell orders here. I decide this is where I want out the rest. And I downsize myself to 200,000 shares because there's only a minute to go in the day. Unfortunately, pretty much right after my sell orders fill, the stock finally upticks. And this last minute of the day here, TLPY really thins up and gets ready to close up near the highs of the day. And I put another sell order up in the higher 21s, but cancel it. I'm still debating, do I want to hold 200,000 shares overnight or not? And I'm very wishy-washy on this. I've locked in 14,000 in profits so far on TLPY, and I don't want to jeopardize those profits. So right near the bell here, the last 10 seconds, I throw a couple more sell orders in just to see what's going to fill. And really, I only give myself about 10 seconds, which is not enough time. So the market closes, I only fill about 9,000 shares more, and I have about 192,000 shares overnight, it looks like. And now everything depends on whether or not StockTips continues the promotion or not. If they send out emails over the weekend, say TLPY is still a pick, I expect to be rewarded nicely. I think there'll be a big gap up and hopefully a morning spike that I can sell the rest of my shares into. But if they don't send out any emails or if they cancel a pick, I know I'm going to be waking up to a big gap down. And here is about 5 minutes before market open that next Monday morning. And it turned out that StockTips did continue with a promotion. They sent out emails saying TLPY is the pick. They sent out a little promo video. Basically everything confirming that they were going to stick with TLPY. And as a result, we're already gapping up into the 25s. Pre-market high, it looks like, was 25.8. But right before market open here, and we are watching this in a little bit of sped up time, the price does start to get knocked back a little bit. And while obviously I don't want to see the price coming down, I want to see morning strength out of this. It is still pre-market, it is still a large gap up. And in my mind, my risk is about the red-green level right now. Previous close was 21.9. So if the 22 area starts to look like it's going to break down after market open, that's when I'm just going to take the rest of my shares off and run for the hills. But now it looks like the mid-24s hold pretty well. And we start to uptick and we're back over 25 again, which I like to see. And there were times in the past where that little shakeout pre-market would have gotten me, and I would have sold some shares because of that. But I've learned that really, for myself at least, it's better to just sit on my hands and wait until regular market hours to do anything. And as the market opens, TLPY is looking very strong. It looks primed for a morning spike. And I'm watching the level 2 here to try to figure out when I should be selling some of my shares. I'm looking for the turns. We start off with a huge wall of buyers at 25.59. And it doesn't take long for us to uptick. Start testing the 26 area, which is now higher than we even were pre-market. And so I'm just watching this level 2, and as long as the level 2 looks good, I see no reason to sell. I do notice here that there's a lot of sellers between 26.38 and 26.5. But I need to see if they're going to be selling hidden size first. Just because there's a wall of sellers doesn't mean necessarily that I want out. I need to make sure they're actually selling meaningful size. And we do stall out here, and a couple more sellers start coming in. And now the offer is really starting to stack up. So in come my sell orders. I'm getting out when the stock is turning. And at first I'm only taking off about a quarter size, just because this is the first turn and I want to make sure that it's not a fake turn like the first turn on ECRY was. But as I continue to watch, it becomes more and more clear that that is a very heavy offer. The ask is taking a ton of hits, but those sellers just are not going away, and now there's also size on the offer too. So I throw in some more sell orders. I try to get a lot more aggressive and get out most of my size. I do want to hold a small piece just in case. But since technically this is day 2 now, I'm okay with missing the dead top if this does turn out to be a fake turn. I just want to downsize and lock in profits. And right now, unfortunately, a lot of my orders are stuck. I waited a little too long to get them in there. And I wind up just canceling the sell orders because they're not filling. And I don't want to wind up getting filled much, much lower. And already it looks like mid-25s is trying to support, so maybe that was just a fake turn. But then the bidders get chipped away. It does start to look a little more serious, like, yeah, we are going to get some pullback. And my plan right now is rather than chase the pull, I'm just going to wait for the next time it turns and starts to rebound, and I'm going to sell into that rebound. And 2502 has taken some hits. A lot of big red prints just went through at 2502 and it held. And so now we're starting to uptick again. And what I'm curious to see is, how does that 26.9 high hold? Is it going to bust through that, reach new highs, keep on spiking? Or are we going to put in that lower high, which I would be selling into if we do? And as we're upticking here, 25.6 all of a sudden stacks up on the offer. So I put in another sell order right as it's starting to turn there, because that does look like a lower high to me. And so I just want to keep on selling the pops. I don't mind holding on to a few shares as long as the trend stays intact on this thing. But it does make sense to keep on selling pops if the stock isn't proving to me that it can continue spiking. And now with how stacked up that offer is getting, I put in sell orders for the rest of my shares and hope that I can fill. I got myself down to 74,000 shares here. Now 71,800. But again, I just waited a little bit too long on some of these sell orders. And as 25 defends once again, I'm left with 50,000 shares. And now I'm starting to think of this as if it's in an intraday channel between the 25 area and the current high a day, 26.9. And I sped the action up a little bit here just so we wouldn't have to watch the consolidation for too long. But basically, I'm waiting to see which way is it going to break. So this perk here got us through 26, but held firm at 26.37. And so we just couldn't quite get to that high a day. And so now we're back into the dip phase of it. We pull back into the 25 bottom range of the channel and 25.25 supports. So this channel is holding steady. But as usual, I can only hold for so long during consolidation without getting bored out. So when this perk tops out under 26 and is putting in yet another lower high, I decide that's it for me. And I decide this is not the typical promo action I like. This is not spiking. This is not strong. So I sell the rest of my shares with the thought that I can always buy back later if the action changes. But I've locked in a total of over $28,000 on TLPY now between the 2 days I've traded it. That's about a 20% gain. So I'm more than happy, and I'm ready to move on to the next play. As it turns out, TLPY wound up being a complete disaster. Not long after my sells, it broke under that bottom part of the channel at 25 cents, and after a panic down to 22 and it bounced back up into the 25s, pretty much was non-stop fade for the rest of the day. And this is a big part of the reason why I do not trust promoters, even if they have a good reputation. I want to be out into the predictable part of the spike. If I had been holding TLPY saying, oh, I'm sure this will close at high as a day, I'm sure it will go really far, I would have been screwed. I probably would have taken off the rest of my shares for break even or a loss. And now let's take a look at the daily chart, and TLPY really wound up being the worst stock tips promotion since PGFY. Pretty much, it went straight down. Within a couple weeks of the promotion, it was down at 3 cents. And I heard a lot of people throughout this promotion saying stock tips will save it, stock tips will bring it back. Stock tips promotions don't crash until day 13. All kinds of random general stuff like that, and you cannot think like that when trading stock promotions. I am successful with this setup because I take the quick, easy profits time and time again, and then I move on to the next one. Sometimes, yes, I leave a lot of money on the table, but it protects me from disasters like TLPY. And unfortunately, now that TLPY was such a poor promotion, I'm going to have to be a little more careful going into Stock Tips' next one. I still will look to play it, but there may not be quite as much of a spike because people will be a little more wary of playing them after a failed promo. The next Stock Tips promotion was COLV, a stock that closed the previous Friday at 10 cents, and then the pick was announced over the weekend. This morning as pre-market opens, I see a MICA seller at 0.107, so I immediately throw in buy orders. I want to get in that close to the previous closing price, even though there have been no blocks yet. Since COLV was a weekend announcement, I expect it to be very similar to ECRY. I think it's going to have a big gap up, and then in the last 45 minutes of pre-market or so get knocked back and we'll have some significant blocks going through. So while COLV is within just a couple cents a share of its previous close, I'm thrilled to get in. I think that presents me with a very limited risk, and I think later when the blocks go through on this, it'll probably be at a very similar level, if not higher. You may notice that I'm using a different broker for this trade, and the reason I'm using Centerpoint instead of SpeedTrader is because at 8 a.m. SpeedTrader actually was restricting trading on COLV. It would not let you take a position using any of the routes. So I had to go to Centerpoint instead, and the routes I'm using to try to get in pre-market are Puma and ARCA. Puma has not been filling me though, so BNY ARCA, the route that takes me to actually the market maker ARCA, has been the entirety of my buys so far. This MICA seller is still sitting at 107. This is kind of a bizarre start. I'm still putting in some buy orders though, and I'm getting filled in the 12s. I guess it's my fault because I am putting orders in a couple cents above the best offer. Because right now I still can't believe it's this cheap. Finally, the MICA offer lifts. Now he's sitting at 13 cents instead. I have 185,000 shares. We speed time up a lot here because I stopped buying at 185,000 shares for a while. I had an 1189 average. I just wanted to wait and see when the blocks were going to start going through and at what price. So far, almost all of the volume has been on the offer for COLV. We've only traded 745,000 shares so far. And we are slowly upticking. The MICA offer is now up to 14.5. Here comes our first round of knockback. Low 14s got taken out, although there wasn't any truly special size there. So while we've been knocked back into the 13s, the mid 13s are holding at the moment. Less than an hour to go till market open, the majority of the volume is still going off on the offer, and still no big blocks at or below the best bid. There's still plenty of time, but I am noticing this and thinking this is very strange for stock tips. Less than 45 minutes to go until market open, and we're entering that window of time now where I would expect to start seeing some blocks. I'm wondering why it hasn't gapped up more than this so far. Here comes another round of knockback. We are seeing some hits on the bid, below the best bid. But the biggest of those hits was maybe 40,000 shares. I'm looking for those 100,000 share prints. You'll remember ECRY had something like 1 million share prints go through. So this is the knockback where I'm thinking, okay, maybe they put it in the 12-cent area. I'm still not adding because I still haven't seen that huge volume. Yes, 1.7 million shares have traded, but the vast majority of that has been on the offer. Probably most of it has been front runners trying to get in pre-market. I'm not the only person who knows that you can buy pre-market with ARCA. It seemed like Micah is constantly on the ask for COLV. Just constantly selling. 20 minutes to go until market open, still no blocks. Still haven't seen what I like to out of this. But it is still stock tips. It is still gapping up. So as we get closer to the open, I will start to put on more shares. I still think there could be a nice opening push on this. In fact, I start looking to add back right here in the low 13s. Because so far, that's as much as it's been able to dip. This could still open up in the 15-cent area, spike up to 20 or 25. I'm hoping they thin this out around open. I did put on a few ads there. I'm up to 215,000 shares. Now we're knocked back under 13. 215,000 shares at a 12-cent average is not big size for me. In fact, this is probably about a fifth of what I would be willing to play on this stock. So if we get knocked back here to the 12-cent area or even lower, I'm very okay putting on size if we start to see those blocks that I like to see. But overall, I'm very happy with my average. This is a no-brainer risk right now off of the previous closing price. There's no way this thing should get red on the day. So I'm really only risking about 2 cents a share on what I currently have. We're only about 10 minutes from market open now. I've seen the mid-12s catching COLV very well, so we're running out of time for this to dip and put in blocks. It might be possible that it just doesn't. So I start to buy some more. I put in another order on the ask at 12.7. I only filled a little bit. Now we're upticking again, up towards 13. I'm willing to add a little bit into this perk since we're running out of time before market open, but 10 minutes, it is still possible it gets knocked back one more time and they do sneak some blocks through. So I'm not going to go too aggressive here. I've only put on a few shares so far. That bid is still strengthening, still building up. I'm probably watching the clock closer than the level 2 at this point, though. Once market opens, that's when the retail buyers come in. That's when the people who don't know how to trade pre-market come in. That's when there should be a spike and when they typically thin it up. About 5 minutes to go till market open. I've added a little bit more. I have 270,000 shares from a 12.3 average now. As the minutes tick down until open, I continue to add. I don't think it's going to stack at this point. I don't think it's going to knock back. So I'm going to try to take some of the easier fills just before the open now. And then I'm going to look to sell it all into a morning spike. $318,000 shares now from $12.55. COLV is going to open near its pre-market highs. I throw in a couple more orders just above the best offer. Market opens and I have 378,000 shares from $12.78. The bid looks good and stacked up. We just have Micah sitting at 14 cents. Once we get through him, we're in good shape. Although right now, Micah is selling a lot on the offer. And the ARCA buyer that was sitting at 14 just gave way. So I'm immediately starting to sell here. We turned right out of the gate. There was no spike. The offer stacked up, 14 got real heavy, 13.99's thinned out on the bid. So I start downsizing. I know I need to get out here, at least some of my shares, because I don't know how this dip is going to hold. We're down into the low 13s. I'm out about half of my shares now. I'm not going to chase panic though, so I sit on the other half of the shares. I'm going to give this dip a chance to hold. It is still green on the day. This could just be the shakeout, and then we pop through 14 and get going like I expect. All the shares I sold were my cheap ones from pre-market. So I only have 200,000 left from 13.75, the ones I got towards the end of pre-market. We have perked up here. We are retesting the 14-cent area. In my opinion, this is a very important test. It needs to get through these highs. But Micah is sitting on the offer again. There we go, he just lifted. But he's sitting at 14, so we have to see if we can push through 14 and get to new highs of the day. If not, then this is just a double top. If this double tops, then I probably need to sell more, because it's not great odds of this continuing upwards. Big stacking action at $13.99 again. That 14 offer was selling a ton of size though, and a big seller comes in. CDEL offering 185,000 shares. Here we go, we downtick. Unfortunately, I didn't take any off into that. I'm thinking of this as in a channel right now between 13 and 14 cents. I'm hoping this just puts in a higher low and then we get through next time. But it looks so ugly that I start chasing. I throw in some market orders down near the low 13s because there was a big seller in there. This is nothing like the stock tips action I am used to seeing. I've never seen one struggle out of the gate this much. There were no big blocks pre-market. Everything about this pick has been weird. So I downsize. Looks like good thing I did downsize further because 13 is testing. We may be about to crack under into new lows. Down into the 12s now. Offer is still pretty stacked up. COLV just does not look good. However, for just snapping the 13-cent low, this is supporting okay in the high 12s. That bid is starting to stack back up. A lot of prints on the offer right now. An ARCA bidder above the best ask trying to push it up. Once again, it is Micah who was sitting there on the offer, but he finally gave way and moved up a little bit. I can't tell right now if this is where they're trading a bunch of shares between hands, if this is where they're putting in the big blocks. trying to shake people out and scare them out at the open, or if this is just a failing promotion. But I'm in a guessing game situation right now, and that's exactly what I want to stay away from when I'm trading these. Remember, the goal of this setup is buy around blocks, sell into the predictable spike, move on. COLV had no predictable spike. Stuffed right out of the gate. So now I'm in that guessing situation. Is StockTips going to hold it up or not? Now I'm okay guessing when I only have a quarter of the size that I did when I first started, but this still is not the ideal situation. The 12.8 area supports again on that dip though. I start buying back some of my shares in the 13-cent area, because I think now that this is supported twice, we might get a ramp back towards 14, and then we finally get going. The volume really has been incredible here for the first 15 minutes of the day. I just keep waiting for COLV to thin up and finally get running. I've added back to about half of what I originally had. Now a little bit over, as it looks like it's going to break through 13. We are back into the 13s now on COLV. I have 233,000 shares, again, nothing too crazy size-wise. I'm thinking about that 12.8 area as my risk. I just added a few more shares on because I saw 13.1 taking some hits and holding up on the bid. I think this might finally be ready. My average is 13.31, 293,000 shares. I have my risk. I'm really just risking half a cent a share. While COLV does try to perk there, 13.4, the offer sells very heavily. Suddenly we're back under 13, looking very ugly. That 12.8 low is being tested. So I put in sell orders for the rest of my shares. I'm just using market orders to try to get the quick fills because this is pretty liquid, so I figure that I won't get absolutely crushed on my fills. Since that 12.8 area is cracking, I just need to be out, no questions asked. I am not going to keep moving my risk level down. I'm not going to say now that I'm risking off a 10 cents green red. This is not a normal promotion. This is not how this should be starting. This is not my strategy. This isn't what I want to be playing, so I'm not going to keep on hoping and hoping and hoping. I'm just done. Later in the day, if there's an opportunity to rebuy, I can reevaluate. But for now, I just need to sell it all. At this point, I've filled most. Just 7,000 shares left. I'm flat with a small profit, although after commissions, it's probably a loss. It turns out my COLV trade actually was a small loss. I wound up losing a couple $1,000s on it because of the routing fees. I had to trade it at center point, and those fees, they did add up. But I knew that going in. I knew that that was a risk I was taking. Unfortunately, since the pick was a dud, my profits could not overcome the fees. Later in the day, I unfortunately put myself in a bad situation due to frustration. Because I was so bummed out that the StockTips pick hadn't spiked, and because I did fall a bit into the trap of saying, oh, it's StockTips 2 in a row couldn't possibly be duds, I bought during the midday consolidation, risking off the 11-cent low of day. As you can see, that didn't work out so well. It wound up cracking. I had played too big. I couldn't get out all of my shares in a timely fashion. I wound up losing about $11,000 more because of that impulsive afternoon trade. I decided to turn it into a guessing game, and I lost. But as far as the morning trade goes, where I was buying pre-market, I was trying to get in ahead of a spike, this situation was pretty much worst case scenario. There was zero spike out of the gate, but I was able to recognize that, and on that trade following my strategy, my losses were really just commissions. If I had traded it speed trader like normal, I would have probably been out with a small gain. So that is why I love this setup so much, the new promotion, because the liquidity and the volatility of these major promoters makes it possible in these worst case scenarios to see that something is wrong and to get out with very minimal damage. Now taking a look at the daily chart for COLV, you'll see that after a disastrous first couple of days where it dipped as low as 5 cents, they actually brought it back. They ripped it through the day one high of 14 cents, they got it as high as 17. As I record this, the promotion is still going on, and COLV, it's trading in the 12-cent area. It's too soon to say whether this is going to fizzle off or if it's going to build back up for another breakout. But if it doesn't break out again, if it doesn't get much higher, this is still another unimpressive stock tips promotion. So this is something you're going to have to look back on your own after viewing this DVD. You're going to have to pull up a daily chart of COLV and see where did it wind up. Hopefully we'll see that it got higher than 17 cents and was a very effective promo. But if it fizzles out, that's 2 duds in a row from stock tips. And we have to be very cautious with their promotions going forward until they show some signs of being the promoter they once were. Now let's take a look at one of the other promoters that I currently trade, Finest Penny Stocks. We talked a little bit about them earlier in the chapter in finding their websites. They are fairly new to the promotion scene, so I am still trying to figure out what they are capable of. They do have a little bit of a history for me to go off of though, and it will help me figure out how I want to try to attack their future plays. The first pick we saw from Finest Penny Stocks was GLRKF, a very low volume promotion, very often under 1 million shares traded per day, but it was a slow climber and it was promoted for about a month, maybe a little bit more. And there were some results. They did get it up from the 40s up into the 60s, so a 50% gain. A nice slow steady climb, and it was something that caught people's attention. But then after that, they really took it up a notch. They went on to MEDA, a much cheaper stock, but the volume was much improved. 40 million shares traded on day one, and still about 20 million shares traded per day the rest of the promotion. And it did go from a starting price of 4 cents up to a high of about 12 cents. And it was only those 3 up days to start with, and then it tanked pretty hard, had a rebound briefly, and then faded off and failed again. The volume still isn't quite on stock tips level, but it is again another multi-day promotion from them that was successful, and this one was far more volatile and had much higher percentage gains to offer. So it's my belief that after MEDA and GLRKF, people really have started to take notice of these guys and that there's going to be a lot more eyes on their next pick. So going into their next promotion, which turns out to be AMLH, I'm looking to buy early. I'm looking to treat it like I would treat stock tips and sell into the spike along the way, because I do believe there will be enough volume and liquidity and enough volatility to make this promoter worth playing. So following MEDA, AMLH was the next pick by the Finest Penny Stocks group, and it was announced over a weekend, either a Saturday or Sunday evening, nothing we could do with it at that time. But now Monday morning pre-market, we're starting to see a little bit of volume, so we're looking to play this one pre-market, just like previous examples. And the closing price on Friday was 9 cents, and pre-market we're already getting some prints up near 17 cents. Had a few prints to start the day at 20 cents. So this is an example of it's gapping up right now pretty large, but it's on pretty light volume. Only 40,000 shares have traded so far. So I'm waiting for the price to get knocked back a bit. And actually I put in a buy order here at 17 cents through market maker ASCM because I see ASCM sitting on the offer. And this is a little bit of impatience on my part, because I am chasing the gap up to a degree. There hasn't been any kind of significant volume yet. But I'm also testing ASCM at the same time. 50,000 shares is an $8,500 position. So it's not the end of the world if that fills. I have plenty of room to add as the stock fades back down. And you might see that I just filled 20,000 shares of AMLH, and that's because I threw in another order, a 20,000 share order through BMAS. I just wanted to test another market maker because that ASCM order was sitting there for a while. And BMAS, it turns out, filled a lot quicker. So BMAS is a market maker I definitely might keep on using as AMLH continues to drop back. And after that 50,000 show order sits there for a while and none of it really fills, I just cancel it because ASCM isn't really working for me for whatever reason. And we continue to get knocked back into the 14s. So now we're getting a lot closer to that 9-cent previous close price. And volume still isn't that significant. I'm still sitting back hoping to see some much larger blocks go through like we did on Stock Tips picks. But this is only the third promotion by these guys, and we haven't seen action like that in the past, so I'm not really sure if I'm going to get it or not. I'm still feeling these guys out to a degree. And I go ahead and I put in a buy order, a couple buy orders at 14 cents. I route to 3 different places. I route to MAXM, ASCM, and BMAS, all different market makers. It might give me a fill pre-market. ARCA I don't believe was active on this one, so I had to just sort of route around and see what would fill. And there were some pretty decent sized hits at 13.6. Unfortunately, I don't get any of those fills. And as my orders sit here at 14, I'm still not really filling anything. So far, I'm finding this to be much more frustrating than ECRY was, because I can't get the kind of size I want pre-market right now. And the 14 offer starts to get a little bit heavy again. Another seller comes in, and some of the bidders start dropping off in the 13s. So as it starts to look weak again here, this is where I'm thinking maybe I will fill some. Seen market maker PUMA pretty active on the offer. Unfortunately, Speed Trader does not have an option to route to that market maker. 40,000 shares of my orders fill at 14 cents, so now I'm up to 60,000 shares total. The other 2 are still sitting in there though, and I still haven't filled. It was BMAS that filled me that first 40,000 shares. So I threw in a couple more BMAS orders. But I'm still struggling. I'm still having trouble getting those shares. And for now, I'm stuck with just 60,000, which is far less than I want down at these levels where there is actually some significant volume going off. I had a 100,000 share hit there at 13.7, just above some of the hits at 13.6 earlier. So it's looking pretty likely that this 13.6 area is our base now. And I'm still waiting and being patient and hoping that there's going to be some more knockback, maybe one more round of pull back towards the 14-cent area where I can fill some more shares. There are still 4 market makers on the offer between 14.9 and 15. And another one just jumped in at 14.9. And we are getting pretty close to the market open now. Only about 11 minutes to go. And as I see the bid strengthening, I go ahead and I throw in a couple orders again above the best offer at 15.5. I'm just trying to get fills at this point. I route through ASCM and BMAS. I even try and order through LQPT, a route I really have no experience with in the past, but I'm just trying stuff. I just want to try to get some shares. We've got a nice flurry of prints going through here in the high 14s, and I'm still just not getting fills. A million shares has traded pre-market, but I've only been able to capture 60,000 of them. And my average price is about 15 cents. That's not terrible. But the problem is I just don't have the size I want. And all these orders I put in at 15.5 and 16, I basically just have to watch them sit there. I'm doing all I can, but I just can't get the fill. And part of the problem is the stock is getting stronger now, so I'm chasing strength. Trying to buy into strength on a promotion stock is no easy task, no matter where you're routing. So with 5 minutes to go till the open, again, I'm just sitting back hoping it gets weak one more time, just for a brief moment or two, and maybe I can add some shares there. And then once the market opens and retail orders start hitting from everybody who can't buy pre-market, I still think we'll get that spike back up toward 20, maybe higher. Only 4 minutes to go till open now. And it still looks like AMLH is strengthening, not getting ready to knock back. So I put in another round of buy orders up here. Up at 18 cents, still just hoping I can get some kind of a fill before I have to compete with all of retail. But my problem is that I am buying into strength right now. If I'd gotten a dip, it'd be a lot easier. I did fill a little bit more there. I got up to, it looks like 85,000 shares. And the 18 area is stacking up a little bit right now, with about a minute to go till market open. And we get knocked back into the 17s. Unfortunately, this dip that I've been waiting for, which is happening right now, I let it scare me instead of taking advantage and trying to add some. I say, what the heck, I'll wait till regular market hours. And now the market does open for real. And I throw in a few more orders at 18 cents here through BMAS and ASCM. So far, BMAS being the only market maker I've filled anything through. And once I see the bid start to strengthen, and it looks like, yeah, this is going to start spiking, it is going to uptick, I start chasing a bit, unfortunately. I throw in a couple 20-cent orders, and then I just hammer away at a few of my hotkeys. And as you can see, these orders are going through in the 23s. So I'm really chasing here during regular market hours. So this is a big mistake on my part. And it really comes out of a place of frustration because I did not get the kind of share size I wanted pre-market. So now I'm just going to throw in a bunch of orders and hope that I can fill and get some size. And again, these guys are pretty new. They're unproven. This isn't stock tips. This isn't somebody that I'm confident is going to give us a huge run. So that's why this is such a mistake in this spot. And it hasn't really dawned on me yet that I'm chasing and that this is not the best idea. AMLH does continue to look strong. The bid keeps on stacking up, it keeps on pushing higher. I start canceling my buy orders though, because now I start to realize, wait a minute, mid 23s look pretty thick on the offer. I don't want to fill a bunch dead top. But I don't start selling yet either, because chronologically, this was the next major promotion to come out after ECRY. So I was watching this and still kind of thinking back to ECRY, thinking back to stock tips. And I was comparing these guys to stock tips in my mind, even though they were still new, even though I still didn't really know what they were capable of. And that was also part of the thinking that led into me chasing, was I was hoping for a really nice big morning rip. So now that this is the first time it looks like AMLH is running into trouble and might be topping out, and the level 2 looks like it's turning, I'm not downsizing. I'm not selling my shares because I'm hoping that this is a fake turn and then it has that next leg up like a stock tips normally would on day one. I'm just giving these guys a little bit too much credit, even though they haven't proven themselves yet to me. And we've been fighting here at 23.4 for a while now. And now it's starting to look more and more like the sellers are winning. These bidders are getting chipped away, the ask is stacking up more. And yet no sell orders come in from me. So between my impulsive ads, chasing the spike, and now not taking any off right here, this really isn't a very safe trade by me. This isn't a very smart trade by me. Although I am still up well above my position average. And I'm still waiting for the first time AMLH supports itself here and ramps back up towards the highs. And then it's just back to thinking about whether or not that previous high holds, or if it puts in a lower high, and how I want to react to that. And the 22 bidders that we're holding for a little bit are getting chipped away. We're seeing some pink prints here in the 21s. 22.01 is really stacked up on the offer, so it does look like this is going to continue downticking. But at this point, I'm just waiting for pops. And 21.55 starts to stack up on the bid side here. And I actually put in a couple buy orders again here. I'm trying to buy into this dip because it is supporting. I filled 11,000 shares more, but so far, ads are still very difficult. I fill another 15,000 shares through my CSTI order, but my other orders continue to just sit there. 21.55 is supported very well at this point, though. I cancel the rest of my buys because at this point I figure it's just kind of too late, and we finally get the uptick. And now we're pushing back into the 22s. And like I said, I'm looking now to see how do we respond to that mid-23s area, that 24 area that's the current high a day. I'm hoping we break through and get the next leg up, but I'm ready to react in case we don't. In case things start to get kind of ugly and bearish. And the offer starts stacking up here and it looks like a lower high to me. So I start putting in sell orders. Downsize myself to 140,000 shares right away. Get another sell order in there, and manage to get myself down to just over 100,000 shares. So I am taking off some size here because it is that lower high. It's not showing me that strength that I want. But I'm not going to sell all of it yet because now we're in that channel mindset. 21.55 really supported last time. How's it going to react this time? Right now, offer is pretty stacked up. Looks like it's going to definitely chip its way back into the 21s. And now if this 2165 bidder goes away, which they just did, we're under that 2155 mark. Even though the chart shows support at about 20.5, those were prints below the best bid earlier. That 2155 was what held, and we're under there. So I don't like to see this. And I'm taking a little bit of a chance here by not chasing the weakness. I'm still keeping my sell into pops mentality. But I know now at this point, after the lower high and the lower low, this is probably one I want to be selling the rest of my shares into pretty soon. And as AMLH tests 21 here, we start to battle a little bit. A couple more bidders jump in. And it looks like maybe we're getting ready to turn and have our next little pop. A couple of the bidders get taken out though. And now it starts to look more and more like maybe this isn't a turn after all. Have some hits going through at 2101, but can't get rid of those market makers on the offer. And 21 stacks up one more time here. But same thing, we're getting some sizable hits on the offer at 2101, but these sellers just aren't going anywhere. And after that fake little turn, we downtick. And so now I start throwing some sell orders in. I start panicking out into the weakness. Because I don't like the fact that now we've got lower high, lower low, and a failed turn attempt, a little bounce attempt there. That opens the door to even more washout, even more panic. So I just want to get out. Right now I'm looking to get out half of my remaining shares. And I'm still hoping that the 20 area is going to hold. But the way sellers are stacking up, that doesn't look good. So I put in another sell order as well. I'm just looking to get out into the weakness here and be done. And so far, only about a third of my shares have filled. And we're under 20. And in the 19s, I get most of the rest of my executions. I'm just sitting on 19,000 shares now. And I just have this CSTI sell left open. And finally, the last of my order fills, and I am flat. But I'm not happy because I had to be reactive and I had to sell into weakness here, which is one of my least favorite things to do. Because I was scared, because I had ruined my average earlier with my dumb chases. And now it looks like 19.5 starts to support. And maybe AMLH comes back, maybe it doesn't, but I've made my trade on it for the morning. And even though I made $3,000, it's kind of disappointing for me. Yeah, it's still a 10% gain, but I know I traded it far from perfectly. I know I made a lot of mistakes on it. But since it is only the third promotion from these guys, it's something I can learn from. It's something I can build off of going forward. So as you can see here on the end of day chart, AMLH did have a little more drop from where I sold. It got down into the 17-cent area. So my sells, they weren't dead bottom, but I still did have to panic out into fade, and that was very discouraging to me. AMLH did have a decent ramp back the rest of the day, grinded back. It retested its 24-cent high a day at one point, around midday, and then closed just a couple cents off of its highs. So all in all, it held it together well. It was a pretty good day one. I just managed my position poorly. And now taking a look at the daily chart, how the promotion overall did. And it was another multi-week promotion. Days 2 and 3, it climbed to new highs, got up as high as 30 cents. And then after a couple weeks consolidation, it broke out past 30. And that breakout took it up to a high of 38.1. So it wasn't the strongest breakout, wasn't a huge squeeze. But still, it was multi-day success. And it makes me excited for their next one. Unfortunately, I don't have another example to show you right now. AMLH was promoted in January of 2015. As of early June 2015, they still haven't put out another pick, although they have sent out teaser emails saying there will be another one soon. It's very disappointing that it's been 5 months without a new promotion from these guys. I was really hoping that they would have promotions more frequently than this, and maybe in the future they will. But for now, it looks like we're going to settle for rare opportunities from them. I still will look to trade their next promotion. I still think they could possibly build off of their AMLH success. I will take the lessons I learned from AMLH and I will apply them to their next pick, regardless of when that may be. Let's conclude Chapter 5 by going over some of the key takeaways. First and foremost, while tracking promoters is a lot of work and there are a lot of steps to get that email set up to be on all of the good websites, it is worth the work. You never know when one of the major promoters will just randomly announce a pick intraday, and if you are set up to see that pick first, there is the opportunity for some tremendous gain there. Remember that what makes these promoters special, what makes them stand out, is the fact that they generate large volume. Because they generate that large volume, it is possible to take size, it is scalable, and that is where the opportunity is. You can get in and out with ease while playing significant size. In the event that a stock is announced over the weekend, and you are watching a gap up pre-market, it is best to enter around large block trades. Where those blocks are going off, where the insider's shares are exchanging hands, that is likely the base of the stock for the morning, and then you're going to get a nice morning spike once regular market hours open. That is the spike I look to sell into. To help time those sells, just remember that level 2 is extremely useful. Use that level 2 action. See when it's turning. Try to get those sell orders in as momentum is shifting before the stock gets weak. Pay yourself along the way conservatively, because you should never trust a promoter. The chart comes first. The price action comes first. Just because it's stock tips, just because it's finest penny stocks, just because it's whoever the big promoter of the day is, that doesn't mean it's a guaranteed success. A promoter's main goal is to take your money, not to make a stock go up. Finally, just remember to be patient when it comes to these plays. These major releases, they're not common anymore. All of the live trades you saw in this DVD, that was over a 7-month period. These opportunities do not come around often. Don't expect to be getting these major promotions every single week. Hopefully in the future we'll get back to there being more promoters that are worth playing and more opportunities per month, but right now that's not the reality. So just be patient waiting for these plays, but even more importantly, just be ready for them. Make sure you know what to do when they come around, because the opportunity for gain is just so tremendous if you know what you are doing and you feel prepared. Chapter 6 focuses on another strategy I've used pretty much since I first started trading: buying OTC multi-day breakouts. Earlier in the DVD, we went over the concept of basic support and resistance on charts, and really all that buying multi-day breakouts is buying a stock as it is breaking past a key resistance point on the daily chart. This doesn't necessarily have to be a stock breaking the new 52-week highs. It could just be breaking above a key resistance level that's lower, as long as there isn't any overhead resistance nearby. I don't want to be buying a key resistance break if a few percentage points later there's another major resistance level, something that could possibly stuff the move. So I do make sure there's plenty of room for the stock to spike. Back when I first started trading these, I really was looking mostly at just pump and dumps. But now it doesn't really matter. I treat all OTCs like they're pumps. Whether it's random momentum pushing it or a newsletter, I'm treating the chart pretty much the same way. The one key thing though is that there has to be good volume. That prerequisite still remains for this setup. There needs to be liquidity, it needs to be tradable. I don't care how great the chart looks, if there's no volume there, I'm not going to bother with it. And while some breakouts do have pretty large moves and really can run crazily, I've seen some go 100% or more, I usually don't make it that long. I'm usually holding for a smaller part of the move. I've never been very good at figuring out which breakout is going to be the one to run 100% or which breakout is going to go 10% and fizzle out. So generally I'm taking the quicker part of the move, holding for maybe a day or two tops, and then I'm done. One thing you might have seen me note on the last slide is that I like there to be at least one red day between the two highs when I'm buying a breakout. Basically meaning I feel like there needs to be some consolidation in there on the daily chart. So what do I mean by multi-day? What do I consider to be a multi-day breakout? Let's look at this COCP chart as an example. The bottom left chart here is the daily chart of COCP. You can see that we have pretty much a double top in the 112, 113 area. And as it breaks past that, that is where I see the multi-day breakout. It's had plenty of consolidation days in between, plenty of red candles. Now what I would not consider a breakout is the next day. Yes, the stock gaps up. Yes, it's above the previous day's high of 125, but I don't consider that to be a breakout again. I still think of the breakout level as being in that 113 area. Yes, the stock is reaching new highs, but I would not treat it the same way on that second day. To the right here is an intraday chart of COCP on that second day. And just to further the example, I've been in a lot of chat rooms where I've seen people talking about the stock, and let's say COCP here ramps up in the afternoon and breaks past this high of 147. Again, I'll see a lot of people say, oh, COCP, it's a breakout because it's reaching new highs on the chart. And just again, I want to emphasize that is not something I'd trade the same way. That's not something I consider a breakout. Yes, it's breaking the high of the day, so it's breaking out intraday, I guess you could say. But still, I don't lose sight of the big picture. I don't lose sight of where that 147 level really is compared to the major break level at 112. The risk reward really shifts the higher and higher the stock gets. Because now this breakout, as some people would call it, is happening 35 cents above the real breakout level. And eventually this breakout's going to fizzle out and OTCs can crash very hard. So you're opening the door to getting stuck in a big panic if you're buying into strength later and later and later into this run-up just because the stock is still reaching new highs. So don't lose sight of the daily chart. Don't lose sight of where the consolidation is and where the main break level is on the daily chart. So now let's look at some breakout charts for OTCs and just talk about them a little bit and where I see breakout levels and really how I would treat them. Starting with ECRY, this was a stock tips promotion. We talked about this earlier in the DVD. And ECRY, this first breakout here past the 38 or 39 cent area, this is one I probably wouldn't have bought because even though there was some red candles, there was some consolidation, it fell very hard off of its highs. It went from 38 down to about 18 cents or 17 cents. And then in 3 days came all the way back. Basically 3 straight green candles, no pullbacks. and it had to double to get back to that breakout level. So I would have been nervous buying that break past 38 or 39 because I would have worried that it came too much too soon. But as it turned out, that was a decent breakout. It did spike up to about 50, and then the next day it put in another red day, another red candle, before gearing back up and having this second breakout here now past the 50-cent area. Here's HEMP, and HEMP, the main breakout you can see here, is through this 10-cent area, just under, where it was a nice slow consolidation and build up back to that level. And then once it busted through 10, it really sped up and really got going. It more than doubled. It almost tripled. Went to 34 cents after breaking through that 10 area in 3 days. So this is an example of one that worked really well, and there were some huge gains possible. And it really was scalable too, because it was trading over 200 million shares per day during this breakout. MJNA, here's another example. And this one extends even a little further back. You look back on the daily chart and you see a couple spikes that topped out in the 25-cent area. And then in early 2014, a third spike, again topping out in the 25-cent area, before it finally grinds up and breaks through 25. And then you get a few straight green days. This got all the way up to high 40s before finally crashing and coming back down and fading. PGLO, here's another stock tips promotion and another beautiful breakout in the 45-cent area. PGLO, another example here where, yes, it broke out past 45 and it continued for 4 days before finally crashing. But every single one of those days where it reaches new highs, I don't consider it a new breakout. I'm not buying it again and again and again every time it reaches a new high, because it just gets further and further extended past that 45-cent area. And then when the wheels come off and it crashes hard. You can see quite a few breakouts on this PVCT chart. First breakout being in this 160 area. And then after putting in a red candle and consolidating for another couple of days, it broke out again past the 250 area. And that breakout was a little weaker. It still got all the way up to 3, and then pulled back and consolidated for another couple of weeks before finally breaking out a third time past that $3 area. But what all these breakouts have in common is they're reaching new highs, but also there's a decent amount of consolidation on the daily chart in between each breakout. We get that red candle in there that kind of resets the chart, forces it to consolidate a little bit. Here's TGRO. TGRO is another stock tips promotion. Same sort of thing. Puts in a high at about 65 cents maybe. And when it finally breaks out through 65, had a really nice squeeze up to almost $1.60. And these big squeezers like TGRO, these are the ones where I would never still be around on day 3 or day 4. I don't have that kind of patience. I can't hold like that. But I could possibly ride this from 60 up to 75 or 60 up to 85, something like that. And it doesn't sound like much, but percentage-wise, those are very meaningful gains. BIZM was a promotion from back in 2013. You can see the first breakout past the 330 area maybe, got as high as 450, and then it did pull back and was starting to consolidate and build back, and then it actually got halted at this point. So we never got to find out if it was going to break out again past 450. And finally, here's just an example where it's not reaching new all-time highs, Fannie Mae. In May of 2013, Fannie Mae got as high as 540 and then slowly built its way back after that. The main high you see here is in November, around that 350 mark. And after a few months of consolidation, it breaks past 350 and starts to spike back up. Now, it's not all-time highs, but there is no key resistance level between 350 and that 540 high from back the previous May. So that's just some general examples of what I'm looking for in the daily chart patterns. And right now it looks like the simplest thing in the world because I'm showing you some examples that worked out pretty well. And also you're seeing all this information in an instant. In reality, these breakouts take days to run. Some of the ones like TGRO spike for 4 or 5 days. Some of the other ones only have a day or two of spike after they break out. But you see all that information when you look back at these charts in an instant. And that's what makes trading so tough, is because you buy a breakout and you're not instantly a couple days later and up a lot of money. You have to sit through the grind. You have to sit through the pullbacks. You have to sit through all the consolidation. And that's the hardest part of this strategy, is because when you're sitting and waiting and letting it develop, that's when emotions kick in. That's when greed and fear and all that stuff kicks in and really influences your plan. So you have to go into these trades and you have to go in with conviction and know what your goals are, have a plan of what part of the move you want to try to capture, and then stick to that plan for better or for worse. So that is how breakouts look on the big picture, but now let's take a little bit more of a look at the part of the play that I'm usually involved with. Like I said, generally I'm out of these things pretty early. I don't make it past day 2 very often. When it comes to actually buying the stock and buying the breakout, I'm trying to buy into strength as the stock is breaking. I don't like buying into strength very often, but this is one exception that I will make because I think it is such a powerful move. Trying to fill into strength on an OTC is not easy, and a lot of times I won't get a full fill. So what I wind up having to do is wait for dips to try to fill the rest of my position. Sometimes these dips are going to dip back down below the breakout level. Let's say I'm buying a stock where the breakout level is at $1. There will be times where the stock will spike to maybe 105 and then pull back into the 90s. And that's scary to a lot of people. People think, oh my gosh, the stock is in trouble now because it didn't hold the breakout level. But what I've found in my few years of trading these is that it's actually pretty rare for the breakout level to hold perfectly. So that dip, it doesn't scare me out. It doesn't make me sell in most cases. Usually I'll see where that dip bottoms out, and then I'll adjust my risk later after some consolidation to get out if that level starts to break down. But before I even have that support level established, I'll be looking at earlier intraday support points on the chart and risking off of that. Those are the two areas I'll look at if I'm trying to figure out if a play is going wrong and if I need to get out. If things are going well, if the stock is closing strong, if I decide to swing it overnight, typically the next day I'm looking to get out if the stock is about to go green-red, or maybe if some key support level is snapping in the morning. What I want to see after swinging a position is a nice gap up the next morning, the stock staying green after a little bit of dipping, and then hopefully ripping and giving me a really nice morning spike. What I'm going to show you now are a few intraday charts that I saved from back in my first months of trading, back when I was first getting going and I was playing awesome penny stocks breakouts. AERN is the first one. And I had the little lines on the chart here. The breakout, it looks like, was just above 8.5 cents. And this is an example of one where it perked just above that breakout level. And then for 15 or 20 minutes, it faded. And it was back down in the mid to low 8s. And it really wasn't that big of a dip, but still, point is, it did not hold that breakout line perfectly like a lot of people expected that it would. I just included this one to show you that it doesn't always have to be perfect. And the next day, there was a nice gap up and there was a nice spike up towards 12. This basically was almost a 50% move in about half a day of market time. Another good one to look at on the intraday chart is POTG. Eventually, POTG made it much higher than this, but this was just the first breakout it had. Breakout was in the 28 cent area. That first day, it spiked up to 36 after breaking out, but then it had that really hard pullback into the close. It closed down around 29 or 30 cents. And that's what I'm talking about when I say these things don't happen in an instant, and you have to sit through moves like this if you want to try to be patient. If you're sitting in a position where you're in on a breakout and you're up nicely, are you really going to be able to hold through a dip like this? I know that for myself, it is very hard for me to, which is why I usually try to pay myself into spikes along the way, because I don't want to get shook out into the weakness like this. As it turned out, the next morning, POTG was fine, and it gapped up, had another nice spike, reached new highs up towards 38 cents. One last example, CRWV. This was by the promoter Pennypick, who also was affiliated with Awesome Penny Stocks. Just one more 5-minute chart here to show you an intraday example where it's breaking past the 7.8 cent area. In this case, it held the breakout pretty well. So I talk about how sometimes you don't always fill into strength. Well, I might try to fill into some of these dips as this first couple hours, it just kind of grinds and consolidates before speeding up into the coming days. So if I don't get my entire fill as I'm trying to buy into strength on a 7.8 break, yeah, these dips are a good option. But everything always looks easier in hindsight. Like I said, whether it's intraday, whether it's daily, you're seeing all this information in an instant. It looks very, very easy when you know what the ending is already. So let's dive into some live trade examples where you can see me trying to trade these things in real time where I don't know where they're going to wind up. The first example we're going to take a look at is AEMD, one of the more straightforward breakout examples you'll ever see. On this chart up here, you can see that back in October, AEMD had a sudden volume burst, probably press release related, and it spiked all the way up to 30.7 cents. And again, I really don't care too much what the story is. I might look just to know, but I know with OTCs, it's really just all hype, and I don't want to buy into the story. I don't want to get excited. I don't want to become a sucker for the company. So I really just play the charts and the price action. And so we have this 30.7 high, and then a month of consolidation where it had dipped back down into the 20s and even below, back to the teens. and then slowly been grinding its way back up towards that 30 mark ever since. And today, it had this little spike on a press release after 11 a.m. up to 29.7, and we had a perfect double top up there on the intraday chart. And now after some time of consolidating and basing near 28, we're building back up and we're getting ready to test that 29.7 high. So I'm looking to play this here. This is kind of a couple different plays happening at once. It's right now about 3 o'clock in the afternoon, so we're looking at an intraday high of day breakout if we do get this 29.7 break. And then also that 30.7 resistance is right overhead, and I think there's a really good chance that if we get through this 30-cent area, that probably triggers the daily chart breakout as well, and we have a really powerful mover heading in tomorrow and a really nice big picture time frame breakout. So right now I'm just letting it consolidate and I'm just waiting because I don't like buying in early on these. I don't like anticipating. And yeah, I could get in some right now and just risk it off that 28 level that's been holding all afternoon, but that's not really my style. I like to aim for higher odds plays. So I'm going to be patient and I'm going to let it perk up and get going here. And I do put in my first buy order here at 29.5 for 50,000 shares. I route it to Citadel because there is a 25,000 share Citadel seller. And so I'm hoping that matching it up will help me fill. In this case, it doesn't. I still only have 2,500 shares. But I'm going for 29.5 because there were a couple market makers there on the offer, and I figured that it would get spiking once that broke. And now we're testing the 29.7 level. And that is, of course, the high a day. So I go ahead and I put in another order here too. And you can see I route to a few different places. I just throw in 3 orders there for 50,000 shares, and they're all at 30 cents. And again, I'm buying because it's a high of day break here, but also because I'm anticipating that this down the road is going to lead to that 30.7 cent daily chart breakout. And these are the moves where into this strength, I mean, you can see there's a ton of sellers on the level 2 here between 29.9 and 30. So I'm not entirely convinced that this is going to break out into the strength. I wind up long 130,000 shares from a 29.88 average. And I'm still waiting to see if 30 cents is actually going to break out or not. And once I'm building into this long, once we got this high of day breakout past 29.7, I'm using that 28 level as my risk. Like I talked about earlier, I could have bought into the consolidation using 28 as my risk, but now that we've actually broken high of day, in my mind, that makes it much higher odds for this big picture move to work and less of chance that I'm going to actually hit that 28-cent stop and have to cut my loss. So I'm pretty happy with where I'm at right now. My size is reasonable. It's very under control. With 130,000 shares from 29.88, I'm risking basically 2 cents a share here from where I would have to cut my loss if it broke down and stopped working. And that's a $2,600 loss for me. So that's really not that large in my mind, and that's a loss I can live with. And because I keep my size under control here, I don't get panicked out when 30 cents is failing to break here the first time. And the offer downticks to 29.9. I'm not getting shaken out by these little dips. And I think that's a problem a lot of traders run into, is they just throw all their size in, go all in when they see a move they like, and then these little shakeouts get them out. And sometimes I fall into that too, but in this case, I did a good job, and I managed to keep myself comfortable. And so I could stay patient, sit back, and watch the setup, and just give it a chance to work. And since 30 is a nice round number and it just topped out perfectly there, I am also thinking about adding, or trying to add a little bit as we get a break past 30 later this afternoon, if the chart does happen to work. And so our bid starts to build back up a little bit. We've got a couple guys in at 29.9 now. We're back to that 29.99 offer and 30 offer. It's just pretty stacked up here. And like I said, I'm just kind of sitting on my hands here and waiting until that 30 cent level gets chewed through, or that 28 level breaks down. And here we go, we start to speed up, we start to break past 30, that ask gets eaten away, and we uptick. So now, even though we're through 30, I don't necessarily want to buy quite yet because that 30.7 resistance is still overhead, and I want to see how the stock reacts first. And we sped up the action here. I just want to zoom through this next minute or so, which is really about 15 minutes of real chart time. But we get into a grinding pattern here where even though it's not over 30.7 yet, it's just chopping around and going sideways. And this is where little things like level 2 can really work against you. Because like I said earlier, I use level 2 mostly in times of volatility. And if you try to use level 2 here, where it's just doing little dips, like it might go under 30, or there's just a little movement here or there, but it's basically in a consolidating pattern, you lose focus on the big move, and you get shaken out. So what I really was careful to do here was to focus on the big move, take a step back, maintain that 28 cents was my risk, and I was okay with the stock weakening or pulling back again. I didn't want to get shaken out, basically, of my position. I was willing to use the additional risk in order to stick to the bigger picture move. And here, after that period of time of consolidation, we start to perk up. We've just been about 15 minutes where we haven't been able to break past 30.4. And now you can see that the level 2 is building back up. The bid is very, very thick, protected inside of 30. The ask is very thin. And it looks like we're about to perk up and head towards new high of the days and probably test that 30.7 area, which is that 52-week breakout level that is also important. And here's 30.4 getting tested, and I decide just to put on a small piece in addition to my position. I add myself another 20,000 shares. I get up to 150,000 shares total. And now I am ready to just sit back and go for the ride and see if this breakout can really get moving. And as I'm watching here, it's still a little slow. And again, this is still even sped up and it looks slow, 3 times speed. So in the moment, it can be very, very hard to stay patient, and that's why you need to know your goals going into the trade and know exactly what you're looking for and what you expect. But this is a setup that I believe in. This is a setup that I think will work the majority of the time. So again, while it's slow here, while it's not really going anywhere, I'm okay with just sitting back and being patient. It's all about giving it some time to work. And that is one of the things that can be so hard about trying to learn from video lessons or trying to learn with hindsight is you look back on a chart after the fact and you see all the information in an instant and you say, oh, well, it was a breakout. Of course it ran. But in the moment, when you're only a couple tenths of a cent above the breakout level, it feels like something is wrong. Because you're not looking back at a few days of action anymore. You're in the moment and you're saying, well, this is a breakout setup. Why isn't it running? I know breakouts should run, but this isn't doing it. That's where our risk comes in. And that's where we say it's okay to be wrong. And it's okay if this does tank back down to 28 and we have to cut our loss. Because it is a setup that we believe will work the majority of the time. And again, we're kind of stuck in a sideways channel here, not a whole lot going on. And it's another instance where level 2 really isn't all that helpful. We're just trying to play the big picture and play the chart more. But now we get another uptick. We're at a new high of the day again, and we're starting to test that wall at 31. And there we go. We pushed through 31. And that thins out pretty quickly right there, because we basically go straight from 31 up to 32. There's no real sellers on the offer there. And we're starting to see the action speed up a little bit into the close now. And it only takes a couple of minutes, and now suddenly we're pushing through 32 as well. So now this breakout is starting to really work for us. And you see here, I throw in a small order for 25,000 of my shares through Citadel at 32.15, and another one at night at 32.15. I'm trying to downsize a little bit into this speed up push, because we are nearing the end of the day. And when it comes to being long an OTC overnight, I don't really want to be in that large, because in this year of trading, halts have been higher. So even though I don't necessarily expect one here, or have any reason to think that there's a risk of one, I want to be cautious. I want to downsize a little bit. So far though, I haven't really been able to fill. I've filled 1,200 of my shares. I was trying to sell 50,000. And the rest of my first order executes, so now I'm out my first 25,000 like I wanted. And I throw in another sell order at 32.4 through NITE. And there's still 10 minutes to go till the bell. I'm not incredibly in a rush to get on my position, so I'm not gonna smack the bid. I will try to be a little more greedy in my exit. I've already canceled my order because I got jumped in front of by the 32.35 seller. So I'm just going to make sure that before the bell I'm out my last 25,000 shares that I'm trying to sell, and then I can keep that remaining 2/3 over the weekend. And since this is a multi-day breakout setup, it is big picture something that I expect to continue running on Monday. Probably a gap up and spike in the morning is what I'm anticipating. So you may say, why sell at all if you're expecting a gap up and a spike? And again, it's just to lock in some profits, to take a little risk off the table. Just in case I'm wrong. And as we uptick, and as it starts pushing through 33, I decide I won't sell instead of 33. I'm going to try to sell outside instead. In fact, I go back and forth a couple of times here. I'm just trying to pick the best exit point as possible for this last 25,000 shares. At the end of the day, we're talking about a difference of probably $50, so I might be being a little bit too particular here. And we're running out of time in the day, so I put my sell order in at 32.8. There's a couple market makers at 32.8 or higher, so I figure I'm going to sell. And I go ahead there. I've filled most of my order. I'm down to my last 500 shares that have to fill. And I'm out of that order right before the bell. And now I'm ready for Monday morning with 2/3 of my position left, looking for a gap up and a spike to sell the rest into. So now fast forward to Monday morning, and AEMD, I was right, it's gapping up. It's already 36.5 by 36.6, the bid-ask spread. And I do want to watch the first 10 or 15 minutes or so of the open here in real time, because the open is a time that I consider to be more volatile. And it is a time where I will use level 2 a bit more heavily than I would otherwise. Before I was trying to trade the big picture and trade off of the chart, but now I want to try to be a little bit more precise and figure out when do I want to exit. This is a very large gap up already. We closed back at 32.7, and so we're already up over 4 cents a share from the previous close. So we could have a nice big squeeze at the open, and I'll be able to recognize that on the level 2 if it is happening. But I think that it's probably a little more likely that we get some push and then it pulls back and maybe gets closer to that green-red area. So my plan is I want to be selling into strength this morning, and then on a big enough dip, I want to rebuy those shares that I sell with a green-red risk, because I kind of think that that green-red level is the level that is very significant and the level that signifies whether or not the chart is still intact. So I'm just going to sit back and watch level 2 at the open here and see what I can tell and see if I can get a read on it and try to figure out where the best place to take off my shares is. And so here we go. The market is about to open. And immediately bidders start stacking up at 37 cents. And we get a fairly large bid in there at 37, a 208,000 share buyer. And like any other time I'm watching level 2, I'm trying to get a feel of how heavily the offer is selling. And we finally get our uptick there. And now it's just a matter of watching the spiking action and trying to see if I can pick a top. We have 6 market makers that are 37 cents or higher right now on the bid side. The ask is looking pretty thin. So I'm hopeful that this is really going to spike. And as I watch it here at the 37.4 area, suddenly momentum starts to shift. We see a lot of red prints coming in on the bid. So I sell half my shares immediately, because now I think that there's a chance we start to pull back. I keep the other half just in case. If 37 supports, it's going to uptick very quickly on air. So that's why I keep a piece. But it starts to look like 37 is going to crack, so I put in a sell order here at 37 for the remainder of my shares. And I'm hoping to get executed up here and then rebuy into this dip whenever it starts to bottom, based off of what I'm seeing on the level 2. So my order is sitting in there right now at 37, and I'm not filling. And that offer is stacking up. We got a few market makers at 37.02, so they're really pressing on it here, trying to sell it down. And despite sitting here for a minute now, I'm still not getting that fill. And in comes an ARCA seller at 37, showing big size. And when ARCA locks up the bid and ask like this, where they put their sell at the same price that the bid is or below the price that the bid is, it's very, very tough to get an execution. And we've only got one market maker left at 37 on the bid side. I still could fill into them. It's possible. But instead it down ticks and my order is left in the dust. But I'm not going to chase it down here. Because yes, it just cracked 37. That's not great. But I did lock in some of my profits already. And I don't want to chase weakness. We just saw how difficult filling into that was at 37 before it even got super weak. So if I couldn't fill there, I probably won't fill here until it's finally getting ready to turn. So I don't want to fill dead bottom as it gets ready to bounce. And this is still well above that green-red level. So I'm just going to let it dip, and I possibly will add some shares back if it does dip enough. Or if I do feel very certain that it's getting ready to reverse. But right now I'm just watching the action and watching the sellers come in. And it's opposite of what we were seeing at the open now. Now we have 7 market makers at 37 cents or lower trying to sell. And the bid, I guess there's still 5 that are 36 or higher. But it definitely seems like the scale is tipping a bit in favor of the sellers. And we're seeing some prints below the best bid at 36. There's an ARCA seller at 36.5 showing 200,000 shares. And we're still slowly down ticking. Now, the one thing that I'm thinking through all this is we have been selling here for the past 5 minutes about. It's been about 5 minutes AEMD has been weak. And yet, we've only really faded a penny and a half off of its high a day. That 38 print you see on the chart was kind of a phony print. I'm considering 37.4 to be the true high a day right now. So I do find it interesting that despite all this selling, it's really not going anywhere all that fast. And big ARCA seller comes in at 36, and it looks like we're finally going to press it under 36 cents. And once it's under 36, that offer really stacks up. A quick 6 market makers, 36 or lower. So for a second here, it looks like it could get really ugly. Start to speed up in its fade a bit. And there is still some size showing on the offer there. But then very quickly, that big seller gets taken out at 36. Another seller at 36 gets taken out. This turns very, very fast. So fast that I don't even really have a chance to react. A night bidder jumps up. That's me, actually, at $35.99. I'm trying to see if I can get a hit on the bid side. I also throw a couple orders in at 36 trying to fill. But it just turns way too fast and I miss the fill. So I just cancel them all really quick. I'm not going to chase the rebound. But now that it's supported and it's turned around, I'm thinking it's going to spike right back up towards that 37.4 high and possibly break through and really start rushing towards 40. And now maybe we get that big morning spike that I was looking for. And it does get up to this 37.4 area. In fact, it breaks through a little bit. We get a print at 37.5. But the 37.5 area stays heavy. Some more sellers start coming in, and ARCA seller comes in again. And so it pulls back. But now that's a second test at high a day, and now I'm thinking about this as being in a channel between 37.5 and 35.7. So a dip with a higher low is a possible buy in anticipation of it ripping through that 37 high and really getting going after the higher low. And I could use that 35.7 area as my risk instead of green-red like I was using before. So it dips back under 37, but it starts to reverse again here. And I throw some orders in on the ask. I'm trying to fill up to 37 cents in anticipation of a break through that 37.5 level. I barely fill again though. I threw in some decent size on the ask there, but I only filled 23,000 shares. And it ticks right back up and starts testing the 37.5 area again. And so I'm watching this and I'm waiting, and I want that break to happen. I want it to fly through 37.5 and really get going. But it stays heavy. The sellers come in at 37.41 again. And so at this point, I just say, okay, I'm done. Because now this is the third time that it's failed at a level. And I start to think, okay, well, since it's failed 3 times now, maybe we get more significance of a pullback, and I don't want to hold through a dip like that. I can always rebuy lower. So I just threw in a few sell orders at 36.7 through different routes. Slowly but surely I fill. And now between the gains I locked in on Friday and my morning gains, I've probably made about $8,500 on this breakout setup. My plan was if AEMD broke up through 37.5 later that morning, I would buy it. And as you can see at the end of day daily chart, we did get that breakout past 37.5. Unfortunately for me, I couldn't get a fill. So that's one of the risks I took when I decided to sell my entire position into the 37.5 push, because OTCs aren't always the easiest to rebuy, and especially if you're trying to buy it into strength. So it broke past that 37.5 and never really gave me a significant pullback, so I wound up on the sidelines having to watch the move because I don't chase spikes when I'm trying to buy. And in this case, I missed out on 10 cents a share of upside as a result, which was very disappointing. But that was with hindsight aiding me. You don't know in the moment during that consolidation period if it's going to be that stock that breaks out and has this 10-cent run, or if it's going to be the stock that breaks down and eventually winds up red on the day. So I traded it conservatively. I locked in over 20% in profits. It was really overall a very successful trade for me, even though in hindsight I messed it up and I left profits on the table. The next example I want to take a look at is NVIV. Upper left here, the daily chart on NVIV, you can see there's a pretty clear resistance level at 160. And pre-market, we are gapping up through 160. I don't have prints on the intraday chart, unfortunately, for you to see. But if you look at the level 2 box, you can see that we are well above that 160 mark. And I actually do snag some shares pre-market in anticipation here because I'm thinking, okay, it's going to gap up because of the news. It's going to be above that breakout level that I've been watching. And the next resistance you can see if you look back on the daily chart is not until over $2. So I don't really think that that's going to come into play for a while. And hey, if I run into resistance over $2, I'm thrilled because I just made over 30% on my trade. So I do take my small starter pre-market here, just because it is still a few minutes till market opens. It's really more a fear of missing out than anything. I don't want to see the stock open up at 170 and spike to 180 and suddenly the breakout's come and gone and I've missed it. So I do have a few shares just in case, and I do still have an open buy order down at 160, which is right at the breakout level. But I am hoping that with this big gap up, I mean, its previous close was 147, so it's gapped up well over 10% now. And I'm hoping that with this big gap up, there will be a little bit of morning pullback towards that previous close level, and I can build into my position there. And here we go, the market opens. And so far, I'm just patiently sitting on my hands, waiting to see which way NVIV is going to go. And 165 starts to thin up, so it looks to me like it's going to spike. So I put in some buy orders. I put in one at 166 and a couple at 170. I'm going to chase the spike a little bit here because it looks like we're going to have a strong open and this thing could get running. And we are above that breakout level now. So I get myself up to 30,000 shares now from a 167.8 average. Still not massive size for me or anything like that. But it is a little bit higher above the breakout level than I like to buy. I'm basically 8 cents a share above that 160 mark. So I chased 5% here. And it looked like it was going to start ripping when I was chasing there, but then 170 stuffed it, and now we're starting to pull back a little bit. So I have put myself in a little bit worse of a risk-reward situation here because I felt like I had to take some shares just in case. And sometimes it really is better just to miss. But in this case, I am still comfortable. We are still holding the low a day at 164. I add some more shares there. I get up to 40,000 shares even. And my average is right about the same. I know I've got 164 support. I know 160 is the multi-day level that matters. And then we're still well above the stock being red on the day. So long as this is consolidating, as long as this is in its channel here, I'm feeling pretty comfortable. And so far, the NVIV breakout is really just kind of choppy. Perk a few cents to a new high on the day, pull back 5 cents a share to 168. But the trend is holding. And at this point, I am thinking that about low a day is my risk level. As the chart develops, I continue to update my plan. If low of day breaks, then every single person who bought this is underwater. They're down on their position. There'll be people looking to sell. There would be panic. And that would not be something I would want to hold through. But right here, I am comfortable. I know my risk. Basically, I'll be selling my shares for down a few cents a share if this consolidation starts to break down. Or if NVIV holds up and starts to perk, I'll be able to sell some into a spike. And there is a little dip right there, a little bit of a shakeout. But it doesn't crack that low a day. And after the low holds, NVIV starts to perk up a bit here. That basically is now a double bottom in the 164 area. And it gives me even more confidence in it as a support. And right here, NVIV challenges high of day, quickly breaks through, and then we start to see a little bit more of a spike. We're out of the channel now, we're breaking towards the upside, and this is heading in my favor. And pretty quickly we're up to 180. $180 rejects the first time, and we get a bit of pull here. So now I'm looking to see where we bottom out, and I'm looking for NVIV to set up a new support level for me to play off of. The first dip holds just above 175. And dips right back down to that 176 area, but it holds again so far. Now, after only 10 minutes of consolidation like this or so, I'm not necessarily freaking out if 176 cracks. I'm not looking to panic out and sell because we did just break above 173. So I'm probably thinking more like the 173 to 170 area is what I want to use as support. But the longer NVIV consolidates and holds 176, the more and more key that number becomes in my mind. And we start to uptick after a second defense of 176. And now we start to retest that 180 high of day area. A lot of prints are going through at 179 right now. And it does stall out again for a couple of minutes here. But that offer finally starts to thin up just a little bit. A couple pretty big prints go through at 179, 50,000 shares and 10,000 shares. And we get the uptick, start testing 180, push through, and we're at new highs of the day again. And now we start getting to the point where my profit finger usually starts to get a little bit itchy. I saw the big wall at 185 on level 2, so I immediately sold 10,000 shares, and I put in another sell order for another 10,000. I wanted to be out half of my shares here into the spike. The other half of my order didn't execute though. I had it at 183, didn't fill. So I move it down a little bit now to 181. And we fill it there on the bid. And now I'm down to 20,000 shares. And I've locked in about $2,900 so far, and I can ride the rest. And you might wonder why I was selling up here, because it does kind of seem random. And really, like I said, I just kind of get an itchy profit finger as we go. I like to lock in gains. This breakout so far has run almost 20%. And I just like to make sure I lock some in along the way into spikes. So that 185 area, it seemed like it was acting as resistance to me. So I decided to take advantage, take off, in anticipation that around midday we'd have some consolidation. You might notice that I've sped action up here, and that's because that's exactly what happens. We do wind up consolidating for a while, so I'm not going to bore you through watching a bunch of consolidation at anywhere near real-time speed. Right now, the main support area in my mind is that 176 level, because now it has held for quite a while. It's been over an hour since that level was set. And I'm still watching the 185 area to see if we can break out past that or not. So once again, it comes back to channels. Right now, I'm thinking of us as being in a channel between 176 and 185. And we start to crack now. And we test that 176 area again, and it holds the first time and bounces off of it. So far that area that I thought would be support, it is working. Since it did hold just again, that reinforces in my mind that it is a support level. And I start thinking of it as being more and more significant. But here we go, we crack under. And I don't sell. You'll notice that I didn't throw any orders into the weakness there as it was cracking. I just let it go. Part of that is stubbornness. Sometimes I fall into a bit of a habit where that first support level that I'm watching cracks, and instead of reacting or taking off, I say, oh, well, I'll just risk down to the next one. In my mind, I start thinking about that 170 area again, and the 164 low of day again. And it's a slippery slope because it's very easy to talk yourself into saying, oh, I'll just let it go one more support level. I'll just let it go one more support level. And before you know it, you're dealing with a really ugly trade on your hands. Now, in this case, the 170 area did hold. It did briefly bounce for a little bit. And now it's just kind of churning down here in the low 170s, and I have to make a decision of what to do with it. Since it is still holding above the breakout level and since it is still above the low a day, I'm still okay giving this a little more time to work. And for a while here, we just stall between 172 and 173. And I'm just waiting, hoping to see any signs of life. I want this to perk back up above 175 and give me some kind of ramp to show me that maybe this will close strong and have a shot at a gap up tomorrow. But once it starts to crack under 170 again, I decide it's time to bail. So I throw in sell orders for the rest of my position, and I filled about half there. So now I'm down to 9,200 shares. And it briefly perks back up over 170, so I hold on to the last 9,200 thinking maybe we will save and get perked back up again. But the 170 bid drops off. And so I decide I'm just done. I'm not going to wait for this to panic on me. So I put in a sell order at 167 for my last 9,200 shares. Sit back, hope it's going to fill. A little piece goes off there. But I can't get more than that little piece executed, so I put in a limit order down at 162, well below the best bid, where I know I'm going to get filled. And luckily the rest of it gets filled in the mid 160s, and I am now completely out with just under a $3,000 profit. As it turned out, those last sells for about break even were pretty good, because we did have a panic down to 154 towards the end of the day, and that's a panic that definitely would have scared me out. So even if I had tried to hold steady and say I'm going to play off of the low of the day at 164, when that number snapped, I would have been done. And instead of taking off a break even, I would have been taking off for a loss. I probably would have gotten myself caught in that panic, and I probably would have been one of the guys filling in the 150s. NVIV did bounce into the end of the day, and eventually it did continue higher, but I played the part of the move that I was comfortable with, and although it wasn't ideal, I was still able to walk away with a profit. Let's take a look at one last example where I'm buying right at the breakout. And this is on Fannie Mae, a stock that I have had quite a bit of success with throughout my trading career, so I'm really glad I got an opportunity to include a trade example with it. Fannie Mae, the multi-day breakout level here is 260. Pay no attention to this far right daily candle because it's kind of messed up. There was a goofy print. And right as Fannie Mae starts breaking above 260 here, a little after 2 o'clock, I throw in some buy orders. I threw in 50,000 shares worth of buys at 261. And I routed to 2 different market makers, and so far only 15,000 shares have filled. Only about a third of what I'm going for. But I'm not chasing this spike. I'm not freaking out saying, oh no, I'm going to miss it. I'm waiting for a dip. I anticipate that it's going to be a little bit of a choppy start to the breakout. So I'm not saying get in at any cost. I want to get in as close to 260 as possible. We briefly topped out there at 264 and started to pull back a little. But right now 262 is holding pretty steady. I'm not the only person who recognizes this as a breakout. So there are plenty of buyers in line ready to buy. And Fannie Mae starts to chip under 262 here. And I'm pretty happy because I think I'm about to get my fill. And briefly we have the best bid being at 261 where my orders are sitting, but no prints go off there. So that doesn't do me any good. So now that that first dip has come and gone and I didn't get any more fills, I do move my orders up a little bit. I put a small buy at 263 there to get me up to 25,000 shares, but so far it hasn't filled. But still, I'm not rushing, I'm not panicking, I'm not chasing. And finally, I fill and I'm up to 25,000 shares, half of what I originally wanted. I put in another 25,000 shares at 262 on the best bid, hoping that I can get the fill there as well and get up to my full position size. I canceled the order though because it wasn't filling. And I'm just sitting back watching right now and just trying to figure out how I want to time it and where I want to put the order. I just know I want to get to 50,000 shares in this account. And we get the down tick, so now I'm starting to think maybe we retest 260 or even go under. But after holding for a minute, I say, you know what? It's not worth it trying to get 1 or 2 pennies better. So I go ahead, I put my order in at 262 and I filled. So I'm up to 50,000 shares now. It turns out I could have been a little more patient. I probably would have gotten my fill at 260 or 261. We do dip a little bit more here. This is an example where the breakout is not holding perfectly. And some people are scared right now. Some people are saying, oh no, it cracked under 260. But you know what? 260 reclaims. And it just kind of chops around at first here. Another great example of a breakout not instantly working. I know I have to be prepared for slow starts sometimes, and I have a risk in mind. I'm looking at that 256 area where the previous dip from around 2 o'clock held. I only have to risk 6 cents a share for my average. And because I know my risk, I'm okay with sitting through some consolidation. I'm okay with the fact that this breakout hasn't really gotten going yet. And just remember, as slow as this looks now, you're watching it in sped up action. It's even slower in real time. And the lesson here isn't be patient no matter what. The lesson is be patient as long as your risk level holds. Don't cross the line from patience into stubbornness. And now Fannie Mae, it's starting to work a little bit. We retested the 265 high, it held again, which isn't too surprising. Usually it doesn't break through on the first try. And now that we've ramped up and retested that high, I'm probably moving my risk up in my mind. Instead of using that 256 area, I'm going to use 258 now. That was the pullback low after the 260 breakout. So I will adjust my risk as I go. We briefly retested 165 there, and then we break through. And now Fannie Mae is up to new highs. And with less than an hour to go in the day, I'm thinking as long as Fannie Mae holds trend and doesn't break under any key supports, I'm going to be gapping this. I'm going to be holding it over the weekend. So far, not a very strong break past 265. Finally, we get an uptick after quite a while holding at 266. But still not really going all that fast, just grinding a penny at a time. But I am up a few cents a share now. I am building a little bit of a cushion on my position. At this point in the pattern, I am still looking at that 258 area though. These little pullbacks along the way, I don't consider them significant enough to move my risk up. And again, another pullback here. This one a little more serious than the past couple. Retesting that 265 area that it broke past. But so far, 265 doing a good job of holding. And yeah, I do have an eye on level 2 here, but this is an example where I'm not really weighing level 2 all that heavily. This isn't a time of volatility. This is a time when Fannie Mae is grinding a penny at a time. So I'm not going to let how stacked up Fannie Mae looks on either the bid or the ask affect my decision making. And now with 10 minutes to go till close, we break past 268 and we start to speed up a little bit. We get the 270 test, break through pretty quickly, and we're getting some nice ramp into the close now. Fannie Mae tests the 275 area into the close, 275 holds, and we head into the next day with a nice cushion and a really good looking breakout chart. So the weekend's come and gone, and now it's the next morning, and we are gapping up. A few minutes to go till market open. Previous close was 275, and we're looking to open around 282 right now. And I'm really happy with this gap up. So far about 7 cents above the green red level. And that is where I'm risking in this situation, because if the stock opens up after this large gap up and then dips a bit, I'm not going to be selling into random weakness. I'm going to be selling if green red snaps. That is the move that would scare me out. Because once the stock is red, momentum is shifted, and then there's a chance for a much larger collapse. As usual, I will be watching level 2 a lot closer here at the open. That is what I'll be basing a lot of my decisions off of, aside from that red-green mark. That is because, again, the morning for OTCs tends to be a lot more volatile, and I like level 2 in times of volatility. With under 30 seconds to go till open here, we have an ARCA bid pushing Fannie Mae up even further. So we're going to be opening even higher than 282. And now we're at market open. And we're looking to see if Fannie Mae is going to give us that nice morning spike. Right now, pretty big battle going on at 284. We got a bidder at 284 and a seller at 284. So I'm waiting to see which side gives first. And in that case, it's the bid that drops off. So yes, that makes it possible that this starts dipping now. But I'm not going to short sell. I'm not going to sell my position because it's not up all that much from the breakout level still. And it is still well above red-green. So I want to wait and see how it holds. And it held great. And this ARCA bidder comes in at 285. Jumps up now to 286. And we start the process of a morning spike here. And now it really is just a matter of watching level 2 and picking when that momentum is shifting. And we continue spiking on up here. We're getting well into the 290s now. And I'm wondering to myself if $3 is going to be resistance or not. The round number of 3. Now we really are battling quite a bit in the high 2s. Got one of those battles again where the bidder and the seller are both at the same price. But the seller is the one who winds up dropping off, and we get that uptick and start hitting 297. Now, watching 297 here, you'll notice that none of the market makers on the offer are really showing much size, but there's a lot of size going through on the time and sales tape hitting 297. So there's definitely someone selling hidden size here. And between the fact that it just did this at 296, I'm still wondering how the $3 round number resistance level will act. I decide to sell half of my shares here because I feel like momentum could be turning, and I just want to lock in along the way into the spike to be safe. It turns out the sell was a little bit early because we do uptick and start testing 298. But I still have half my shares, and I'm still just waiting on it to see where I should sell the rest. And since this was such a big gap up, since this was such a strong open, with this last half of my shares, I am thinking that I am going to let the stock turn once. I am going to let it get weak and pull back some. And then I'm going to see how it reacts after that. I am willing to hold through a dip at this point because I have locked in half of my gains. We get a few prints at 3 to go through. So here's our $3 test on Fannie Mae. And we're about to get the answer to my question on how is it going to react to the round number. And at the moment, it looks like the sellers at 3 are winning because that bid is getting chipped away. And there's a downtick. Really the first downtick we've seen in quite a while. So like I said, I am willing to hold on to my last half here, give it a little more time, hold through the first pullback. And if this dips enough, I may even consider adding some shares back on. But 297 holds pretty well so far on this dip. See the bid starting to stack back up again a little bit. Now the offer starts thinning up as well. More and more bidders start coming in. And it looks like we're about to retest $3. So it turns out my judgment to hold half of my shares was correct because that first turn was a fake. And now we're through $3 and we're still going. Now it really is just back to watching level 2 and trying to see when the next time the stock is turning is. And then, depending on how high that is, I can decide how many more of my shares I want to take off. So playing these morning spikes for me really is pretty similar to how I would treat playing a new promotion release, because I based most of my decisions off of the level 2. And Fannie Mae is still pushing very nicely through 3 here. So far, it still looks like those buyers are in control. 308 thinning out on the offer. An ARCA bidder comes up to test the best offer. See some prints going through above the best offer at 309. Get our first print at 310 there, and a pretty quick uptick right after. And look at how much the offer just thinned up. For a second there we could see all the way to 315. So very few market makers on the sell side all of a sudden. But now it starts to stack up again. 311 brings in some more sellers. So I put in a sell order for the rest of my shares. I kind of worry here that momentum might be getting ready to turn again. I execute the rest and I am flat. I'm out for just over $20,000 in gains, which is a 16% profit in under half a day. So here's the end of day chart on Fannie Mae. And it did wind up going much, much higher than where my sells were at. Here in the morning, you can see where the spike topped out. It did spike out right around that 315 area, so my last sell in the morning was good. And then we had a pretty significant pullback, back under $3. And I had considered rebuying Fannie Mae throughout the day. A couple places I might have thought about buying were into that pullback, or later in the day when it broke past its morning high of 312, I think is what the high was. But ultimately, I just wound up sitting on my hands and watching Fannie Mae run without me. And that's okay. You know what? You're not always going to be perfect. You're not always going to catch dead tops and dead bottoms. But the goal is to catch the meat of the move, and that is what I felt like I did. So 16%, that's nothing to laugh about. That's a great gain for an account. And since Fannie Mae was so liquid and so volatile, I was able to play it with size. And that's why I make so much more on Fannie Mae than I do on some other breakouts that I play, because it's scalable due to the volume. Let's look at a couple examples now, though, where you don't necessarily buy right as the stock breaks out. If you miss that first breakout, that doesn't mean the play is necessarily over. Or even if you hit the play and sell too soon, sometimes there are opportunities to rebuy. So let's start here by looking at ECIG. And right now I have the ECIG action slowed down quite a bit, just so I have a second here to explain to you what's going on. Look up at the upper left at the daily chart on ECIG, and you'll see that the big breakout was past 15 cents. And if you look in the upper right here, you'll see that I've already made $4,200 on ECIG, and that was from earlier playing that breakout, buying on the 15 break and selling along the way into the spike and during this long period of consolidation midday. But I got out too soon. I was out because I really just kind of got impatient. I didn't like holding through all that grinding action when the stock wasn't really moving. And so later in the day, when ECIG began ramping up again, I felt like I wanted back in. And right now you'll see that I do currently have 300,000 shares, and that's because I did start this video slightly late. I did not get my buy on film. But my average is 16.96. So I got in basically at 17 cents, and it happened just a couple of minutes ago on this hard dip. After we started speeding up and spiked all the way up to 17.6, I bought the dip towards the end of the day because this is still very early in the breakout pattern. We are only a little bit above that 15-cent level, and a little bit earlier in the afternoon, we broke past that intraday high that it set after the morning spike. We've seen a lot of examples on breakouts where they can be multi-day runners. They can keep going. And in a lot of cases, you get that gap up and that morning spike the next day. So that's why I bought right now. That's why I snagged this dip, because it consolidated all day, it held above that 15-cent level, and then started showing strength into the close. So into this dip, I buy in, and I start looking to see whether or not this closes strong these last few minutes of the day here. I have to make the decision on whether or not I do want to try to gap these shares and see if we can get a nice gap up and morning spike the following morning. So now we'll speed the action back up a little bit. We'll get back to some normal time into the close here. Slightly sped up. Right now, ECIG isn't going anywhere too fast. It is still just kind of deciding which way it wants to go, if it wants to dip further or if it's bottoming out and gonna perk back up a bit. It is trading at right about my position average right now, and the risk area I have in mind is about 15.8, just below 16 cents, where that consolidation held all throughout midday. But there is only about 5 minutes left to go in the day, so it's not super likely that we're going to see that snap before the close. And unless this gets incredibly weak and gives me a reason to get scared, I'm looking to gap this up. I'm looking to hopefully get a morning spike tomorrow and look to sell into that spike like we've seen in so many breakout examples past. Right now, nothing too exciting on ECIG. Couple hits on the bid. But not really dipping. Just holding steady these last few minutes into the close. And now bid starts to build up a little bit. We lose one of the 17-cent sellers and we uptick. Most of that big offer gets taken out, and now it's completely gone. So these last couple minutes now, we are starting to ramp back up a little bit. Might get a 17.6 test before the close, but at this point, I'm comfortable, I'm happy. And even if 17.6 doesn't break past before end of the day, I'm staying in. I'm happy to hold my 300,000 shares overnight and give this a chance to gap up. Here's some 17.2 prints right into the close. 30 seconds to go. Get another uptick and the bid quickly stacks up. And bell rings and market is closed. And I'm feeling good. This is above a major breakout level on a chart. And into the next morning here, we see that ECIG is in fact gapping up like I'd hoped. I don't have the pre-market prints on the lower left chart here, but the level 2 you can see we are 18.3 by 18.4. So almost a penny gap up so far. And I'm going to take my typical approach here. I'm going to be looking at that red-green level, that 17.4 previous closing price. So if ECIG opens and it opens kind of weak, I'm not selling on a dip down to 18. I'm not selling on a dip to 17.5. I'm only getting scared out into a dip if this breaks below that green-red mark. And we only have a minute to go until open now. My ideal situation here is it holds steady, spikes up towards 20, and then maybe I sell some shares around that 20 area, thinking that maybe since it's a round number it holds. I just want to get out into strength like I'm comfortable with. Here is market open. So far, 18.5 holding steady on the offer. Another market maker came in. And I do decide to downsize here. I look to sell a third of my shares up while it's still high, just so I don't have to hold the whole position through a dip and hope that it holds. So far, though, I'm not getting an execution on my order. So I just put in 3 orders. I put in orders for all 300,000 of my shares when it looks like it's dipping here. And that's because it still hasn't really dipped all that much, and I just route to a couple different market makers, just hoping to get some kind of a fill. I try a few different order types. In reality, I don't want to sell all 300,000 of my shares here. I just want to execute what I can and then cancel the rest of the orders. And if this dips much more, I'm going to cancel all my orders because I don't want to chase weakness. And so far, I've only filled about 27,000 shares. Unfortunately, I left that other order in there, so this wasn't the best sell of that 100,000 shares. I did chase weakness. I did chase down to that 17.8 area. I let my emotions get the best of me, the fear that, oh no, what if green-red does not hold? When really I know that I should be sitting back and waiting. I got the other order canceled though, so I still have 2/3 of my shares. I've locked in a little bit of profit. But I don't like sloppy sells. Even though this is a weak open, we're 5 minutes into the day and done nothing but fade. We still are above that green-red mark. There really hasn't been a true momentum snap yet. Now more bidders start coming in and we start upticking. Offer thins out a bit. And we're back over 18. And now I'm hoping we head back towards 18.5 and retest that high a day area. And that upticks quickly. We basically go from 18.1 to 18.5. Here's that high a day retest I was talking about. So now my risk on this last 200,000 shares, it could either be that 1767 low a day or it could still be that 17.4 previous close. The two are pretty close together, so I feel like I'll have a pretty good sense in the moment on whether or not they're going to hold or not. Does make that last sell of mine look all that much worse because I executed that 100,000 shares at 17.8 It bottomed at 1767, so that's a perfect example of I chased weakness and I paid for it. Here comes a secondary dip, but 17.8 holds well there. Lots of bidders at 17.7, 17.8. So that area that has established itself as support, it's defending well. I can sit back, I can relax. I don't have to take off into this weakness right now. I want to wait until there's a snap. We've talked about channels a lot in this DVD. Right now, the channel is 18.5 to 17.67. Which way is it going to break? And yeah, there's definitely some emotions involved during this part of the play. I'm a little bit nervous because I don't know in the moment which way it's going to go. As long as it's holding, I think there's a good chance we could spike. But I have to fight that impulse to sell. I have to fight that impulse to take off out of boredom. I want to sit back and stick to my plan. And here comes another 18.5 test. We break through this time. Now we're up to new highs of the day. As we start spiking now, as this starts ripping up, I start planning to look for somewhere to take off into the strength. First up here, it looks like we're going to have a little bit of a test in the 19-cent area. A lot of market makers between 19 cents and 18.9 right now. Question is, are any of them selling hidden size? $18.9 starts taking its hits. It drops a couple of those market makers pretty quickly. A little bit of hidden size sold there, but we lost another market maker, and now we uptick. Now we're testing 19. So ECIG is looking good. So far, quite a bit of strength out of it. We're getting up in the 19s and nearing that 20-cent area where I kind of wonder, is it going to hold as a top? And again, just the psychological round number. I'm not going to sell up there no matter what. I'm just going to sell up there if I see it running into trouble. Right here, it actually stalls out a bit at 19.3. More market makers start stacking up at 19.3. It looks like a little bit of a top is in. I threw in a couple sell orders again here. Put the orders in a couple tenths of a cent below the best bid, just because I want to try to fill some. Again, though, I waited a little bit too long. I let the stock get weak, so fills are going to be tough. But I just want out some because this is a turn up here. This is a momentum shift. So I just leave my orders sitting there. Just going to see what's going to fill for me. Unlike last time, I'm not going to chase this dip very far. And now I'm down to about 120,000 shares. I actually just executed another 100,000 right there as it started to turn, so I only have 20,000 shares left. I tried to cancel my orders, but I was a little bit too late. We start upticking and pushing on that high day again, that 19.3 mark. After a little bit of fighting, we break through the high day at 19.3. Start upticking again and pushing a little bit closer to that 20 mark. And yeah, I only have 20,000 shares left. It's kind of easy for me to dismiss it and say, forget about it. It's not that much size. It's not worth me trying to be perfect with. But I do want to take it off at the best possible point. So I am going to let ECIG keep on running. And I will look to sell next time it looks like it's turning. I'm not just going to randomly sell it out of frustration because it's only 20,000 shares and not worth my time. Right here, I threw my last 20,000 shares in on the offer at 19.8 because there were a ton of sellers at 20, a ton of sellers at 19.9. So I just wanted to sell into the strength that time, not wait for the stock to turn. And I got out the rest of my shares right near that 20 resistance, and I have $5,000 more from that overnight play. So again, in this case, it wasn't buying right as the stock broke out past that 15-cent area. But I still came out of it with pretty nice gains. End of the day chart here, you can see ECIG did not hold up. That last sell at 19.8 was almost perfect, so at least I got one good sell off, even though it was with my smallest size. But after the 19.9 top out, we pulled back pretty hard, and eventually in the afternoon broke down and faded off, went red on the day. Overall, this was still playing the breakout setup. This was still playing the predictable part of the move I like. It was just playing a slightly different part of it. So now let's look at one last example of playing part of a breakout that is a little bit beyond that initial breakout point. And here we're going to go back to AEMD again. Last time we looked at AEMD was on the breakout past the 30-cent area. Now AEMD, after a few days of consolidation and running, has broken out again. Look at the upper left daily chart, and you'll see the breakout here was past about 48 cents. That is the key breakout now that I am looking at. On the day of this breakout, I missed it for whatever reason. I can't remember the details now of why, but I know I did not take any advantage whatsoever. Also, I didn't get in at the end of the day. I wasn't in this for a gap up. So here we go, start of a new morning, and I'm on the sidelines. We're an hour into the day, and it did top up in the 60 area, pulled back as low as 56.2. Now I think of it as being in that channel again. If it breaks past that 60, there is quite a bit of opportunity for a spike, I think. Or if it breaks down under 56.2, it probably retests that green-red area, and then from there we'll see. Maybe it breaks down, maybe it holds. But I am very interested in watching AEMD while it's in this channel. And the reason for that is if you remember that first AEMD example I talked about earlier in this chapter, I talked about how I wanted to rebuy AEMD after I sold it, but I couldn't get a fill. So I'm not going to make that same mistake again here. I remember that. I know if I wait on the 60-cent high a day break, I'm probably not going to get my fill on AEMD just like I didn't last time. So today, my strategy has to be slightly different. I need to play off of this channel. So my plan is to buy dips along the way, buy in this channel as long as that 56.2 mark is holding, that low of the day, and then I will use that as my risk. So right now we are getting that dip back down. We're testing the 57 area right now. And if I start to see a higher low here, I'm going to think about buying, because down near the bottom of the channel is where I'm going to get my best risk reward. And in fact, I do put in a buy order here, because I do feel like this chart is putting that higher low in. It is defending 57. And then I only have to risk about a penny a share. Unfortunately, I only fill 1,000 shares out of my 50,000 share order. and AEMD starts perking up. Unfortunately for me, there's no dip again. AEMD just keeps on pushing right now. It goes straight through 58. So it starts to look pretty unlikely that any of the rest of my order is going to fill. After that brief pull, 58's reclaimed. Now I put in another buy order. I start chasing a little bit. Put in a few more buy orders. I tried a 58.5 first, and that ask was gone before it even had a chance to fill. So then I threw in a couple orders at 59, and these aren't the best orders. It's a little bit risky now because I am buying towards the top end of a channel. So now instead of risking that penny a share I would have been if I had gotten in down near 57, I'm going to be risking more like 3 cents a share. So this is where my position sizing comes into mind. I'm not going to play huge size here risking a little bit more. I'm going to play a little bit smaller of a position because my risk is going to be wider. So I get myself up to 99,000 shares and then I cancel all of my other orders because I really don't want to be in too big. My average is 58.92, so penny a share off the high a day. So when playing off a channel like this where the high is 60, the low is about 56, that's a 4 cent a share range. Ideally, I want my entries to be in the lower half of that range, so 58 or under. So in this case, I didn't do a good job. But the AEMD ramp up continues to work. Start retesting 59. And those 59 offers thin out, go away, and we start upticking again and get ready for that retest of the high day area. Slowly but surely, it starts chipping away at all those 59 sellers. That actually is a new high day right now. The high day was just inside of 60. But as you can see by how stacked up that level 2 is on the offer, and really I like to use rounder numbers anyway when it tops out really close to 1, I'm thinking about 60 in this situation. So even though it's a high a day, 60 is what I really want to see break. There's a little bit of a momentum shift up here. It did get a little bit weak there, drop a couple tenths of a cent. But I'm not really worrying too much about it. I know my risk. I'm sticking to my plan. Risking about 3 cents a share on 99,000 shares is only a few $1,000s, which to me, that's an acceptable risk level. Here we go. AEMD finally starts strengthening again. Start attacking this 59.9 to 60 area. Start seeing some pretty big prints going through. Sellers are slowly getting chipped away. Bid is stacking up. It's looking right now like 60 may finally break. But then the offer starts stacking up again. A lot more sellers come in at 60. And this turns into a lot more of a battle bid starts dropping off. Now bid is building right back up. So it's definitely a big fight at the 60 cent area right now. And it looks like it's one that the sellers are winning. We start seeing some panic prints go through below the best bid. And we get a downtick. Even though it turned there, I'm not really scared. I don't care. Like I said, I'm just sticking to my risk. I'm going to let the chart develop a little further. That was really the first test on 60, even though it was a long test. And I'm glad I didn't panic out there because the high 50s held well, and then it basically just blew right through 60 after that. Now we start grinding on up a bit higher. And I'm feeling really good about the position I'm in, because I know we're in a spot now where this could really get going. After all the abuse the 59s took in that 15-minute period there where it was fighting in the high 50s and right in the 60 cent area when it was testing it, I'm thinking about moving my risk up now. I'm thinking about risking more off of the 59 cent area rather than down at the low day like I would have been before, because there really was a lot of support there. AEMD just continues to grind on up here. Kind of a slow, choppy grind. As it has turns, I'm not going to be looking to sell quite yet. It did just break through the high a day, so I'm hoping there's potential for a little bit more of a move. The way I see it is that one of two things is going to happen. Either the turn is going to be fake and it will continue to new highs, or the stock will turn, there'll be a pretty hard pullback that makes it clear that a short-term top is in, and then I'll look for pops to sell into after that. So that's kind of my strategy here for taking profits, as long as it's not super overextended right now. And we do continue on up. We're through 62 now. Trying to push on higher to test the 63 area. Seems like 62.8 holds as a top for now. But no hard dip or anything like that. Nothing that would scare me out. Make me think I need to look for pops to sell into. So for now, I'm just sort of sitting back, watching and waiting. Last dip on AEMD was about 61.5, so that's kind of the area I'm looking at, where if we pull back and get to 61.5 or under, then maybe I start thinking about selling into those perk ups. But for now, these pulls are holding a nice pattern of higher lows. And momentum is reversing again. That bid is strengthening. We're getting ready to push back up again. And here we are at new highs a day again, pushing through 63. Pretty big wall here between 63.9 and 64 on the offer. But the 63.9s start dropping off. And after no real pullback, after the 63 break, we start testing 64 also. Now we're through 64, so we're actually starting to speed up a little bit. And once a grind starts to speed up, once we start to get moving a little bit quicker, those are the moves where I will start thinking about taking some shares off into the strength. Because after a speed up and a lot quicker of a ramp up, I anticipate that next time it turns, it will be that harder pullback. So my goal would be to try to get it as it's turning. Now we are through 65. So we start fighting a bit here in the 65.5 area. This is the first time I start to feel like I'm seeing turning action. So I throw in orders for my entire 99,000 shares. And I only filled about a quarter of them. I'm down to 74,000 now, and canceled the orders because I didn't want to chase weakness. Low 64 is defended there. We pop back towards high day. And I'm still thinking sell. I just want to sell next time it's turning. I still want to be selling into the strength. We get through high day again, so I'm hoping this takes us much higher. Right now, a bit of a battle in the 65.9 area, so again, I'm looking to take off some shares. Got almost an instant fill there on my sell order. I'm down to 50,000 now. When the stock is this liquid, yeah, you might see that I'm using market orders, but that's because I'm really not worried about getting an absolutely terrible fill, because this trade's very thick, and I just feel like sometimes I get a little bit better of an execution through the market order. But part of the reason I feel safe doing this is because I know my broker is good about canceling them. So if I wind up not executing and the stock starts dropping too fast, I know that I can get that order canceled and not have to worry about it filling super low. AEMD continues pushing. And we get into a bit of a battle at 66.7, so I threw in a sell order again, and I'm down to 25,000 shares now. And since the ask starts stacking up and it looks like we're going to pull, I do put in an order for the rest of mine. I filled that all in the low 66s, and I'm flat. I've sold along the way into strength, just like I like to do. I've locked in just under $7,000, which for the position size I was playing, that's a little over a 10% gain. So whether you're trading a larger account like mine or a smaller account where you're just starting off with a few $1,000s, those kinds of profits, they matter. Just checking out the AEMD end-of-day chart here, you can see it did wind up going a bit further than my sells. It got up as high as 72. Midday, it topped out at 70. And then after consolidating for about an hour, it did have that afternoon high day break past 70 cents. And this is one of the examples of why I caution on buying a high day break once these things get further and further extended past their run. Keep in mind, the big breakout level was 48 cents. So if you're buying it on the 70 break as it breaks high day, you're buying 40% above that key level. And this is an example where you could have really gotten hurt from that, especially if you'd gotten stubborn, because end of day, they pulled the plug and it faded very, very hard into the close. So that's why I do tend to stick to earlier parts of the move. I'll buy right on the break. In this case, I'll buy that morning spike on day 2 if I think there's a chance of one. But the higher and higher they get, it becomes a much better idea to be safe and sometimes just stay away. There are a few key things to take away from Chapter 6. First of all, volume and volatility are by far the most important things to me when I'm playing these breakouts. I need the stock to be volatile to make it worth my while being long, but I also need there to be enough volume and liquidity so that I can enter and exit with ease. OTC executions can be tough. I do not want to put myself in a situation where the stock does not have enough volume for me to get fills and I get myself trapped. That volatility, it's an added bonus. If I feel like there's a good deal of upside to be taken advantage of, then it's worth my while. It's worth that added bit of risk to have to deal with some crappy execution sometimes. When buying these breakouts, I do not want to be chasing spikes. I would rather buy dips if I miss it than try to fill at any cost on the upside. If that dip never comes, that's okay. I'd rather miss the play than sacrifice a good entry and be uncomfortable the entire trade. That is what would lead me to making emotional decisions. Also, make sure you remember that once these stocks break past their breakout level, they don't always hold it perfectly. My biggest trade of the chapter, Fannie Mae, it dipped back under its 260 breakout level before finally working very well. That choppiness is okay. That choppiness is to be expected. Don't let that shake you out. Go in playing off of a previous intraday support level of your choice, build your risk around that, size in accordingly, and if that level fails, then you can cut the loss. Finally, while there's never really that huge of a risk of it, just be careful of overnight halts. 2014, I did see the most OTC halts I ever have. So far in 2015, there have been very few, so it is a bit of a crapshoot which ones will get halted and which ones won't. Even if it's only a 1% chance that your play gets halted overnight, just make sure you're aware of that risk. Don't go all in. Don't put yourself in a situation where your account could be gone if things go wrong. I would much rather be an overly cautious trader than put myself in reckless situations and find my account blown up one day. Chapter 7 focuses around shorting OTCs. If buying isn't your thing, or if you just think that OTCs or penny stocks are really risky and you don't want to be long them, it's hard to argue against betting on them to go down. When I'm shorting OTCs, the main thing I'm looking for is overextension on the daily chart. That is the number one most important factor to me. I'm not necessarily looking to short if I think the company is crap or if I think it's a scam, which is the case for most OTCs. The chart setup has to be there. I have to have that daily overextension. So what do I consider overextension? Well, it's something I judge from the breakout point. We just covered breakouts last chapter. And in those examples where they really get running, they really extend up, that's when I switch my view from wanting to be long to wanting to be short. So I look at where the breakout point was, and then after the stock broke out, one way I'd consider it to start getting overextended is if it's had multiple consecutive green days. Really, after only 2 or 3 green days, I start to consider it to be overextended. I start to think, hey, when this thing goes red, when this thing snaps and momentum shifts, there's a good chance of this having a hard pullback and maybe coming back to that breakout area. But the other element is it needs to be a large percentage run relative to prior action. Basically, I want it to have sped up. I want it to be nice and extended past that breakout point. I want it to have plenty of room to come down. That's not necessarily a set percentage number. It's not like I have a number in my head where I say, oh, it's up 50%, it's overextended now. But it all relates to the price action before, and we'll get into that in some examples in a little bit. But when it comes to these getting overextended and running, as far as I'm concerned, the higher they go, the better. I want them to have a ton of room to come crashing on down. With every passing day and the higher and higher they get, I anticipate that the intraday pullbacks will be more and more severe, so I am more likely to start shorting into strength or shorting morning parabolics rather than waiting for the stock to snap and go green to red. But that green to red move, that momentum shift, that first time the stock goes red in multiple days or the first time it's red after a huge extension up, that is the main play I like, and that is what I think opens the door to some of the biggest crashes. Because that's when you get sellers coming in, that's when you get panic. And because of the nature of OTC executions, the panics tend to be very severe. People can't get out, they have to chase, and market makers take advantage of this and really let the stock come down. In order for an OTC to be a short for me, it doesn't have to be a blatant pump and dump. If it is a pump, great, all the better. That increases the likelihood that it's just worthless trash. If it is a pump and it's nice and overextended, maybe promoter history will come into play for me. If I know the promoter, if I've seen some of their past crashes and I know some characteristics that are similar through all their crashes, I will try to apply that to my trade decisions going forward on the next one. But if it isn't a pump, if it's just random momentum pushing it, if it's just a random OTC that's nice and overextended, that potential for crash is still there. So I just look for as much extension as possible on these momentum runners, and then I strike either into a nice spike looking to take advantage of a pullback, or I wait for the momentum to snap and I get in as the stock is ready to have a big crash. In some cases, whether it be pump or momentum runner, I will miss the morning spike or I will miss the green-red breakdown. And that doesn't necessarily mean that the play is over. That doesn't mean that I don't have a chance. I will start to watch bounces. I'll look for good bounces to short using prior resistance levels as my risk. Since OTCs can collapse fast, and once the momentum turns, the selling can be pretty relentless, I do like to take advantage of bounces because shorting into that strength gives me a good chance for the stock to at least fade back and retest a prior support. And sometimes that support even snaps and you get another nice leg down. I know I just threw a lot at you, so let's get into some charts because those may illustrate what I'm talking about a bit better. Let's start with HEMP. HEMP was one of the breakout charts that I showed you, and it's a great example of overextension beyond the breakout. The breakout level was down near 10 cents like we talked about last chapter, and then we had 3 straight up days, never went red any of those 3 days. You can tell that by looking at the daily candles and seeing that none of the bottom wicks on the daily candles go below the previous closing price. And then finally, the day where it did go red for the first time, it wound up having a big washout. I believe at its max, it dropped about 40% that day. PVCT. This was one of the first breakouts on PVCT past the 160 area. And I can't remember if I traded this or not, but I do know that if I saw a setup like this now, it would be one where I'd be looking to short sell. It went from its breakout level of 160 to a high of just over 250. And again, a few straight up days, never went red. You can tell that again by looking at the daily candles. And then the first time it does go red, it has this nice pullback. If you're shorting on that green-red move at 250 and getting fills, there's opportunity for up to 20% gain there if you cover it near the lows. Do I expect to be perfect in that situation? Absolutely not. But the point is that's 20% worth of range where there's potential profits, and all you have to do is catch the meat of the move. I really want to caution against the line of thinking, though, that first red day means that the pump is over or that the run is over and it's definitely dead, because that is not always the case, and you set yourself up to the potential of getting squeezed massively sometimes if you do fall into that frame of thinking. PVCT is a good example of that also, because after this first red day here, after this big pullback, it did come back. You check out this next chart, a few days later it broke out past that 260 area, got as high as 3, and then after another couple weeks of consolidation, it really went crazy, squeezed all the way up to 6. And I guarantee a lot of that move was made possible by stubborn short sellers who didn't think that it could keep going. So making the assumption that a stock is up too much or that it can't possibly keep going can be very, very dangerous. But PVCT, after this huge $3 breakout, after the run from 3 up to 6, it is another one of those examples where after a couple big up days in a row where the stock didn't go red, the first time it goes red, the doors opened to a big crash. Now, this one happened to be one of the more ridiculous crashes I've ever seen. They're not all going to drop 66% plus in one day from their highs. But the ones that really get squeezing and really get up there, you should remember that these kinds of moves are possible. One thing I mentioned earlier in the chapter is that as these things keep going and have green day after green day, I get more and more likely to short into spikes. I get more likely to short into the strength instead of waiting for the first red day and the first time the stock has a trend break. And MDBX is an example where if you aren't very careful when you do this, you could blow up your account. MDBX, the first few days of trading, went from $10 up to $30. That was the pattern I liked. That was, a few straight green days in a row, hadn't gone red, nothing like that at all, and no trend break. But it was getting to the point where it was getting pretty overextended, and I was saying to myself, wow, this is up from 10 to 30, this is way too much. And it's very easy if you start shorting up in those high 20s, low 30s levels, that you get stubborn when it's not working for you. And you say, no, this is ridiculous. OTCs don't run this much. It can't go higher. There's no way it's going to keep going. There's so many ways to justify a bad hold in your mind and just to try to wait it out and say, it'll be fine. I'll just cover when it crashes. And then before you know it, a few days later, your account is blown up. That's exactly what happened to a lot of people on MDBX. This thing went absolutely nuts. It went all the way up to the 90s. And there really wasn't a very clear breakout on this chart. I mean, maybe past the $30 area because it did hold under that for 2 days in a row. But this is just one that kept going day after day after day. And by the time it was all said and done, we had 7 straight up days without going red. And finally, the last day, it crashed. MDBX, I was fortunate. I was good about cutting my losses. I had myself positioned on this crash day to be ready. I wound up shorting into the spike up towards the 90s because I was ready. I knew it was way overextended. I knew it had just gone absolutely nuts. And then it wound up having that huge pullback and crash for me. And I took advantage and I made some nice profits on it. Now, another stock that was running at the time that I cannot say the same thing about was GRNH. And GRNH, it was very similar. Green day after green day after green day. And it started to get kind of crazy and really run. It was up from about 5 cents to 45 cents on day 4. And I was saying to myself, this is insane. It can't keep going. This is up way too much. And it was a mistake for me to think like that. And this is one where I did get stubborn. I held overnight on this day where it closed around 50. I was short from about 45 cents maybe. I had 30,000 shares. I decided to hold and get stubborn because I just thought, hey, tomorrow it probably gaps up, has a little bit of a spike, and then crashes. And I can always add. I can always average up. I will be okay. It will fade. I'll be fine. I just made all the excuses in the book. Instead, the next day, it gapped up huge. It gapped up over a dime. It went up into the 60s. After that huge gap up, I continued to think, it's just up too much. This is ridiculous. This gapped up too big. It can't possibly support this. And the first few minutes of action, when it was fighting in the 60s, deciding which way to go, I added to my short. I doubled down. And I basically wound up with a large short position with my price average being somewhere in the 50s. And then when GRNH held at the open, it held in the 60-cent area, and it had a massive morning spike. It spiked all the way up to $1.20 in the first hour or two. And I was already sized in beyond my comfort point. While I wasn't all in or close to all in, I had some very large unrealized losses. I was down 50 grand on this thing at one point. And when a stock is spiking against you like that, and you're down what you feel like is a large amount of money, the idea of adding, the idea of averaging up becomes very, very scary. Because if you add and you keep getting your size more and more out of control, and you keep on being wrong, and that stock keeps on going when you think it can't, you blow up. So GRNH, I think when all was said and done, I wound up covering some as it was turning, as it was pulling back. I believe I turned my $50,000 unrealized loss into maybe negative 30,000, negative 25,000, something like that. But I still wound up taking a big loss on it. And I completely missed the opportunity to take advantage of the large crash on the morning spike when it came down from $1.20 all the way back down to right about that green-red area at 50 cents. In the span of about an hour, I missed a 50% drop. It was a textbook setup to short into a spike for me. Instead, I had to manage a losing position that I had gotten stubborn on. I took a big loss, and I was completely unprepared to get a piece of that action when it was up at the top because I was so emotional and so scared. And that emotional hangover even carried over into the next day, the first time it was red. That day, it dropped from 85 cents down into the 30s. I was so emotionally wiped from the day before, I was still so scared of the stock and just messed up that I completely missed it. That following day, I don't think I shorted GRNH once, the day the momentum truly snapped. So because I had that early position, because I got stubborn, I didn't miss just one great play, I missed 2. The moral of the story here is not to avoid shorting strength. The moral is know your stop loss, know where you will cut if things aren't working. Don't just blindly hold and hope that eventually the stock is going to drop and go in your favor. Don't blindly assume that it can't keep going because you know what? Sometimes it can. And maybe it only happens 1 out of 100 times, but that 1 out of 100 times is all it takes to blow you up if you do not manage your risk properly. One more thing I want to cover before we get into some more specific examples is the fact that just because I talk about green-red being a trend break that I like to play off of, doesn't mean that it works 100% of the time. Take a look at this WSTI daily chart. You'll notice that we had 3 green days in a row here between $1.50 and $2. But each one of those green days, the stock did not hold green. Look at the little wicks on the bottom of the candles. Every single time, it would morning dip below the previous closing price. It would go red, but then it would save itself and it would eventually grind back and close the day green. Now in those three cases, I'm not necessarily looking to short yet because it's not very extended yet. But the higher and higher it goes and the more interested I get, I need to keep that in mind, that it has already shown the ability to save itself after going red in the mornings, and I need to look for a different kind of trend break. What I wound up doing with WSTI to nail this red candle finally was I noticed the fact that on its 3 straight up days, after the stock went red and panicked and set that morning low, it would hold that low for the rest of the day. So when WSTI finally broke down, and when I was watching for it to break down, I was stalking it for the day that that morning low would not hold. Unfortunately, I don't have an intraday chart of that to show you, but I did want to touch on this example just because it is important as a trader to be able to tweak your plan based off of the price action that you're seeing rather than just locking yourself into one preconceived idea. And I think WSTI illustrates that very well. Moving on, let's talk a little bit about Fannie Mae and just some of the incredible short opportunities this offered. Here's a daily chart of Fannie Mae's first run, the first time it had really shown any kind of activity in quite a while. In the first 4 days, it had spiked from 30 cents up to a high of about $1.10. That fourth day where it was still a green candle, I was trying to short into strength that day. I would short spikes, I would cover dips, but it never truly broke down. That fifth and final day though, it did have that huge crash. And I went in with the same idea. It was getting so extended to that point, I wanted to try to take advantage of shorting spikes. Looking at the intraday chart here, you can see it opened up around 115 and did have a very nice morning spike up to that 145 area. Unfortunately for me, I took an early starter around 120 on it when it had a little bit of a fake top. It had a fake turn on the level 2. Because I took that starter short, I then got stubborn. I still was saying to myself, this is up too much, I'm just going to hold this, it'll be okay. And yeah, I turned out to be right. It did have that huge crash later in the day, but that early stubborn starter prevented me from being able to add near the top at 145 because I was worried about having that early starter and what would happen if I kept adding and kept being wrong. So again, a case where I would have been better off just cutting my loss and starting fresh. The spike did top out though, and we did have this straight down panic. And in this case, the panic was just so severe by the time we got to green red, even if you waited for that trend break, you probably don't get a fill because it is just so panicky at that point and sellers have it so overwhelmed. But let's say you missed that. Let's say you missed that first short completely. Well, then Fannie Mae had that great bounce from 55 up to $1. And that is almost a 100% move. And that move happened in the span of about an hour from 11 o'clock to 12 o'clock. So in 1 hour, the stock goes up 100% after a massive panic. You can bet it's going to need another pullback. So I took advantage and I shorted into that spike as well. And that's another area of pumps that I love to short, is after the big bounce. Fannie Mae did something almost identical a few months later. This was the trade where I had my huge day and I made about $215,000 total. It had its massive breakout. It ran for a few days from about the mid ones up to $4. Again, that day where it gapped up to 350, spiked to 4. I remember shorting that into the spike up near 4 and covering when it was holding that 350 area, the price where it opened. So again, an example of shorting into the spike, covering into the pull, but we didn't get the total breakdown, but there still was opportunity there. Then the next morning, going in with the same mindset once again. It gaps up, it's having a morning spike, I want to short into that spike. On the intraday chart here, this is absolutely beautiful and it's almost a mirror image of what we saw on the last chart. You have the morning spike and then the massive crash. This time, the reason I was so positioned for success was because I did short early a couple times along the way, on the way up here, where it looked like the level 2 was turning and it was getting ready to be weak. But when I would see the level 2 bottoming, when I would see it getting ready to save itself, I would just cut the loss really fast. I took a few losses for 2 or 3 cents a share. And that was okay because when I finally nailed the dead top and nailed the drop, I was making a couple dollars per share. Once again, after the massive panic, we had a huge bounce, in this case from 220 up to 4. Again, almost a 100% bounce. This one was in a little bit less than an hour. This was probably about a 45-minute long bounce. And again, same thinking applies. It just had a massive panic. It just had about a 100% bounce in a very short amount of time. It's a very liquid stock where I can play size. So I shorted into that bounce, covered into the pull, and I used level 2 to guide me for most of the trade. Fannie Mae was that rare, almost once in a lifetime example where you have that stock that is perfect level 2, it's trading incredible volume, incredible liquidity, and trading insane sizes possible, especially with the kind of volatility it had to offer. A slightly different example for you here, THCZ, a stock that had been going up for a few weeks now from really sub-penny levels all the way up to 29.5. And that day where it spiked from 18 cents to 29.5 was really one of the first days it sped up. And I knew I was watching it for a short. It was very high on my list. I was stalking it. Unfortunately, it didn't continue higher. It didn't give me the morning spike opportunity the next day. I wanted to get really nice and overextended. Instead, it gapped down. And you can see here on this intraday chart, after the gap down, it had a morning panic and then had that really big bounce again from about 18 cents up to 27 cents. I missed this play, but it's one I should have taken. It's one I should have been going after because I know better. I could have easily shorted into this bounce, used that red-green mark at 29.5 as my risk, and I would have had an opportunity to capture this 50% fade after the bounce. But instead I was a little bit of a chicken and I decided to avoid it. It can be scary shorting into bounces. It can be scary shorting into strength. And this one was a lot choppier than Fannie Mae was. It wasn't as clear cut on the level 2. I would have been making this play based more off of the chart. And I know I'm speaking with a bit of hindsight now. I know I'm speaking about what I should have done instead of what I did. But it is a great example of a pattern that I look to short. One final example I want to go over is ECRY. This one was a pump and dump. It really hadn't gotten too overextended past its 50-cent area breakout, but it was one that was showing quite a bit of weakness intraday, and I thought it might be about time for it to crash because it was pretty late into the promotion. It had been running at this point for almost 3 weeks. Let's look at the intraday chart and how I handled ECRY. Because it wasn't very overextended yet, I wasn't looking to short it on green-red. I wasn't anticipating that snap would necessarily bring a large washout. But when it went red in the morning, it had this 20-minute panic all the way down to 40 cents, which is a pretty big drop. And then it had this long period of intraday consolidation, where it had a little bit of a bounce from 40 cents back up to about 48, maybe 50. And it just consolidated and slowly faded away. And as it was in this period of consolidation, as it was slowly fading, I built into my short position. I built in short, risking off of that bounce high, risking off of the 50-ish area. Because I knew if that low of day snapped, if that 40 support broke down, there was a good chance that it would turn into liquidation and the promotion would be over. And sure enough, because I had built in during that consolidation, because I added as it was cracking under 40, I was in position to take advantage of this big fade into the close down to 20, a 50% drop once again. If you try to short based off of a risk like this on ECRY, will it always work? No, it won't always work. Sometimes you'll be wrong. But that's where having the risk level comes into play, and that's where you just have to suck it up and take the loss as much as it might suck sometimes, so that you don't put yourself in a position to possibly get squeezed much, much further. But it is a great risk-reward setup, because I was only risking maybe 5 cents a share based off of where my average was, and I was able to capitalize on a good portion of the down move, and I don't think I even held it all the way down to 20. I think I had covered by about 28. But enough of looking at charts and talking in hindsight. Let's get into some of the live trades now. Let's look at some examples where I am shorting some OTC breakdowns and just different stages of overextended charts where I think I have a clear edge I can take advantage of. Let's start by taking a look at GTATQ. Starting in the upper left-hand corner with the daily chart, I'm interested in GTATQ because we are getting some of that overextension that we talked about. In a few days, and now we've bounced from 22 cents up into the 50s. We're up over 150%. And right now, we're in the midst of a morning spike. GTATQ gapped up quite large and has been spiking ever since the open from 47.5, and now it's at 56 cents. One thing I'm looking at here with GTATQ is this resistance level back here on the daily chart, where after we had 4 straight big fade days from up when it was around $1 down to 40 cents, it tried to bounce. And the first bounce day it got as high as about 61 cents, maybe 62 cents. And the next couple days, there are a couple green candles in there that try to have perks up through 60, and both times they failed. That low 60s resistance held. So now, coming off of a base of 22 cents and spiking straight up, I think that it's very likely that 62 cent area gives GTATQ some trouble. So this is a morning spike that I am interested in shorting. The closer we get to that 60s area, the more and more I want to attack. I will try to judge the momentum and get it on a turn by using level 2 as my guide. We actually start to see a bit of a turn here. The offer stacks up at 55.9 and a big ARCA seller just jumped in. I threw in a market order here for 30,000 shares. And I actually cancel it very quickly because I think better of it and I don't want to risk getting a crappy fill on that starter. Plus these ARCA sellers who are dropping below the best bid, they make it almost impossible to fill. So if I were to get a fill on my market order there, it would have been a really crappy average in all likelihood. Getting a brief pullback right now, but I'm not too interested yet because it is only 56. I think this could head a little bit higher. If the first time this catches and rebounds, it puts in a lower high, then I will definitely attack. I'm just taking my general approach to trying to time spikes. Right now, low 55s are catching. Looks like the bid is stacking up a little bit. Just lost one of the 55.16 sellers. Another bidder comes in. Now an ARCA bidder comes in above the best offer, trying to push it back up, and we get the uptick. We got a couple prints that went through there at 56, and it's looking like we're going to at least retest that high a day right now. We just pushed through 56 and we're up to new highs. So right now I am thinking about that round number of about 60. Thinking that that may be where this finally gets tired. And I'm not necessarily swinging for the fences on this short. I don't think that it's going to turn and collapse all the way back down to 30 or anything like that. But I do think we're going to get a pullback. Maybe back as low as 50 or so. Maybe 52 where we stalled out for a bit earlier. Right now we're battling in the high 57s. But it looks like we're still strong. We're still pushing up. We lose a couple bidders there though, so I decided to start trying to get some fills. Right now I have an order through NITE and an order through CANA, and CANA routes to the market maker CSTI when you're using Centerpoint. And I am chasing down a little bit here, just a penny, but I'm trying to think about the big picture. And I'm willing not to get the exact perfect execution. Because I am confident in that resistance level. 57 stacked up in a hurry there. So I tried to cancel some orders, but I filled them all. I filled them all right down there at 57. And I got a little bit carried away with size. I did not mean to fill everything. So right now I have 120,000 shares from a 57.08 average. Despite that catch there, the ask is staying really heavy. So I put in a couple more sell orders. I decided I want to try to add a little bit because that just looked a lot like a lower high to me. It tried to perk and it failed. And that ARCA seller came in down at 56 and now is 55.9 and basically eliminated any chance I had of getting a fill there on the bid. Very frustrating when they lock it up like that. But now we are getting a very significant pullback. And if I do want an add, I'm probably going to have to wait for a perk. For a stock like this, filling into strength is really your best bet. And that offer is really stacking up now. It looks like panic is setting in. We are fading hard. In just a few minutes, we're already down 4 cents a share from the highs. And those market makers on the offer just keep on dropping down and pressuring the bid. Look how fast that ask stacks up. As it drops, the potential support areas I'm thinking about, that 52 support from earlier we talked about, and if it gets through that, maybe around number 50, maybe low a day 47.5. So those are areas I'm going to key in on and watch a little bit closer. Got this big ARCA seller dropping down now. So people are just having a heck of a time getting out, and this is really turning into a severe intraday panic for a stock that was up so much on the day. But right now, I need to sidetrack from the action a little bit. Look up at my position. Suddenly, I'm down to just 90,000 shares, and now I'm down to just 60,000 shares, and I didn't cover any, and my profit loss didn't change. So what the heck happened there? Basically, and this is the only time this has happened to me, CSTI, I found out later, canceled my fills. I had filled 60,000 of my shares through the market maker CSTI, and they basically decided those fills didn't count. They didn't want people using their route. So I was naturally very livid when I found this out. Back to the level 2 action now. The bid is stacking up huge at 51.2. Could think about covering some here. I decided not to because it is only the first bounce. I want to think about maybe adding back some shares into the bounce if it's a good one. Or maybe it stuffs and has another washout. But it panicked hard enough off of the highs that I really do not feel the need to cover up immediately on this thing. And right now, high 52s sold pretty heavily, and now offers are dropping back down again. And that bid that was stacking up is suddenly getting chipped away, and we're back into the 51s. So it's starting to look like that might have been a fake first bounce. If this were to put in a high or low here, then I'd be thinking about covering some of my shares. But at the moment, looks very good to keep on panicking. And we are under 51. But I am thinking that we probably get some kind of a turn soon that is a little more lasting of a bounce. Whether it be off of the round number 50 or maybe that low day 47.5. So like I said earlier, those are the key areas I'm watching. I am very interested to see how those respond here. And right now, sellers are not coming down to pressure like they were before. So I decided to start locking in some profits. I used limit orders in this case because I didn't want to risk a crappy fill up in the 52 area. So I made sure that if I filled, it was going to be on the offer around 50 and a half. And I did get out about a third of my shares. And that ARCA seller lifts, and now it starts looking like we might uptick a little bit. But I'm still waiting to see how this 51.5 to 52 area resists. If we sell a lot of hidden size and it gets smacked back down, or if it starts to thin out, it looks like we're going to get a more meaningful bounce. So far, not the strongest bounce. But the bids started to stack up there, and I'm a little frustrated from half my shares getting taken away still. So I'm just looking to cover now. I threw in a 52-cent order. I want to take off more shares. It's really not a great cover order. I really do think I made this mostly out of frustration. Luckily for me, I only filled a little bit of it. I'm down to about 32,000 shares now. But it looks like the bounce is on at this point. And it's going to retest that 53 area where it tried to turn last time and then got stuffed. Now it's just kind of gotten a liquid and we have a nice wide spread. And it's just deciding which way is it going to go. Starts to build back up a bit and look like maybe it will try to break through that 53 mark. It's certainly about to put in another test here. ARCA jumps back in and starts selling again, and we get knocked back down pretty hard. All of a sudden it's back near a low day test. Had 53 broken, I probably would have taken off the rest of my shares into that strength. Luckily for me, I didn't have to deal with that. Now it looks like we might try to test 50. $50 isn't cracking, so I put in another cover order. I decide I want out. And with all those market makers on the offer, I'm hoping at least one will fill me. I actually canceled my order and tried routing somewhere else because I was getting so sick of the crappy fills from NITE. And in this case, I got filled most. I'm down to 1,500 shares, almost out. The bar OTC route I used, I believe, goes to ARCA, which explains why I got a little bit quicker of a fill. When it's still a green day like this, I really do try not to overstay my welcome. I do like to pay myself into these pulls. I'm really not in a swing for the fences mentality right now. We just held 50 again. I don't know if this is going to break down further. I don't know if this is going to spend all day grinding back and then test the high a day later. So I'm going to take off when I have profits, the predictable part of the move. Sometimes I may save a piece just in case it heads lower, but today, given my frustration after the CSTI debacle, I'm in no mood for that. And since I just have a tiny piece left I want out of it, threw in an order on the offer, filled my 1,500 shares, and I'm flat. Despite how irritating of a trade that turned out to be, it really did work well. Got short into the spike, covered into the pull, just like I like to do on green days. Taking a look at the end of day chart now, GTATQ, it did break down more. It did totally fall apart. Actually got as low as 43 cents. So my cover's about a dime early. I captured about half the move. But at the same time, I saved myself from having to hold through this bounce up to about 55. Who knows what I would have done up there? I might have covered because I thought it was grinding back and it was still green on the day. If anything, I missed an opportunity to reshort later in the day when it was breaking down, but that's okay. I'm not going to nail every single play. What's important is I nailed the part of the move that I like. I got short into the spike, I covered into the pullback, and I made well over 10% on my position as a result. Now let's take a look at AEMD. AEMD is going to be an example of me trying to short a stock as it is going red on the day for the first time. This daily chart up here is a little goofy right now. Ignore the far right day print because it's still pre-market and that should not be showing on the chart. The reality is, yesterday we closed at 42 cents and this is after breaking out past that 31 cent level. We went over that trade earlier in the DVD. And AEMD closed well off of its 47.8 highs. So all through this morning, I have a couple options. I can short into strength using that 47.8 area as my risk, or if we're cracking green red, I can go ahead and I can short into that move looking for a big collapse. As we near the open here, and it looks like we're going to open around 43.5, I'm going to be watching level 2 to try to get a feel for which way this is going to break and try to size in accordingly. Right at open, that offer stacks up huge at 43.51. And I immediately throw in a bunch of sell orders here because I'm trying to fill whatever I can. I'm convinced this is about to go green-red. And so I'm just hammering away at this weakness. And it looks like I'm right. We are testing 42 and dip right under. I start canceling orders because I get a good amount of size. I get the kind of size that I'm comfortable with and want, a little over 120,000 shares. But now, green red saves itself. 42 defends and stacks back up after dipping just under. Now the bids start stacking up a lot more and I just got myself trapped a bit. So now I'm in from a crappy average, 42.09. As we perk up, and we're looking to battle here in the 43.35 area, so just below where it opened. So I put on a couple ads here, right around that 43.5 area, just because I'm hoping that that opening price holds its top and we fade back off and crack under 42 for good. And we do get a little bit of a fade back. I got my position size up to 150,000 shares. But 42s are still holding. And now this feels like a higher low to me. So I covered up a few of my shares. I basically got my ads out. I'm back down to 134,000 shares, down, $100 on what I've locked in so far. And we get a really quick spike up to the 45 area. Watch the chart more than the level 2. Right now, that's more of what I'm playing off of. I'm using that wide risk up to the 48 area. I trap myself, but I'm not going to panic out into strength randomly. I don't want to get out just a few cents below a key resistance point. Unfortunately, my one mistake here is that I am playing a little bit too much of size since I am using that wide risk. Wider risk means that you should play smaller size so that your loss doesn't get out of control. Right here for me, if I have to cut this loss up near 48, I'm going to be taking about an 8 grand loss, and that is way more than I want to have to lose. So one thing I could do here is downsize into dips. Get my share count down a little bit so that I can keep on using that wide risk, and I won't have to risk quite as much money. The other option is if this spike really gets going and gets up into that key 48 resistance area, I could add shorts up there, get my average up, but then I would definitely have to be careful about covering dips along the way because my size would be even bigger at that point. So I watch AEMD churn here, and as long as the trend is intact, I'm keeping those two options in mind. Luckily for me, AEMD does not decide to go up to that 48 area. I don't have to deal with that situation. Instead, AEMD starts pulling back pretty hard right here. It starts snapping and now gets down into the 42s. It starts testing that low 42 area and looks like it might even test green-red again. I throw in a couple orders for ads into the weakness here, and I don't love these ads as I watch it now because if 41.5 had held and this had rebounded again, I would have had that much more size, still at a very low average, and I would have been pretty scared into a bounce, worried about what if it holds up. But luckily it keeps on dropping for me. I filled a few of my ads and I'm up to 172,000 shares now. And now it's just a matter of watching level 2. I start to cover some into this dip here because I saw 40.45 bottom out. I covered up a few shares, about 10% of what I was holding, but I didn't chase the strength. And it turned out to be a fake bounce, and now we're on to new lows again. I'm just going to keep downsizing when I see turns. $39.15 starts to stack on the bid. I threw in a bunch of orders to different market makers just above best ask at $39.2. Didn't really fill much though, only a few thousand shares. And again, I'm not chasing this up. I'm not chasing bounces trying to fill. I'm going to cover my shares into dips. And it was another fake bounce, so we went to the 38s. I try one more time here in the 38s. I got quite a bit of size off there. Now I'm down to 111,000 shares. This is me taking off into dips and not swinging for the fences, looking for the big home run short now because I had messed up my average from the start. So I just need to make sure that I'm paying myself some along the way, getting my size back down, and then maybe I'm repositioned to put those shares right back on into a good bounce. Now AEMD, the bounce gets going a little bit. We perk back up above 40. Again, I'm not chasing the strength here to cover and get out. I'm actually thinking about this bounce as an opportunity to possibly add more shares if it goes far enough. $42 is red-green. In some cases, I might use that as a resistance to play off of and try to add. In this case, I'm not going to though, because it didn't panic enough in my opinion. It bottomed out at 38. That's only about 10% below that red-green mark. So I want it to have to bounce much more off the lows when it tests the resistance level in order for me to play off of it. So I choose to pass up on ads here up in the mid 41s. Now we get a bit of pull, and now it looks like we're kind of in a channel. AEMD looks set to grind now for a little bit between this 38 current low and that 41.5-ish or 42 red-green mark, you could say. So let's speed up action a little more now while it's in this channel and it's deciding which way to break. Again, keep in mind when watching this in sped up motion that trading this in real time is different, and it's very easy during a slow sideways grind to get emotional, make rash decisions. So it's very important to know your plan and stick to your plan. Know what you'll do if the stock breaks down, know what you'll do if the stock breaks out. Decide beforehand if you want to cover any shares during the channel. We are still grinding up a little right now, but we held below 42 there. Now we're into a dip. Right back up with it, another test of the 42 area. So after holding this short for the past couple hours, are you going to get scared out? It's perking up and looking like it might go green. We had a hard pull briefly under 40 there, but it did save itself. AEMD is still hanging in there. Into this dip, I decided to take off just a little more size. I get myself down to 100,000 shares even. I covered up a little bit into the weakness. Because in the moment, I don't know which way this is going to break. I don't want to be covering that 11,000 shares the next time it perks up into the strength, possibly right near the high. So if I feel like downsizing, I will take off a little into the dips. And now we start to break down a little bit. We're back down into the 38s. Looks like we're about to test low of day. It saved the first time, but it's having trouble bouncing and now starts to crack. I slammed in some more short orders on the weakness there. I shorted as it was cracking low of day because I think this low of day crack opens the door to more panic. I think there's a chance that we can maybe get down into the low 30s for my covers. So my average is now 40.82. I have 146,000 shares. And we've briefly caught at the 36.6 area. It's got a bounce attempt going right now, so I'm just hanging around to see if we are going to get some further breakdown or not. 42 would be my new risk level here. I'd be using 42 because it's an important red-green level and because it just held as a top for about an hour of consolidation. And AEMD is still kind of hanging around, but it's still below the level it just cracked from, and it's really only a penny off of its lows. This still is not at all a strong bounce. And it remains to be seen whether or not it will get stronger or not. Again, in the moment here, it's very easy during the illiquidity to become unsure about your plan, lose confidence, make emotional decisions. One of the hardest things to do as a trader in the moment is trusting your plan. AEMD still is battling a bit in the 36s. Briefly hit a new low a day there, but it couldn't get any kind of real breakdown going. And after holding again, starts to perk up. We're back into the 37s. So it's a new mini channel right now, basically between 37.5 and 36. We get another test at the 36 low, and once again it holds. And I get tired of watching 36 hold, so I start putting in cover orders at 37 cents. Size myself back down to about 105,000 shares. So took off about a third of what I had. Get myself back to an even 100,000 now. And after I downsize that third, we finally start to break under 36 for real this time. It only fades another half a cent a share though. So I'm not getting this big panic, big fast washout that I want. I'm just getting a slow choppy fade, half a penny at a time. But as long as it's not bouncing, as long as it's not showing any kind of significant strength or reversal, I'm okay to hang in there. I just have to try to stay patient. And low 35s are getting tested now. But they held and we get a kind of strong perk there, which 36 quickly rejects. Then it puts in a higher low and gets through that 36 area that just rejected. Now I'm starting to think that maybe it is time to start downsizing more into dips. I've given my plan quite a bit of time to work, and I already have gotten a pretty nice fade down into the 35-cent area, which was yesterday's low, so it could be acting as support. That could be why we're having so much trouble here. So now I need to start paying myself along the way. So as I watch this 35-cent test, I'm realizing that if it holds again, if this support keeps on holding, I don't want to become stubborn and keep on holding onto my entire position. So I need to start paying myself a bit if this low keeps on defending. And I saw a 35 defending again. It just would not break down. I put in a couple more cover orders, but I only filled 10,000 shares. Still just one big battle around 35. But the bidders are finally dropping off some. We only have 2 market makers left on the bid, now just 1. And finally we're under 35. I cover another 10,000 shares because this 35 crack really hasn't sparked panic once again. It just is continuing its slow choppy fade. I start getting a little more aggressive about getting out some of my shares. I tried there on the offer at 35.3, but I couldn't get a fill. Yes, it's perked to the 36s now, but I'm going to keep the same mindset. I don't want to chase spikes. I want to cover into the dips, near the lows, near the areas that it turns from. Right now we're just hanging around this 36 area. I'm waiting for it to get knocked back so I can cover up most of the rest of my shares. Because at this point it doesn't look likely I'm going to get that panic that I've been waiting around for. $36 starts to strengthen. It's not pulling back. So I start smacking the ask. I decide I just want out. I got out half of my remaining shares there. I'm down to 40,000. I have some orders sitting at 36.5 on the bid. I'm just leaving those orders there. Or at least a couple of those orders there, waiting for a pullback for them to fill. They filled on that pull. I put in another order at 36.2. I'm just getting out right now the rest into the low 36s, putting my orders on the bid, waiting for them to get filled. I only have 10,000 shares remaining. Still just looking to get covered up. Finally, I just say, forget it, I'm tired of watching. Hit the offer at 36.95 and I am flat. To recap AEMD, I tried my short into the weakness early on as it was going red. It turned out to be fake, but I did not panic out. I did not get scared out into that little morning spike for the next half hour. I held steady and I trusted my risk level. Later, AEMD went red again, stayed red this time, and we got a slow choppy fade down into the 34s. That's about a 20% move from the green-red mark. And while I didn't capture all of these profits, I still wound up making well over 10% and catching the meat of the move. It wasn't easy, it wasn't ideal, but it was a high odds big picture setup and I still made it work. Let's take a look at another example where it's the first time a stock is going red after a big run. And here is AXMM. AXMM is the first successful promotion in a while by Brighton Markets, a promoter I used to follow very closely, but then they kind of fell off the grid and stopped having success. But AXMM has surprised a lot of people and it's gone a lot further than people thought it would. Not only that, but it's been on very good volume. In the past 2 days, both days have traded over 3 million shares. A lot of that probably wash trades, but still volume to be taken advantage of. AXMM is having a weak gap up this morning above its previous close of 184. And while I'm not sure that today is going to be the day for it to snap, I'm not sure if it's going to collapse or not, I am watching it very closely. I want to short it if it goes red for the first time in days, or I want to short it if it has a nice big morning spike. Part of the reason I'm so interested in AXMM short is because I know the promoter. I know Brighton Markets. I know that when their pumps crash, they crash hard. I'm confident that if this goes green-red out of the gate, we will get a nice pullback. But the question is, will they save it and bring it back after that, or will it turn into total collapse? My plan going into this morning is short if it goes green-red, let the level 2 turn at least one time where I want to see if the bounce gets stuffed or not, and then figure out my covers after that based off of what I'm seeing in the price action. So if I'm seeing that there's higher lows, if I see the chart is holding that area where it turned the first time, I'll look to cover. Or if it turns out to be a fake bounce, if it starts to have another leg down, I probably will look to cover after a nice drop and the second time that the level 2 is turning after that. So now AXMM is about to open for the day, and I'm going to slow the clock down. I'm going to watch this in real time. We gap up a penny a share. Remember that 184 is the key level that we're watching for the breakdown if it starts to go red. But right now 185 is pretty stacked up, and we have a decent sized CSTI bidder right there with 23,000 shares. The offer has some sellers, but it doesn't look too thick. So it looks like this very well could get a bit of a morning spike going. And if it does, no skin off my back, I'll attack it tomorrow. My mentality with these is the higher the better, so every day AXMM continues, I love it. Right now we have an ARCA bidder jump in and we start pushing up the price a little bit. These 186 sellers are dropping off. Had quite a few big prints go through at 186. Down to just one seller left. The ARCA bidder loses that battle though. The Mica seller wins. And he's still holding at 186. Now the COHI market maker comes in and joins him. So it's starting to look like maybe this spike is failing. But a huge ARCA bid comes in, 150,000 shares at 185. So I'm not ready to short this yet. That is a very stacked up bid. ARCA jumps back to 186, and we get another battle here between ARCA and Mica. Right now, just a sideways open, still waiting to see which way we're going to break. And the 186 sellers win again. But that 185 bid is so stacked up. But now 185 takes some hits. That ARCA bid that was huge gets cut way down. There still isn't that shift in the level 2 market makers. That 186 is not stacking up on the offer. It's still just Mica there. Now we start to see a couple more sellers come in. More hits start coming in on the bid. So could I start in short here? Yeah, I could, because right now we've failed to have a morning spike. But what I'd be worried about is if the 185 or 184 area winds up supporting, if they buy a bunch of shares on the bid, just like Mica just sold a bunch on the offer, I'd be in trouble. I'd trap myself before truly getting that green-red move. So I choose to be a little more careful here. Sometimes I will take this starter, sometimes I will be a little more aggressive, but on this one, I'm trying to wait and I'm trying to trade it when it looks truly perfect. And these 185 bidders are starting to get chipped away. A lot less size on the bid now, and more sellers stacking up at 186. So now I just want to make sure that there's nobody who's buying a bunch of hidden size on the bid between 185 and 184. That's really the main thing I'm looking at right now, is are we going to get a bunch of really big prints on the bid, even though no market maker is really showing size. But we're getting some panic prints now at 184. 184 thins out big time. So I start throwing in some orders because it looks like we are about to go red. I'm routing to a bunch of different market makers in this situation. I just want to fill whatever I can. And I'm putting it in a few cents a share below the best bid. I know it's tough to fill into weakness. I know I'm going to have to chase just a little bit. I don't want to chase too much, so I'm not putting in market orders. I'm not putting in orders down at 175 or 170. I'm just going for 180 here. 4 cents a share below red green. 7 cents a share below high a day. I threw in 50,000 shares worth of orders. I was hoping to fill them all. So far I've filled about half. It looks like panic is starting to set in because that bid just got really thin. I have 25,000 shares now from 183. This ARCA seller comes in at 175. Now we have 3 sellers at 180. We just need this 181 buyer to lift. The 181 buyer goes away. And now we are in the 170s. It's just a matter of watching level 2 for me now. Could they still save this in the 170s and rip it back? Absolutely they could. That's something I'll be able to see on the level 2 though if it starts to turn. But right now it seems like sellers are still pretty in control. $178 really stacked up on the offer there. The bid is still incredibly thin. $177 has taken a decent amount of size. It is buying a lot, but there's no reversal. There's no more buyers coming in. The sellers aren't thinning up. Next best bid below 177 is 171 right now. And we lose that 177 bidder. And now we're going to test the low 170s. Right now, 170 is giving up without much of a fight. So right now, this is classic level 2 panic. And this is a pump and dump getting absolutely annihilated. You might watch this and say, why didn't you chase Tim? Why didn't you take more size in the 170s? Really, it just boils down to I wanted a quality entry. In this example, yes, it did start tanking quite a bit. But in some other examples, in other situations you'll be trading, they might save that 170 area. And then you chased weakness, you filled near the bottom where they supported, and they rip it back on you and you have a terrible average and have to deal with a really annoying situation. But in the situations where it does tank like this, yeah, it does hurt a little bit. Say, oh man, I wish I had way more size than I do right now. But I could always add into a decent bounce if there is one. And 150s just got chewed through like nothing. We have ourselves a great morning panic here with sellers completely in control. Still down we go. Right here, a couple of bidders jump back in at 145. And it looks like we're starting to get our first reversal here. Unfortunately, I start covering my shares. Remember, I said at the start of the video I did not want to cover the first time that this was turning. I wanted to see if it was a fake bounce or not. I know that Brighton likes to do that. But already I'm out 80% of my shares that I had. I started thinking about the profits. I started thinking about the fact that this was down a lot. And I stopped thinking about my plan and what I knew and how I knew Brighton Promotions acted when they crashed. And now I put in an order for the rest of it. And it does look like it's going to bounce a little bit here. It does look like it's going to uptick. I'm totally flat. But all these sellers at 146 don't let up. And those bidders at 145 that were defending, they're slowly dropping off. Now an ARCA seller jumps down to 145. And this was a fake bounce. This was true to what Brighton typically does. When they pull the plug, they drop it hard. And now I'm on the sidelines because I didn't trust my plan. I got caught up in the fact that I knew I was up a lot of money and I wanted to take those profits. And I have to watch AXMM continue down without me. Looking at this chart now, you can see that it really was a costly mistake on my part. Because within 30 minutes of when I covered, AXMM got as low as 90 cents. Another 50 cents lower than where I had covered. And that was a 50% drop in less than an hour for AXMM. This is the potential pumps have when they are crashing. I did catch a good piece of the move still. I can't complain about $9,000 in profits, over a 20% gain. But I am very mad that I did not follow my plan. The other thing to consider on AXMM, looking at this end-of-day chart, is it had a massive bounce off of its lows. It got from 90 cents up to $1.60. And that's the kind of bounce I like, and that's the kind of bounce I typically short. And for whatever reason, I passed on it this day. So, a missed opportunity for me. But you can see the potential this holds, and the fact that even if you miss that first move, that green-red collapse, sometimes these do give you a second chance. And that bounce would have been that second chance because it had a great fade off by the close. Yes, I'm talking with hindsight now, but it is a high odds setup. You can easily base your risk around that previous closing price or the high a day or something like that. And with other OTCs that have huge morning panics, if I get a bounce like that, I will normally try to trade it, no questions asked. This last example we'll take a look at now is CTIX. CTIX is an example where I tried to play a bounce, but I did a very poor job of it. Unfortunately, I missed where I started in here, but let me break down the scenario for you. CTIX, if you look at the daily chart in the upper left, you can see it had this major breakout past the 350 area, and it closed very high, got nice and extended, a buck above the breakout level at least. But CTIX couldn't hold on today, it couldn't keep its spike going, and when it started cracking through its low a day around 445, I missed it. I didn't get the short as it was breaking down, and it panicked all the way down to 420. As CTIX caught itself, started to turn and bounce in that 420 area, I thought that it was getting sold into very heavily. I thought the bounce was getting rejected. And I chased an impulsive short. I wanted to short into the little fake turn. I was hoping it would have another leg down because I thought it still had a lot of room to come down. But what wound up happening instead was I shorted my 20,000 shares at 430, so only 10 cents above low a day. And then CTIX, it actually wound up holding on. It defended again, and now it's starting to ramp up on me, and I'm underwater on a bad early short. Unfortunately, the approach I choose to take here is I don't really think about my what if things go wrong plan. And my plan instead is just to add into this bounce as it gets higher. I still have a lot of resistance levels overhead, and I want to try to play off of those. I want to add, I want to get my average up, and then hopefully cover into a fade later or further breakdown. The angle of this trade I ignore though is I don't establish which risk level I want to play off of. I don't determine where I'm going to cut it if things go wrong. At this point, I'm basically thinking about it as I'm playing off a high a day. I'm basically putting 10% risk on my trade on something I'm already in pretty big size and I'm planning to add to. And I added a little bit there at 453 as it tried to perk through red, green, and failed, because right now that is the strategy. I just want to get my average up. Unfortunately, I'm just kind of trading emotionally on this right now. I'm not really thinking it through. I'm upset that I missed the big crack earlier. I'm upset that I took that impulsive starter down at 430. And now I'm in a headache of a situation where I need to hope that this bounce runs out of gas. And I add another 5,000 right there in the 450s again, even though it's still pushing to new highs. Even though I don't really have a resistance level in mind right now that I'm near. I'm just kind of randomly shorting into strength and adding just for the sake of getting my average up. Even if I come out of this trade okay, this is a terrible way to trade. If I win here, it's going to be completely out of luck. Because I don't have a well-constructed plan. I'm making impulsive decisions. And these are the trades where losses can really get out of hand on you. I'm 30,000 shares from 438 right now, and if I am playing off that high day, if I am going to wait for high day to break in order to cut it, that's probably going to work out to be a 35 to 40 cent per share loss. Basically about $10,000 to $12,000 I'm going to lose if this goes wrong on me. Not a situation I want to put myself in risk-wise. But what I'm hoping is this bounce gets tired, it pulls back, and then maybe I can downsize into pulls and get my position a little bit more under control. I'm watching CTIX churn in the low 450s, and right now it's still holding green on the day. It can't get back red. And we start perking up and the bounce continues. Testing the 460 area right now. It breaks through 460, but runs into a little bit of trouble here at 463, and a big seller comes in. Had that slight knockback into the high 450s, but it's still hanging in there. We're just not getting any kind of meaningful pulls right now. We're back over 460 again. I feel like 460 selling heavily. I feel like it can't get going, so I add another 5,000 shares. Now I'm up to 35,000 shares from a 441 average. So I'm only moving my average a couple cents a share with these ads, and my size continues to get more and more out of control. And I'm just hoping that since we're struggling with the low 460s, this is it. And this is going to be the top of the bounce. Also about where we snapped from earlier, before the big panic. I know I need that pull down to the low 440s to really size down and get out a lot of my shares for close to break even, or else I'm in some serious trouble. I'm aware of the situation I've put myself in. I'm aware that I could be looking at a 5-figure loss here if things go wrong. If I don't get bailed out, I'm going to have some decisions to make. Right now, all CTIX can really do is just go sideways in the high 450s. It's not spiking, which is good, but it's also not breaking down. It seems like there's a lot of sellers on the level 2. It seems like that offer is stacked up. But no one's knocking it down. The longer it consolidates up here, the more and more uneasy I get about what if it perks up? What if it starts to break through those low 460s? Then what? Then all I really have left is that 474 high a day resistance overhead. Also, CTIX isn't the most liquid stock right now, so I also have to be worried about, can I get out all of my shares if I want to? Right here, I threw in a bunch of cover orders. The panic finally caught up to me. I got too scared. I decided I needed to downsize big time because it was holding up too well. I was really worried about how strong it was, the fact that it might keep going. So I took off about half of my shares. I wanted to get my size down, so I got covered up those early 430 starters. And now I'm in 17,000 shares from 452. That's what I have left. And CTIX is squeezing right up near that high a day test. I was forced to cover into strength because I got scared. I got panicky. I knew that I was in a horrible situation. And I made an emotional decision. Right now it's looking like the right decision because it's perking up. But usually I do not like covering that close to a high a day or that close to a resistance level that I think is key. Usually I like to make it break first, and if it's breaking, then I'll get out. But instead I had to cover near the top end of a channel because I really left myself no choice. I had too much size from too low of an average. Even the remaining shares I have now, even though I got out most of those 430 shares and got my average up a bit, I'm still underwater. I'm still wondering to myself if I should average up right now, risking off high a day, if I should just get out. I'm kind of lost in the moment. When 470 rejects again, I tried to add. I wanted to get in because now, yes, we're close to a resistance level. It's having trouble. It's not breaking through. So this is more of a double top now. I filled 1,200 shares though. The fills were very, very tough. But I didn't chase it down, so that was good. At least I didn't get my executions in the low 460s and not worry about the level I was entering at. I wanted to get in as close to that 474 level as possible. I just happened not to fill in this situation. And I try again there and get a few more shares. So now I'm up to 20,000 shares from about a 453.7 average. And we start pulling a bit, testing 460. And it was that high 450s area that just held for a while and consolidated before it had that perk up. So in my mind, that's what needs to break down. So if we get under 460, I'm not necessarily thrilled about the fact that we're under the round number of 460. It's really about that 457, 456 area that I want to see snap. And then especially after that, I want that to lead to a green-red move. Get back red on the day. I have to keep reminding myself that right now this stock is green. We're back in that high 450s area. It gets weak and starts to break under a little bit, so I'm feeling better. That's step one here. It's starting to look like it's going in my favor. And I'm actually break even on my remaining shares right now. Low 450s defend though, so we can't quite get that red move yet. And the choice right now is take off into this fade for about break even, or I could hold out, hope for more dip, and hope that this stock goes red, but if I'm wrong, I risk covering higher and having to take additional losses. We've only tested this green-red area once now, so I am going to hold out for a bit longer, give it one more chance to break down at least. If it keeps grinding above red-green, I think there's pretty good odds I get squeezed later. It goes back to the highs of the day. So this dip right here, I'm hoping finally gets through. But so far it defended again. 454 took a couple hits and then 455 jumped in to protect it. And the magic number really is 450, so this isn't even getting down to test that level. It's still got plenty of cushioning in between. Sellers start stacking up at 455 again, so again, I'm hopeful that we're about to get that breakdown. And right now it's just kind of stuck in sideways in the low 450s. Then the offer starts thinning up, we uptick, and I start taking off. I want to try to get out of these shares for only a few cents a share loss because it's just not breaking down, and I don't want to use that high day risk anymore. I've only filled 800 shares so far though. The getting covered into strength has been really, really tough. I leave my orders sitting on the bid because I'm hoping this will dip back down, fill them, and then I can just be done. But because I have them on the bid is showing a lot of size. So I cancel out the orders, hoping that if all the buyers on the level 2 disappear, which are my buys in reality, that'll cause it to dip back down a little bit under 460, and then I can just smack the ask and try to fill again that way. So far so good. We're back under 460. I should be trying to cover here, but I'm falling into that mental trap of saying, oh, but now it's fading. What if it's about to go my way? And finally, I throw in an order to cover some at 460. And that dip does wind up setting a higher low. We don't get a 454 retest. We stall out up in these high 450s again. After my first cover, we do get a little bit more dip here. We're back to that mid 450s area retesting. 455 starts to get chipped away a little bit here. Still 5 cents a share above that green-red area though. And it recovers and comes right back. And I start trying to cover more shares again. I'm covering into these dips for as close to break even as I can. Because this just will not break down. And this is a stock that is green on the day now, and it's holding green on the day. Again, though I waited for strength, I filled 200 shares. I wanted 5,000 there. So that was part of the frustration with CTIX, is I just could not get fills. I try here with an order at 462. And I put in another order at 464. I just start smacking the offer. And my emotions are really boiling over at this point because I just want out and I can't get fills. And that's very frustrating to me. It's especially frustrating because this has been an all-around sloppy trade. Again, we briefly dip right back under 460. And it held again. I tried to cover some more at 460. Again, could not fill. Now CTIX is starting to look like it's ready to perk up. As it's pushing in these mid 460s here, I put in a market order for the rest of my shares. That's how frustrated I got. I put in a market order. I canceled the market order because it spiked without me and I wasn't getting the fill anyway. I couldn't even fill with a market. So I don't chase the spike up to 470. But this next dip I'm absolutely watching and I'm just saying, get me the heck out. I try again with a market order through a different market maker this time. And this time I'm filling and I'm out at 470. So I'm out right near the high of the day. Top of the channel. Total emotional cover at the end there. End of day chart here, just for your reference. We did wind up breaking through that high of day. It got up to 480 though. It didn't really squeeze and then faded off into the close. So they took complete advantage of my emotions. They made me cover into strength. I just was totally frustrated and not thinking clearly because I just made mistake after mistake after mistake. While this was, in a sense, me trying to short into a bounce, it's an example of me doing a very, very sloppy job of it. Because my starter, again, was right near the bottom of that panic because I gambled and I hoped that the level 2, as it was trying to turn, I hoped that it was a fake. I hoped the bounce was fake, but when it wasn't, I got caught. And it was that starter that led to all of my problems on CTIX. It was my decision to add in randomly into strength with no real plan and the $7,500 loss I wound up taking was much deserved. Let's wrap up by going over a few of Chapter 7's key takeaways. In order for me to want to short one of these OTC setups, there has to be overextension on the daily chart. That is what gets my interest, whether it's a pump and dump or not. I want the stock to be nice and overextended. I want it to be up a lot. I want it to have room to come down, because when it comes down, usually it comes crashing down hard. There are many different setups I will play for this. Shorts into strength, green-red breakdowns, or even bounces. Those are my favorite intraday shorts to take on these daily overextended charts. While I wish I could have dedicated multiple chapters to these setups and shown you multiple examples, unfortunately, the opportunities are becoming less common because there are fewer and fewer OTC runners. At this point, I may be finding a play every few weeks, but the OTC market, it does tend to operate in cycles. So maybe down the road, we'll have a burst of plays again, similar to the marijuana craze in 2014, and then there will be plentiful shorting opportunities on overextended charts. But when shorting these plays, just remember not to get stubborn just because it's a pump. When these get running, sometimes they can run further than you think. That stubbornness is a lethal kind of thinking. I've seen all kinds of crazy OTC short squeezes, and I'm sure I will see plenty more in the coming years. Just because fundamentally the company is a disaster does not mean it has to come down. That stock will keep running as long as the manipulators are in control. From Chapter 8 and onwards, we're going to shift our focus a little bit from OTC stocks now over to listed stocks. And Chapter 8 begins by focusing on buying major breakouts on listed stocks. It really is a similar strategy to buying OTC breakouts. A lot of the things I do are the same. I look for a daily chart where there's a major resistance level that's held for 2 days or more. I make sure that there's no other major resistance level somewhere close by overhead that could stuff the move. So I want to make sure that there's room to run when it's breaking past that key resistance. But the main factor I consider, and I do look at it more with listed stocks than OTCs, I want there to be very, very large volume compared to past days on the daily chart. And it also has to be one of the very volatile stocks for me. I'm really looking for the situations where there's a stock that had good news, had a big run out of nowhere, and then after a few days, set up for a second leg up. There will also be listed breakouts you'll see, where it's just a nice slow climb up on a chart that has pretty consistent volume, and that's great. Maybe this strategy will work there too, but that's not an area where I focus. When it comes to trading these intraday, again, pretty similar to OTCs. Any time of the day, I will buy the breakout. It could be morning, afternoon, midday, whatever. I'm interested because it is a major breakout on the daily chart. But my one exception is I don't want it to be into a straight up spike. If the multi-day breakout does happen on a straight up spike, I won't buy it. Usually what I'll wind up doing is waiting for a pullback, waiting for a little bit of consolidation, and then if that new high can break again, then I'll jump in. If I do buy right on the breakout, I will set my risk based off of a prior intraday support. I'll find where an earlier dip held and I'll use that as my risk. And as the breakout develops, as we head higher and higher, I will move my risk level up as we go and as new support levels form. But in a lot of cases, I don't make it very long with these. I sell along the way into strength. I am impatient. On the long side of trades, I'm just usually not as comfortable. This multi-day breakout for listed stocks really is the only long setup I will buy for listed stocks right now, just because it's the only one that makes sense to me and it's the only one where I feel somewhat comfortable. But because I am a little skittish on the long side, in a lot of cases, I do not hold these long. I do not catch the entire move. Sometimes I don't even catch the meat of the move. But they're volatile enough that I still make good percentage gains. Let me show you some examples now of what these daily chart breakout setups look like, starting with CANF. CANF was promoted by a newsletter that actually pumps listed stocks sometimes, and it had a great spike on day one from 250 all the way up to 430 high. The next 2 days, CANF managed to continue holding up. Even though people expected it to gap down, expected it to fade off, it still hung in there. And all 3 days, it had spikes that topped out around the same area, right around that 430. Third day, yes, it did dip red for a little bit, but it recovered and it still managed to close green. So we had this very clear resistance level here of the 420 to 430 area. And even though there is no red candle here, I still do consider this a multi-day breakout because it is multiple days of the same resistance level holding. Once we got the breakout, the result was 1 day of squeeze. Ripped all the way from 430 up into the high 5s before fading off intraday and closing in the 4s. It didn't run for multiple days, but it still was a great spike on that first day, a great squeeze, ran well over 30% from the breakout level. One thing I remember about this CANF play is that I was actually short before the breakout. I was short knowing about that breakout level, knowing that I had to cut the loss if it broke. And once it broke out and I ate the loss on the short, I did immediately transition into a long and I made back a decent amount of money on the long play. Next, here's RADA. And RADA, this is similar to CANF, where you had a big spike on day one with a big fade. It topped out about 330, closed well off of its highs, but that second day it still gapped up, it still retested that low threes area. And here we have a pretty key multi-day level, 330 that's held 2 days in a row. Day 3, we busted through 330, got a really big squeeze, got all the way up to 6. Unfortunately for me, I was in no position to play this long because I was nursing a stubborn short. I somehow found myself short in the low threes, trying to play off of that 330 resistance, but when it broke out, I stayed stubborn, I wouldn't cut my loss. And I went on a crazy ride. At one point, I was down almost 6 figures on my RADA short. Instead, it turned out to be LAKE later, and we'll talk about that one later in this DVD. But point is, when it comes to breakouts, they're not only good for just buying, but they're good to notice if you're short a stock because it can save you from having to sit through a crazy squeeze. Not all breakouts are always successful though. Take a look here at ACHN. ACHN seems to fit all the major requirements. Had a big gap up and run out of nowhere a couple days in a row where it got up to 8. Had a few days of fade and consolidation after its high near $8. Had massive volume these 5 days compared to previous days on the chart. But down the road when that $8 breakout came, we really did not get any kind of a squeeze. Even if you had tried to be patient and give the breakout time to develop, it never really ran. So this is where the rules come in. This is where knowing where to cut your losses comes in. You'll see later in this chapter from my live trades that when I'm in a breakout that doesn't work, I usually take very small losses compared to the gains that I take when they do work and I am successful. And ACHN is probably an example where I would have wound up cutting it for a loss. Next up, let's look at DGLY. And DGLY is kind of unique because it didn't have just one big run, but 2 big runs that topped out in the same area. This first run back in July, the initial spike topped out near 950, and then the following day set a high that was just below that 950 mark. And then we had nothing but fade for a while, and volume dropped off, and everyone forgot about DGLY. Fast forward to August, and DGLY starts running again. Part of the reason DGLY was running was because it was in a very hot sector at the time. This was during the Ferguson shooting and the protests and all of that, and a big push for body cameras, and DGLY was running because it was a camera company. Its first 2 days of run topped it out around $9. It pulled back, and then started to build back up towards that $9 level again. So now we're not only playing off of this $9 level from this run in August, but we're also thinking back to July, the last time there was massive volume, and it topped out in the 950 area. Following day, DGLY broke out, got past that 950 area, squeezed all the way up to about $14 and closed at $12.50, and then the following day had a very large gap up and traded as high as 16 at one point. I unfortunately was on the sidelines for this one. I just watched it. I kind of froze up and was scared. But it was another example that taught me the potential of these breakouts. And DGLY, it wasn't even done there. After it topped out up in those 16s, we had another couple of days of consolidation. It looked like it was getting weak. It looked like it was pulling back after another red day. But then it had another big gap up, a nice green candle, set itself up again to potentially break out past that $16 area. And when that second breakout happened, we had 2 more days of squeeze, and we eventually topped out up at $33, almost a 100% run from that second breakout. The higher these things go and the more times they break out, in a lot of cases, the more twisted short sellers are going to get. The more times you're going to see stubborn shorts getting absolutely crushed. And that's part of the reason this last breakout squeezed so much. Is because all these short sellers that thought the move was ridiculous and had been stubborn for so long through the move, they finally get blown out on this last breakout. Breakouts like this $16 one on DGLY are usually the ones where I'm just too scared to play and I wind up missing it. Really just because there's still that small part of me that's afraid that it's just up too much. But like I said on the RADA example, even if I'm not using these breakouts to long, I can still know I sure as hell don't want to be short if one of them come around. On to another example here, ROSG. ROSG has the crazy volume out of nowhere, a triple top around $8, and although there is overhead resistance here at about $9 on the daily chart, if you look back a little ways, there was no volume traded on those days, so I'm not really all that worried about it. I'd be a lot more concerned about that $9 level if these 2 days had traded major volume, but they did not. One thing to note with ROSG here is after its big first run where it topped out just under 8 and then 2 days of consolidation, the day 4 it had a big gap up and its spike actually looks like it did top out just above $8. So it did get above that day one high. And maybe that's a move I bite on. Maybe that's a play where I do take a loss because it did get stuffed and it did fade back into the close. You can tell by the candle there that the closing price was down in the 7s or high 6s. So closing that far off the breakout level, I'm sure that I would not have still been holding overnight. But when this sets up again, when the following day, it gaps up a little bit, spikes up, tops out just under 8 again. Basically, I can use that day 4 high as my new breakout level. And it still pretty much looks like a triple top on the daily chart. So the next day, when we break past it, I can try again long, and this time it works absolutely insanely well. Gets up into the 24s 2 days later, and then eventually has that big fade on day 2. It closed around 16 or 17. So even with ROSG, let's say I take a 50 cent a share loss on that day 4 where it does a little fake out breakout past 8, that's fine, no skin off my back, because 2 days later I'd be buying it again, and I'd be making at least $1 a share on that even with my crappy patience. So just like with OTC breakouts, keep in mind that we are looking at daily charts right now. We are seeing days worth of trading information in an instant. So when these play out in real time, when you're looking at these on intraday charts, it can be a lot tougher to hold patient, especially through dips. And especially on the ones where it feels like they are up a lot already and you don't know how much further they could possibly go. And that's why in a lot of cases, I am taking off my profits into spikes. And you'll see a lot of examples coming up where I'm selling my breakouts way too early. So let's dive into the live trades now and get a look at some of these plays as they develop. First up, let's take a look at CUBA. Start off by checking out the daily chart. A few days back, CUBA had some sort of news that excited shareholders and volume exploded. It ran from 750 all the way up to 1005. It traded volume unlike anything we'd ever really seen before from it. The second day, it consolidated mostly, closed a little bit down on the day from where it opened. Didn't quite retest that $10 area, but also didn't break down, didn't go red. Now today, on day 3, we are flirting with new highs. In fact, we actually already set a new high today. Take a look in the lower left-hand chart here, the intraday 1-minute chart, and you can see that that break happened early in the morning. CUBA opened up with a morning washout. It got down as low as 935, and then it had this straight-up spike. In about 10 minutes, it went from 935 up to a high of 1005. And that's a good example where I will not buy into a spike. I thought that that move was too much too soon. So I did not buy as it was breaking past 10. I wanted it to pull back. I wanted it to consolidate a little bit more. And that's exactly what happened. Now, after a couple hours of consolidation, we are building back up. We're nearing that $10 level again. And it looks like we may get that breakout soon. So I'm not buying in anticipation. I'm sitting back, I'm relaxing, and I'm waiting until we break past 10. And once we get that 10 breakout, I'm going to try to long. Buying in anticipation, it is usually something that I struggle with a little bit. I see what I think is a breakout setup forming, and I want to get in early. I want that 20 cent a share better average. There definitely is a part of me right now that wants to be longing into dips, risking off that 935 or 940 area, places where previous pulls had held. And I'm not going to say that this strategy is wrong. I'm not going to say that you should never do that. I just know that it isn't right for me. I know I'm not as comfortable when I do that. For me personally, I am better off if I just wait for that breakout. For you, it could be an entirely different story. I think the play becomes much higher odds though once that breakout occurs, so that's why I try to wait for that. And all of a sudden here, Cuba is perking up, and it just blew through 10 just like that. A very, very fast move. I pretty much missed it. I have to react late. I put in a 10-10 order, and I'm trying to fill 5,000 shares, just get a piece. I filled about half so far. And I'm not chasing this spike. I don't want to panic and get in at any cost. I'm trying to be patient. I'm trying to wait for pullbacks. So since it just broke through 10 and it's already 3% higher at 1035, I'm not buying up there. This first pullback here comes back down to about 1020. 1020 holds pretty well there. Now we perk back up and we're back near the 1035 high. And now on to new highs of the day, 1040. So far I haven't gotten the kind of size I want. I do have a little more in another account that I'm not filming right now, but in my Speed Trader account, I wanted a decent amount of size, and I only have 2,400 shares. But I'm still not chasing. I'm keeping my average comfortable. I'm trying to give myself a chance to hold this for a little while and let the breakout play out. And it is struggling at 1040, so I'm hoping we get our pullback now and retest that 1010 or $10 area. I don't expect it to go straight up. I think there'll be some choppiness at the beginning. I think it'll need to consolidate a little while before it sets up for another leg. But now that it is over that multi-day breakout level, I will take advantage of dips. I will build up my position. 1020 held again there though on that last pull. So far 1020s are defending. This is a spot where I could be buying into these dips and risking off that 1020 area that has held so far. But I'm really trying to be precise with my entry. I want to have as comfortable of an average as possible. I don't want to feel like I'm in from too much above the breakout level, because then that's going to make me more panicky. That's going to make me more likely to sell at bad times. Right now, it's just kind of a slow sideways consolidation in the 1020s. Another test of the low 1020s right now, but still no breakdown, no further fade. And I would be scooping up dips in a heartbeat if we did get that fade. My risk on this play right now is probably about the 970 area, where that last pullback held. I'm going to give the breakout a little wiggle room. I'm going to give it time to work. If I lose 30 cents a share, so be it. Yet another 1020 test right now. But still can't get back down to that 1010 where the rest of my order is waiting. Ask yourself, during this consolidation, during this choppiness between 1020 and 1030, is this an area where you would have trouble holding? Would it be tough for you right now in real time as the minutes tick by to wonder, is this breakout failing? Why isn't it spiking more? It's much easier than you think to get bored out during consolidation and just lock in those gains that you have while you have them. But CUBA perks right back up and suddenly we just hit a new high of the day. So it's starting to look like I may not get the dip that I want. With how well 1020 is holding, maybe not quite yet, but down the road after a little bit more consolidation, I might think about moving my risk up to 1020. CUBA is still looking plenty strong. And it's really starting to rip now. Into the 1050s. I'm already up over 5% of my position. So this is about the point where I would move that risk level up to the 1020 area. And I did just cancel the rest of my buy order because now it becomes clear I'm not going to get that dip. And if I did get that dip, I don't know if I would want it anymore. We held 1020 for a while, and now we're getting that next leg up. So from this point on, I think 1020 should hold. But because my risk is now 1020, that's great, because even if things go wrong, even if this breakout somehow completely reverses and fails, I'm still going to be taking it off for a profit. Cuba just keeps on trucking. We're now in the 1080s. Or at least we briefly were before a seller knocked it back. But we're almost $1 a share from that breakout level now. Here I decided to take off some of my shares. I actually put it in order for all of them. So far I've just filled about a third though. My order is at 1075. I wanted it into that strength. If we get a rebound back up now into the 1070s, I will be filling the rest. Just a penny away from the rest of my sell order right now. I canceled and moved it down a little bit. I wanted to sell into that pop, so I got myself down to 1,000 shares. Filled a little bit more at 1070. A little bit under half of what I started with. It was a hard pull from 1080 down to 1050, so that rebound back up, I want to be selling into that push near the high of day. I can always rebuy lower later. I executed another 100 shares there. I'm down to 969 shares. And all these sells have been within about 12 cents a share of the high of day so far. There's a big seller sitting at 1070 right where the rest of my order is. This is one of those situations where the big seller, you would think that would scare it down. But the 1060s and 1050 area, it's hanging in there pretty well. I definitely noticed that. And that's why I canceled the rest of my order right there. Because I'm starting to think, okay, if that big seller isn't getting this to crack and break down more, if that can't make it snap under 1050, well, if it gets taken out in a minute, we might spike and be at new highs before you know it. Now we have another big seller at 1065. So when I'm seeing this, it just feels to me like someone's trying to hold it down. And maybe it's a short seller who got themselves trapped. So they're using big size on the offer so that they can cover some of their shares on the bid. Ooh, but now there's a little bit of crack. Dip it under 1050. I don't sell into that weakness though, because that 1050, that's not my risk level. My risk level is 1020. I'm not going to sell into a random fade. Part of the reason I locked in some profits is because now I can be patient with the rest of the shares and give them a little more time to work. After that 1050 crack, the 1050s did reclaim. We are holding 1050 again now. And where did those big offers go? We just upticked and the 1065 offer was gone. The 1075 offer was gone. And people see that, people realize that now that those offers aren't there anymore. And all of a sudden we're flying up. We're right back to the high day. And now we're at new highs. We start battling a bit here in the 1090s. We're about to test the next round number of 11. So I sold my shares there. I sold in the 1090s just because I didn't know how 11 was going to react. I wanted to take off the rest into a spike. I made 7% though, and that was trading this very, very conservatively. End of day, you can see just how conservative it was. Cuba got all the way up to 1185 on this day, so I really only caught about half the move. The next morning, Cuba actually headed even higher, although it did gap down first, so if I had held any overnight, I know I would have gotten shaken out by that. But the breakout eventually did top out just a few cents under $15. So on a breakout move that ultimately ran almost 50%, I only made about 7% on this trade. I left a lot on the table. But that was a conscious choice by me. That's the style that I tend to trade these. I play conservative, I take the safe, predictable part of the move, and then I move on to the next setup. Or I look to short these as they get more and more extended. We're going to take a look at VGGL next, and VGGL is a stock that I had actually taken a loss on early in the morning trying to short it. I was trying to short based off of this resistance when I thought the gap up was too big. The resistance I'm looking at is the 454 high from about 2 weeks ago. Right here on the chart where I just drew the line in. And this morning, yes, it had a straight up spike to 455. I did not buy into that spike, but now as it builds back up, I am interested. Right here, I start throwing some buy orders in. I wind up with 12,000 shares at 460 to start. So far, we spiked about a dime through that breakout level, got as high as 466, but now it's struggling in the 460s a little bit. I canceled the rest of my buy because I'm hoping this is going to give me a dip back down to 455, 450, something like that, and I want to add into that dip. $466 tests again, but it soaked one more time. And now we're back into the 450s. Had I stuck to my plan and continued buying into dips, I'd have plenty more shares right now. But instead, I kind of chickened out. In the moment, I got a little bit scared that 466 had held twice there. And for whatever reason, even though my strategy focuses around on buying these things near the breakout level, focusing on the big picture, this is just one of those cases where I got a little bit uneasy. And it does happen to me sometimes too. I see the breakout acting weak in the moment, and I get worried about it, forgetting the fact that breakouts tend to work over hours or days, not in the first 5 minutes. They don't just go straight up. I'm using about a 435 risk right now, where that first pullback from the first couple minutes of the day held. So it is only a 25 cent a share risk. We did dip back under 450 here, and still I'm not adding into this dip for whatever reason. I decide I'm content with my 12,000 shares for now, and I'm just going to sit back and try to stay patient and stick to my risk level. Pretty quickly, VGGL recovers. We're up to new highs of the day, and now starting to look a little more like a breakout that we're used to. I'm thinking about that 445 area as my new risk. Again, where the last dip held. The longer we consolidate and hold above 445, the more confident I am in that risk level. For now, we're holding the 460s very well, though. And we actually perked up to another new high a day there. So far, this VGGL breakout, it is fairly choppy. The trend is holding, though. We're still getting higher lows. That time we dipped just under 460 and held. I am showing signs of my nerves, though. I briefly had a sell order in there at 465, but then I canceled it. So you can tell I'm definitely a little skittish about this one in the moment. I don't like the choppiness. I'm wanting that instant gratification of the breakout just going straight up, but I'm not getting it, and it's making me restless, especially after that loss I took earlier this morning shorting VGGL. I don't want to have another loser here. That high 450s area is holding well for now, though, on VGGL. Just a nice sideways choppy grind. But now it starts to roll over a little bit, and we're about to test that last support area, that 445 area. And that is where my risk is, and I'm hoping I don't have to take this off for a 15 cent a share loss. Because if that breaks down, I will feel like that this breakout setup is not working. and I will need to cut my loss and I will need to move on. So far, so good. And now VGGL is starting to perk again. Back into the 460s. Right now, VGGL just continuing to be choppy. It's kind of stuck in a bit of a channel right now, between 445 and 474. The longer this consolidates, the more I think that if or when it breaks 475, we really should start to speed up towards the upside. Or on the other side of the play, if we lose that 445 level, I definitely need to be done. I take advantage of the channel though. I used that last dip to add a couple thousand shares more. I'm now up to 15,000 shares. My average came down just barely, not too much at all. I think that execution was 457 or 458, somewhere in there. But it is an add towards the lower end of the channel. Just got myself up to a nice round number, 15,000 shares, and I have my risk at 445, and now I'm just going to sit back and wait. I'm either going to be right or I'm going to be wrong. And right now it looks like I'm going to be right because VGGL, we're at new highs of the day. Although once again, it's another weak high of daybreak. It went 3 or 4 cents and then got smacked right back down briefly. So I am getting the feeling from this that every time it tries to perk, it's getting sold into. We battled in the 470s for a while there, and now starting to strengthen again, and we are through 480. So hopefully this is the start of the speed up. But again, very quickly, knocked right back under 480. And we start to pull a bit harder now into the 460s. I'm doing my best to stay patient and let this nice multi-day pattern play out, but it is not making it easy for me. After all this work, we're only 15 cents a share above the breakout level. I'm only up 10 cents a share on my position. But even though it's not spiking well, dips are still doing a good job of holding. After a long fight in the low 470s, we do start to get a strong perk again. Looks like we're about to challenge that high a day. And we'll see if this grind speeds up or not. I start selling my shares here. I tick off a third at 485 because I'm getting really tired of these weak high a day breaks. And round number $5, that resistance is looming overhead. Those round numbers definitely tend to be psychological points, and if this is having as much trouble as it is with high day breaks in the 460s, 470s, 480s, I figure it's going to have a very tough time up there. And I actually took off another third of my shares. I'm down to just 5,000 now. Out 2/3 in the 480s. Since I've locked in 2/3, I can be a little more patient with this last third. I have paid myself some. As long as trend remains intact, I will sit back, I will relax, I'll give it a chance to work. Get another perk back up towards the high day at 488. But 480s seem to be selling strong, and now down it comes. We're back into the 470s. Not too hard of a pull yet, holding up in the mid 470s. But that perk attempt couldn't even get back to 480. Now it's only holding mid 470s because there's a big bid in there propping it up. And I'm starting to wonder, is that big bid just so the high 470s can sell more shares? 475 gets smoked. And it started to have another leg down there. Suddenly this is not looking like very good price action. It is still holding on to those 470s, but pops keep getting sold into. Now we crack under 470. And we're under that area where pulls were holding around 10 o'clock, 15 minutes ago or so. So this is starting to feel like a momentum change. I'm not chasing the weakness here. I'm not getting out these last 5,000 shares at any cost, but I'm definitely noticing that this is weaker and this trend is starting to change. We just had our first significant lower low. We perk back into the 470s, and I have a sell order in at 473. I'm looking to get out the rest of my shares into this perk. I want out into strength. I couldn't get a fill, so I move it down a little bit to 471. I fill all my 471 sells, and I'm now flat. The good news, though, is that I went from red on the day to green on the day from that position. And my average exit was probably right around 480, so I only made about 4% on this trade, maybe 5%. Nothing great. End of day chart here, though, it turns out my sells weren't all that bad at all. That 4 or 5% gain, that was about as good as it gets, because after I sold, VGGL totally broke down. So I would categorize VGGL as a failed breakout. And that is one of the nice things about the times when I am impatient, the times when I am just kind of taking profits when I have them. Because if it does turn out to be one of the fake breakouts, I'm protected. Chances are I've paid myself at least some already, and I still get out of the trade somewhat green. Obviously, I wish it had been better. I wish it could have gone to 6 or 7 for me, but they're not all going to work like that. They're not all going to be great. And despite this being a subpar example, I still got out okay. Now we'll take a look at ARRY. I was watching ARRY because of the 801 breakout level. I thought that if we got through 801, there was potential for some nice squeeze and another leg up. ARRY had that massive volume on the daily chart I look for, had a few days of run, and now has had about 2 weeks of consolidation since it peaked out at that 801 level. So as ARRY has slowly built back, I'm watching it this morning at open because I know it's only 15 cents off of that breakout level, and I think there's potential for it to bust through, and I want to be there buying when it does. If I have one reservation about ARRY, it's the fact that volume has dropped off so much while it's been consolidating. But I do expect if we break through 8, volume will pick up. Right out of the gate here, we start testing $8. ARRY opens at 780 and just spikes straight up. It busts through, and I miss it on the break. It goes a little bit too fast for me. Yes, it's a straight up spike, but percentage-wise, it's 2% up from the open, so that's not crazy to me. On the poll here, I put in a bid at 802. I want to get filled as starter. And I get my 10,000 shares at 802, so now I am in. I know my risk is going to be about the 775 area, so right now with my 802 average, I'm risking just under $3,000. I decide I'm okay with risking a little bit more on this setup, so I did put in another buy order here, another 5,000 shares right at $8. I'm using 775 as my risk area because it's the previous closing price. So as long as we're green on the day, I want to stay in. If I get filled this, I'm in 15,000 shares from a little bit over 801. And if my stop loss gets hit, I'll be losing about 37 or 3,800 bucks. A very acceptable risk to me on a setup that I like very much. Think about it in terms of percentage. I'm basically risking 3%. I do have my full 15,000 shares now, and ARRY is just being a little bit choppy. So far, it's held that 8 area pretty well. But the initial high of 815 is also held. I know this will be choppy early. I know it's not going to spike straight up. That's not how breakouts work. So I'm just sitting back and giving it a little bit of time to work. If I'm wrong, I'll respect my stop and I will get out. ARY starts perking up, and it starts hitting a new high a day here. We're up to 818. And for now, it's stalled with this 818 level. Watching the time and sales tape, 818 is taking a lot of hits, but it will not lift off the offer. So after that 818 stuff, we get a kind of hard pull. Right back down into the low 8s. I'm trying not to let these little dips and shakes scare me out though. With these multi-day breakouts, I'm always trying to keep big picture in mind, and I really am trying to respect my stop loss, think about that area, and not sell into random weakness otherwise. However, ARRY now starts to pull back a little more severely. It breaks back under 8. And here now we really fell into some panic. We hit down at 777, a new low of the day. So this is not at all looking good. This is not what we expect out of multi-day breakouts. The only reason I'm still in is because my risk was previous close green-red at 775. So we just missed me stopping out by 2 cents a share. Now comes a little bit of rebound off the lows. And I take advantage of this rebound to downsize a little bit. I've taken off just about half of my shares so far. The reason I'm downsizing is just because that was such a severe crack and that just felt so wrong to me. So I don't want to be sitting full size in this still when it is not at all acting like a breakout should act. I'd rather sell for a 10 cent a share loss into a pop than a 25 cent a share loss into panic. But now that my size is down and I'm at about half size, I am willing to give the rest of these shares a little bit more time. I downsized in order to stay patient with the rest. If AROI starts to strengthen and recover and it keeps on holding green-red, I can always add those shares back later. As for this last batch of shares, I will risk it down to my stop loss. AROI starts to have another perk here, and it is showing some signs of life. Back into the high 790s. And we've really sped time up here, so just keep that in mind when watching. Another severe dip out of AROI here, but again, it holds that low area. So I do have a very clear risk here. And although it's acting very weak, although it looks like it's about to crack, like things are about to go wrong, I'm not selling in anticipation. I'm waiting until the crack is just about to happen. So far, the breakdown actually does not happen. We keep having dips down into that high 770s area, but they keep on holding. And my hope is that if these dips hold enough times, we'll eventually get that perk back up, and this breakout will continue on its way. Another round of dip here from ARRY, but another hold in the low 780s. Despite dip after dip after dip, I am never panicking out into this weakness. I will only hit weakness if my stop level is breached. We're back into the high 790s now, and we just briefly tested 8. So it looks like we might get back above that breakout level. Although ideally I would want us to be above that 818 high from this morning. That's where momentum might catch again and we might start getting some squeeze going. Right here at 795, I decided to add my shares back into the dip. Because I feel like this is starting to curl upwards. It is strengthening. So I will take my shares back because it has held the low so many times and I can keep on using that as my risk. I'm slowly filling at 795 and I'm fine. I'll just leave my order in there and wait until it's entirely filled. And right there I get the rest. So I'm back to 15,000 shares. My average is in the high 790s. I'm down $600 on the day so far on this. But it has the feel like things are about to start going in my favor. And as I'm watching it grind, as I'm watching it consolidate here, I decide I'm going to move my risk level up. I'm now going to risk off of the low 790s because dips in the low 790s have held the past 2 times. If we can't get the perk through 8 now, if we can't get back towards that high of the day, if we lose that low 790, I'm pretty sure it's just not going to work. And then I need to give up on this breakout play. So I do adjust as I go. ARRY finally starts to break in a direction, but unfortunately it's the wrong direction. We're back down into these low 790s and it looks like that new support level of mine is about to crack. Down at 790 now, and I sold it all out right there as 790 cracked. I got executed at 790 and 789. I lost $2,000 on this play. End of day chart now, you can see that ARRY did get as low as 773. So it did break below that 775 green red mark. Had it not sold up when the 790s were cracking, I would have been out as 775 cracked and I probably would have sold exact low a day at 773. So I did save myself some money there. Between my initial 15,000 shares I bought and then the 7,000 I had to buy again to add shares back on, I had 22,000 shares of ARRY total. I lost $2,000 on that trade, so I lost under a dime a share overall on a breakout that did not work. I will take a 10-cent a share loss time and time again on this setup because when I win, it's going to be for a lot more than that. One more thing to note about the end of day chart here, ARRY did rip back after that green-red move. It was a fake move. It came all the way back. It got above 8 and closed right around 8. Sometimes that happens. That's just part of trading. You're going to get faked out sometimes. Do not let the fake outs keep you from cutting the loss the next time. Recoveries like ARRY are pretty rare, and I would much rather take a loser every now and then, but respect my rules, than fall into a pattern of holding and hoping that it will be one of the weird examples and it will come back. So ARRY was a dud. VGGL didn't work all that great. Cuba's the only great example we've seen so far of a multi-day breakout, and I minimized big time on it. I really didn't get much size at all. So how about CYTX? I'm watching CYTX very closely because this last run it had a couple of weeks ago, its spike topped out at $1.42. It had major volume during this run, much more than anything it's ever had before, and while there are still a lot of overhead resistance points on the chart, I do think that a 142 breakout could run up until 175 or maybe $2. Some upcoming possible resistance points on the chart. So pre-market here, as we are gapping up, I'm watching CYTX for that 142 break. I plan to buy on the 142 breakout if we get it, and then I will either risk down to green-red, which is 135, or some other intraday chart support that gets set beforehand. So here's market open, and we do open just below 142. $142 does get tested here. It looks like it's going to break, so I start buying. I took 20,000 shares right at 142. And now we're starting to uptick and spike. I went a bit small at first just because that 142 wall was still there. I wanted to make sure it was going to break before I sized in. Now that it's broken through, I plan to add into a dip. Right now it seems like we are getting a bit of a dip. So far holding just above that breakout level though. I get a little bit skittish about my ad here. I just want to make sure that this test holds. Usually I am better off though when I just force myself to buy at the price. My mentality really is if I was willing to buy into the strength, I should be willing to buy 5 minutes later into the weakness. It is a big picture setup. But every now and then I just try to be a little bit too precise. I try to get it down to the perfect penny on my entry. So right there I did throw in 10,000 more shares at 143, and now I'm up to a 30,000 share position. Just over a 142 average. CYTX has some big bids showing, but so far isn't quite getting that push back up towards the highs of the day. Now making another attempt. So far so good on this. For now, 141 is held as the pull support. If we consolidate for a while up here, I will start using 141 as my risk. I'd say about maybe half an hour or more is my general time frame on something like that with moving my risk up. If we start to crack and fade off, though, I am going to just continue using my general idea of that 135 area or low of day. $147 did reject again. So we have a little bit of a double top situation at 147 now. It just sort of seems like we're trading in a channel. We start to break down a little here. So I'm not panicking out here. I'm not selling at 141 because we're 9 minutes into the day. Even though 142 is the major breakout level and it was supporting for 5 minutes earlier, that's not the main support I want to go off of. I'm going to give this breakout a little room to breathe. So far, I'm not getting the squeezing action I was hoping for. Despite the dip under 142, though, it did just reclaim. It is starting to try to push back up a little bit. So right now, just choppy. And sitting through this consolidation, especially in real time, sitting through this choppiness, that is the hardest part of these plays. I know I've said that before this chapter, but it is true and I want to keep reminding you of it. When you have that money on the line, when those emotions are kicking in, or maybe when boredom is kicking in, can you stick to your plan or will you fall into impulsive decisions? CYTX really does seem to be trying to perk here, but so far just cannot do it. But until there's a trend breakdown, I have no reason to sell. Big offer comes in at 143. And that started to scare me out. I saw that huge offer, and I sold half my shares at 141 and the rest here on the bid. It started to crack, it started to break down more. So that was, in a sense, a panic sell because I didn't stick to my risk. Yes, it's not doing what I wanted. Yes, it just cracked another support, but it's not the key support I wanted to play off of. All in all, I lost just under 2 cents a share on that trade though. Lost 500 bucks. For a breakout that I felt like wasn't working, that isn't bad. Now checking the end of day chart, CYTX totally failed, completely fell apart, washed out all the way down to a low of 112 later in the day. Now that doesn't mean that my sells were good. I do not like my sells in this example because I did not stick to my risk. I took off while the chart was still intact. I would have rather lost a few cents a share more and given it a chance to work by sticking to my risk level, playing off a low a day, or playing off of green-red. Instead, I saw a big seller on level 2 and I got scared and I sold my shares. So a bad job in this example of sticking to my plan, But I lucked out that it was one of the cases where it didn't run after a bit of a grind and delay at the start. It did turn into total carnage for longs. This stock could have just as easily saved itself, ripped back, and I would have been mad that I let my breakout play go. So far you might be wondering what's so great about this setup, because I've just shown you a few examples in a row that really don't work out all that well. And the reason I showed you those was because I did want to demonstrate how I manage my risk when things do not go perfectly. Next up, we'll get a look at GENE though, which is one where the pattern played out just about as well as you could ask for after a little bit of beginning choppiness. I start buying into GENE here at the end of the day as it's breaking past high of the day at 452. The reason I'm buying this is because we had that 452 intraday high that's breaking towards the end of the day. A few days back, that giant red candle, the high was 454, and the all-time high was 468. And I think that this late day strength and this late day high daybreak is going to lead to new all-time highs, and we could get a nice multi-day breakout going. So right from the start, I'm buying this with the idea of swinging overnight, and I'm going to be using that 420 area as my risk because that's the consolidation level that's held all day. While GENE starts spiking up here, let's just recap some of the factors that I looked at that made me very confident in this breakout play. It was a stock that had that huge run out of nowhere, huge burst of volume, when there really had been no volume history on the chart whatsoever. It had consolidated for multiple days below its high before finally breaking past. And also, it's a play where the float is pretty low. I think it only had a float of 2 or 3 million shares during this time. So I really was confident that it could get a nice squeeze going and have another leg up. In this case, with 30,000 shares, I am playing it a little bit bigger. But that's because it has all of the factors I'm looking for. I'm less than 10% off of my risk, that 420, 425 area. So on a setup where I am feeling confident and I know it's one that has a lot of potential, I am willing to play it larger. So far, the breakout is working all right. We did actually spike through that high day and get through the highs at 468. So it has set an all-time high now today at 474. Right now, it's just being a little choppy and consolidating, and that's normal. That's not at all unexpected. I'm very happy it's still above my risk level, so I don't mind sitting through some pullbacks. Ideally, it would hold above that intraday 450-ish area. So far, since it looks like it is, I do put in a small ad. 5,000 shares more at 454. But I only filled 200 shares so far. So I'm just leaving the order there, and I'm hoping that I get a little more pull and I can fill the rest. Right now, GENE just continuing to be choppy. It hasn't filled me the rest of my order just above that intraday 452 high from earlier. But it also won't ramp back up and retest that 474 high now. So again, an example where a breakout is having a little bit slow of a start. We get another round of knockback here, and I start filling more of my order at 454. And there I just filled the rest. So now I'm up to 35,000 shares from a 454.5 average. Right now, the 450s are still holding though. As long as this closes well, as long as it's 450 or higher, yeah, I do want to swing. Because I would consider the breakout chart intact, I would think there's good odds of a gap up, and then hopefully a morning parabolic for me to sell into. It's just a matter of staying patient through this grind. And since I am playing it a little bit larger, 35,000 shares on a 450 stock is large size for me, patience does become harder. There's a lot more anxiety while in the trade. Whenever you're in a setup and you're trying to be patient, patience becomes a lot easier with smaller size. Now GENE has cracked below 450. So there definitely is a little nervousness here right now. I'm not panicking into the weakness. I am trying to stick to my risk. I'm not going to sell into a random dip as long as it's above my risk level. But I'm certainly not getting the strength that I had hoped for. Despite that crack below 450, it really didn't wash out that hard though. And now it's reclaimed 450 and looks like it might be getting ready to grind back up a little bit. Well, we're back in the 440s. 440s still held up well. I'm feeling pretty good right now because GENE, this has actually felt very, very weak for the past 15 or 30 minutes, ever since it broke out and got to that new high of 474. It's been nothing but pull. But this is all that it could pull back so far, is that 445 area. So after a period of weakness, that's going to be followed by a period of strength, and I'm hoping that leads us back up into new highs of the day. This is why I do not panic out into random little dips. Yes, 450, that crack was not ideal. I was not happy to see it getting weaker, but I didn't want to sell because of that. Listed stocks are choppier, so I want to use the wider risk. I believe 420 support after hours of consolidation is far more important than 450 support after 10 minutes of consolidation. Now GENE, it is perking up. We have an hour to go till close, and I'm hoping we get a really nice rip and a really strong close. Give me some cushion on my position for overnight. GENE just hit a new high of day and is starting to spike up now to the high 470s. We actually had a 480 test there briefly. .480 breaks and we get even more push. So now this is what I like to see. This breakout is finally starting to work, and we may get that $5 test soon. We stall briefly up here in the high 470s, low 480s, and actually start to pull back a little bit. Still, none of this is unusual to me. I've accepted that there will be choppiness. I have moved my risk level up now, though. That 445 area that held for so long there after it cracked under 450, that's what I want to risk off of now. After this next leg up, after this next attempt to push, if we were to lose 445, that'd be a really bad sign to me. So now my risk is only about 10 cents a share, which is about 2.5%. And already I'm up 30 cents a share unrealized. Still sort of a choppy, slow push on GENE. But we are testing the 490 area. Up to another new high a day now. Only about a half hour left to go in the day, but I couldn't ask for any better so far. We were seeing some choppiness up here though in the low 490s, high 480s, and since we're right under that $5 round number that I think could possibly be a key resistance, I took off 5,000 of my shares. I downsized just a little bit to keep myself comfortable. My instincts kicked in, I took some profits. And so far, a good thing that I did because it's starting to maybe roll over a little bit. Looking weak again. Has been holding in the 470s for a while on pulls, but right now starts to crack and break down a little bit. Starts to have some pullback. This is where the nerfs start coming in again a little bit. It's really hard not to take off into weakness like this. Or not to sell into the next pop. Because, hey, I was just up almost 40 cents a share. I don't want to see my profit going away. I don't want to see it cut in half down here in the 470s. But I have to get through that. I have to stop thinking about it in terms of the money. And think about it in terms of the chart. And the fact is, this chart I still feel like is intact. That 470 area, that 475 area, that was a minor support in my mind. Just like 450 earlier. Not great to see it under it, but not catastrophic. Not terrible for the chart. I want to play off the bigger picture in the area that I think matters more. And now that 445 area is the area that I think matters. It was the first dip that held after the break. It also does help me that I took that 5,000 shares off earlier. Part of the reason I did that, it wasn't so much because I saw anything on the chart. In this case, I got lucky that I almost top-ticked it on that 5,000 shares. But I do that because I know emotionally it helps me to know that I've already locked some in into the strength. So it makes holding dips like this easier. It makes it easier for me not to feel like I'm letting all my profits disappear while the stock is fading. But GENE, it is just sort of slowly melting into the close here. We're back into the 450s all of a sudden. I'm actually back to being down on my position. And we are pretty close to that 445 area that is my new risk. We did just test 450 and bounced off it. And with only 2 minutes to go in the day, I'm pretty sure this support is going to hold. So this is where, even though we're having the weak close, even though it doesn't look good here this last 20 minutes, I take a look at the daily chart. I just take a step back, I make myself think about what the big picture looks like. And if I'm looking at the daily chart, it still looks like a breakout chart to me despite the weak close. And I'm going to take my shares overnight and I'm going to give us a chance to gap up. So now that next Tuesday morning, we are gapping up. GENE is printing at about 475, so up about 25 cents from the previous close, and it looks good to maybe have a morning squeeze if it continues to gap these last couple of minutes. Now, really quick, I do just want to touch on what my mentality is like as we enter this morning, because that does play an important role in what winds up happening with my trade. That first part of the GENE trade had been before a long weekend, so I just sat through a 3-day weekend with what I felt like was a large position overnight, and I was stressing about it. I really had a lot of scenarios playing through my head. What if it goes wrong? What if it gaps down? I don't want to lose money on GENE. I really hope the breakout works. So pre-market this day, when I'm seeing it gapping up and I'm seeing that it's working out okay, I'm really just relieved that it's going in my favor, and I want out. I'm thinking I want to sell into the spike and get this risk off the table because I don't want to agonize over it anymore. So we open up and immediately start pushing into the high 480s. And since 492 was the top the other day, I put in a sell order at 487 for 5,000 of my shares. Just another piece that I want to get out quickly below a known resistance level. And I just filled the rest of my order. Now I'm down to 25,000 shares, and we're up above Friday's highs. We're now pushing on $5. I put in another sell order just inside of 5, just in case $5 rejects. So I'm paying myself along the way here into the strength. And that's okay. I mean, that's what I typically do. But right here, we have a multi-day breakout that is starting to finally work really well. It held first dip out of the gate. There's really no reason for me to be getting scared out and downsizing. I still have 2/3 of my shares though, so it's okay. I can be patient with 2/3 of my shares. But perhaps not, because now I'm selling another 5,000 at 505. It's really not that I'm seeing anything on the chart here that's making me sell. GENE continues hanging in the low 5s here. And again, we're pushing to new highs of the day. Up to 518 now and 520. So this spike is working great. This is what multi-day breakouts do. And I look to take off another 10,000 shares here. 519 and 522. The 522 really hasn't filled much. But I'm down to 1/3 of my shares overall, just under. Yeah, I've locked in some nice profits, but it's only about 10% above the breakout move. All those charts we went through at the beginning of the chapter, those are all breakouts that ran a heck of a lot more than that. I know that a breakout that's working can really go far. But I've got such an itchy profit finger right now that I can't let myself stay in any shares to actually give it a chance. The one upside is I have been selling into spikes along the way. So I am taking off into strength every time. I'm not chasing dips emotionally. But I'm down to my last 5,000 shares. Right here, I'm selling the last of it at 538. So I just sold everything into spikes. I didn't even have the guts to hold through one dip on this thing. So GENE, it's a great example of what I talked about earlier, of me being a wimp with breakouts. Even though they can run far sometimes, I usually just don't make it very far into the move. So don't hear the wrong message here. I'm not complaining about the profits. The profits were great. I made maybe 12% on the trade overall. But it is a frustration of mine sometimes that I do struggle with patience. But in this scenario, I do know that a big part of that struggling with patience was because I was in too big. I was in too big overnight, and the stress of it caught up to me and led to emotional sells. Taking a look now at the end-of-day chart, you'll see the GENE did turn into one of the breakouts that worked really well. It had a huge run, got up as high as 768 on this day. And actually, the breakout continued a few days beyond this even. The highest GENE ever got was 11. I would have never made it that far with any of my shares, but I would like to improve myself as a trader to where I can make it to the point of selling maybe some in the 6s or some in the 7s, just holding on to a few shares. So every trade is a learning experience. And I remember the GENE breakout, and I remember the fact that I was out for 10% on a breakout that ran for well over 100% before it was over. So going into the next breakout, I'm going to better myself. I'm going to work on staying patient as long as the trend stays intact, and hopefully I'll catch a little bit more of the move on the next huge runner. The next multi-day breakout actually wound up being VLTC. VLTC, I'm just starting it in really slow speed here so I can just explain the setup to you a little bit. VLTC actually did have a first breakout past this $3 area. I tend to prefer the ones that are breaking out past green candle highs rather than red candle highs, so I actually missed this breakout and it turned out to run really well from about 310 up to 470s. The top it eventually set was 473, and we basically had a double top 2 days in a row, and then a day of consolidation. So even though this looks ridiculous, even though this looks really overextended, we're building up right now and we're approaching that 473 breakout area. As this morning spike is developing, I am a little bit wary of how fast it's getting up there because just 10 minutes ago we were at 420 and now all of a sudden we're spiking up into this 470 area. So this might be an example where it's coming up a little bit too much too soon for me. So I'm going to be a little bit more cautious with my entries. I still may take a starter here, but I don't want to be buying in huge size into a morning spike. Right now we are tapping 475, so this is a new breakout. This is a new high for this stock. And it's unfortunate because had this set up a little bit better, had there been more intraday consolidation and not come up so quickly in the morning, I would have bought this very, very large right on the break. I wanted to buy maybe 40 to 50,000 shares on this breakout coming into the day if it had happened. I knew that it was a setup I wanted to play large because it had such powerful squeeze potential. But instead, since it's breaking past 475 right now, I'm a bit skittish, and you can see that I so far have not started buying, even though it did just break through. I'm waiting a little bit. I'm going to test the waters small, but I'm going to have to see how dips hold first. Once the chart starts to develop a little bit more, I'll set my risk level accordingly. But right now, if I were to buy this, I'd have to set the risk off of about 420. So with 50 cents a share on the line, 60 cents a share on the line, I can't play this nearly as large as I'd like to. So we'll get the speed up a bit here now. As we start to speed up the time and as we start to watch this breakout develop a little bit, you'll see that it starts spiking pretty nicely. It rips straight through those 470s. We've already tested almost the 490 area. So it's already showing quite a bit of strength and quite a bit of squeeze potential. But I'm not chasing the spike. I'm not starting in at any cost. I'm still waiting. I need to get a feel for whether or not this is going to stuff. And then if it does stuff, where does support start getting set? At this point, I'm thinking just buy dips. So far, the 490s are giving VLTC a little bit of trouble, and we are starting to dip back into those 470s right near that breakout area. And since the breakout was 473, I'm thinking about taking a starter right around that level. The only thing I'm waiting for is I'm just trying to give it just a little bit more time. I want to make sure this isn't going to dip into the 460s or 450s. I don't want to miss the chance to possibly get a better entry. But that first dip, 475, did hold very well. And I take a little bit of an emotional starter here at 485. 10 cents above the breakout level as it's starting to perk back up. It's certainly not the ideal place to enter, but I just want a piece just in case. So far, I've filled 8,100 shares. So remember, the kind of size I was thinking about playing at the start of the day on this, if it had been a perfect breakout, was 40 to 50,000 shares. So right now, I'm only at about a quarter of that size. I'm leaving my order in at 485 just because if this does have another dip back down, I do want a chance to get filled. So far, I love how this breakout is acting though. We've now perked through 5. We're showing pretty great strength. And that first dip did hold 475, that breakout area. So now as we dip back down here again, I just fill the rest of my order. I'm up to 10,000 shares now from 484.8. And I'm watching to see if that 475 area continues to support. If it doesn't, it's not the end of the world. I'd be okay with giving this a little bit of wiggle room. I'd be okay with this fading a little bit more. So I still am not rushing in because I'm still not convinced that this isn't going to have a little bit more dip. But the longer 475 holds, the more confident I'm going to become in that support level and the more meaningful I think it becomes if that breaks down. But after only 5 minutes so far, I wouldn't be freaking out if it cracked. That perk back towards $5 just rejected, and now we're getting yet another round of pullback. We're back into those mid 480s. Still hanging above the 475 area. But I'm just watching this dip very carefully and how it's going to react, and this is where I might add. For now, low 480s are holding very well though. Like I said earlier, the longer VLTC is weak and holding up, the better and better I feel. Right now, we are cracking back into that mid 470s area. That area where the stock broke out from. For the second time, though, this dip is holding, and I just added 5,000 shares there at 480. So now I'm up to 15,000 shares at 483.5. And I actually just threw in another 5,000 share order at 481. I'm looking to add because now 475 is held twice. So I'm up to about a third of the total size I would be comfortable playing. Still, the reason why I'm kind of treading lightly and easing my way in is because that breakout just happened so fast in the morning. My 481 order is still sitting there, and I'm hoping we get just a little more knockback. I do want to fill a few more shares. The longer VLTC holds up above this 475 level, though, the better and better I think it is for the overall chart setup, the overall breakout. And I do expect another leg up soon if it continues to hold. We are starting to perk a little bit here. We're testing the mid 490s. It looks like we might start to get back above 5. Big seller comes in at 495. So this is an example where I'm seeing this big seller on the ask on the level 2. And you would think that it would cause some panic. You would think that it would drive the stock down and get kind of a severe dip. But instead, that seller is just getting chipped away. That's a great sign of strength from the stock. Once he's taken out, we blow through 5. We are about to test new highs of the day, and there they are, new highs of the day now on VLTC. So at this point now, with this spike and recovery, with these new highs, with about 15 minutes of consolidation on 475, 475 is my new risk. So that's great for me because now, instead of having to worry about that 420 area or 460 or 450 or how those levels react, I know my risk. I have a set level of basically 8 cents a share. So if I lose on this trade, I lose $1,500. And it becomes pretty clear I'm not going to fill my 481, so I do cancel that order. From here, I'm really going to speed up action for the rest of the day because this is a patience play for me. I said after GENE, I wanted to try to be more patient on the next one, and I go into VLTC with that goal in mind. I still would add dips on VLTC if I got any good ones to risk off of 475, so maybe low fives I would consider. But this is really running now. We're really getting a great spike. We're up into the high fives. I'm already up $1 a share on my position. Right now, dips like this is the hardest for me to hold through. Because it's really hard to go from being up $1 a share to up 50 cents a share. Because you worry, what if it doesn't come back? But I'm trying to trust the chart at this point, and I'm just trying to give it time to play out and consolidate and maybe set up for yet another leg up. And I know I issue this reminder a lot throughout the DVD, but again, just keep in mind, this is very sped up action you're watching right now. So in real time, it is much, much harder when the stock is consolidating sideways like this, when it's looking really weak in the 550 area, to not press that sell button, to not say, oh, it looks like it's going to break down, I better take the profits while I have them. Especially when we crack under 550 here. This is kind of a scary moment for me. But I'm keeping in mind the fact that 550 is still 75 cents a share above the breakout level. Yes, we might get a little bit of dip here, but I'm not expecting this to turn into a huge washout. Overall, the breakout chart is still intact. And it turns out to be a good thing I didn't sell into that weakness because we perked right back through 550 pretty strongly. With patience, you have to accept that sometimes you are going to watch the majority of your profits disappear. But in the cases where it's a really good breakout, the cases where it works perfectly, you're going to have some pretty great returns. After the way that dip held in the 530 area and then just basically squeezed right back over the next half hour into the sixes now, I have my new risk level. 530 is where I want to risk off of now. Again here, hard crack under 6. We just went from 620 area down to now the 570s. 50 cents a share gone again of unrealized profit. Ask yourself, would these dips scare you? But the nice thing is, as this chart's developed and as I've moved my risk up to that 530 spot, my worst case scenario now is I make 45 cents a share. This last dip held just above 550, so that's good to see right now. I like to see higher lows. But 530 really is the key number that I'm going to be focused in on the rest of the day. As long as we're above 530, I feel like the chart's intact. If it starts to crack below later in the day, I might be forced to take off into the weakness. And yeah, I can feel bad. I can say, oh, what could have been if only I had sold 90 cents a share higher. And the fact that I have smaller size right now, that is helping me stay patient. This would be a lot harder for me if I had massive out of control size, sort of like I did on GENE. But with 15,000 shares, with a position that's about a third of what I was thinking about taking coming into the day, it's a little bit easier to just sit back and relax. If you're asking yourself, why did I never add more size? Why didn't I ever get up past 15,000 shares? Well, VLTC never really gave me the opportunity to. I would have if we had had a quicker, harder dip back into the low fives or high fours or something like that, back around 10:30 or 11 o'clock, back when I could have been risking off of that 475 area. But since the biggest dip we got was 530, that's still a long way off of 475. So I don't want to add shares there with that wide of a risk and totally kill my average and make myself really uncomfortable. So in this case, I decided just to stick with what I had. VLTC is perking back through 6 now, so it looks like we may get a nice little afternoon breakout past 618. But it rejected and slammed right back under 6. And again, this isn't very comfortable for me. I don't like seeing something weak out of the stock, like a failed high-a-day break attempt. But I'm okay to sit back and relax. Patience is about trusting the chart, trusting your risk level. And like I said before, if I wind up giving away a lot of my profits, so be it. That happens sometimes. But I really want to try to just sit back and give VLTC a chance and swing it overnight, because this is just day one of the breakout, and I do think that tomorrow we could get a nice gap up, we could get a nice morning spike, and that is where I want my exit to be. If I'm wrong, if we gap down, if it opens weak, I just get out and I still lock in some pretty nice gains in all likelihood. So I'm taking all 15,000 shares of my VLTC overnight. Even though we're closing kind of weak, we're still above that 530 level, and I do think there's a good chance of a gap up and spike tomorrow morning. So we enter back in here 5 minutes before market open the next day. And while I'm only showing you a little bit of pre-market, I was watching this all morning, ever since 8 o'clock, because if this had been gapping down, I might have wanted to get out a little bit earlier before market open. Instead though, we're getting a great gap up, and we're about to open up here in the 630s, so above the last day's high even. As we open, since this is such a large gap up, I'm comfortable giving this a little bit of time here to spike on up. Already we're squeezing up towards the high sixes. But 671 rejected and it slammed back down here. This slam, it does make me a little bit nervous. Since selling into this morning pop is my goal, once we start spiking back up here, after that pullback, I start taking off some shares. I took off my first 5,000 shares at 642, just into that little rebound, in case of a lower high and in case of another leg down. So I'm down to 2/3 of my shares now. But now the spike is strengthening. I took off another 2,500 as we were getting closer to that 671 high. We blow right through, and now it's starting to look really good for VLTC. I just start paying myself along the way into the spike. I get out another 2,500 shares there in the high 680s. So I'm down to just my last 5,000 shares now, and we're looking to see if we can break past 7. In this case, these gains are really adding up. My patience has paid off. VLTC gets through 7. Although it gets a little bit weak, it perked through only by 9 cents and then pulled right back under. All of a sudden we're in the 680s. But since I have paid myself 2/3 so far in my position, I can be a little bit more patient through dips again. We're a long way off of that 625 support level, the morning low, and I do anticipate that this pullback is going to set a higher low, and then I can start risking off that and give my last third a little bit more time to work and see if we can get a nice strong push through 7. One last big squeeze up that I can take off the rest of my shares into. That's my goal right now. So far we are showing some weakness though. This pull has gone a little bit further than I would have liked. We're down into the 660s now. But I'm trying not to get scared. I'm trying not to sell the last of my shares into weakness. I do want to wait for either rebounds to sell into, or if I start to feel comfortable with that 660 level and how it's holding, that can become my new risk. I really do just let the chart develop and let the chart tell me what to do. Now we're starting to rebound pretty well off that 660s level. We briefly tested 690s there. And this is turning into a bit of a channel. The longer 660s hold, the more and more comfortable I am using that as my risk. If we were to crack under 660 right now though, only after about 5 minutes, I probably would give the dip a chance to hold 650 or that low a day. We did just get another 660s test there, but it held again. After holding for a third time, it starts to perk up strong again now. We're back up into that higher end of the channel, up into the mid 680s. Once this busts through, I think we could see new highs of the day. There we go, it blew right through. We're getting into the 7s now. We had a new high of day at 715. I take off another 2,500 shares of VLTC at 707, just because that wasn't the strongest high day break in the world. So again, I just continue paying myself into strength. Now I just have a small piece of my position left, and I'm just going to give VLTC a minute here to spike up and show me if we can get any higher. Or I could just sit back and risk the rest of this off of that 660 level. The high of daybreak is continuing to grind higher, and as it gets into the 730s, I decide I'm done, I've had enough. I take the rest of my shares off, and now I'm totally paid, and I've made about 40% on my position. While in this case that is a really large sum of money, don't get caught up in that. Just think about what 40% means. Think about what that means for a small account. Because back when I was trading a smaller account and I was playing breakouts, maybe I'd have a $1,000 position and make $400 on it. Maybe it'd be a $5,000 position and make $2,000. It's meaningful growth no matter what size you're playing. Now taking a look at the end of day chart, my sells into the strength turned out to be pretty good on VLTC. My average exit was about 680, and we did fade off for most of the rest of the day after topping at 738 several times. We faded all the way back down to a low of 582 on the day. So I'm really glad I got out into that strength. Had I not, I probably would have continued risking off of that 660 level, and I would have had to take off into some weakness, maybe around 650 or 640, which would have been an unfortunate sell for me. But this trade was a big one for me because it was one of the first ones I was able to stay patient with, and it's something I'm going to keep on trying to do going forward. A couple days later, VLTC actually sets up again for another breakout. After that 738 double top on that last chart we looked at, we had a day of consolidation, and now today it's ramping back up. And this morning it actually did break past 738 by 3 cents. You can see it tapped 741 in the morning. But that's an example of a gap up and a straight up spike. So I decided not to bite on that breakout. I did not buy into that. And it's a good thing because there was a very severe pullback and a lot of consolidation after that. But now, as we enter the afternoon, VLTC is ground back up. It's consolidated very well. And it's looking like it's going to challenge those highs from this morning at 741. And that's a move I want to buy on. Once again, I'm very excited to buy this breakout because even though it's up a lot, even though it was at $1 just a couple weeks ago, this is a stock where if it keeps on breaking the new highs, we should keep on seeing some nice big squeezes, lots of momentum buyers come in, and I think that there's a chance for this to run possibly up to the $10 area. So that $10 number is in my mind when this play starts, and I do know that if I get this high day break and this breakout, it's a play I want to try to stay patient with again. So as VLTC builds up here, I am watching the 741 high of day. I'm not really thinking so much about that 738 area. And I start to buy it here because it starts to bust down through, and it blew through pretty quickly. Already at 749 for the high. I got myself 15,000 shares though at a 743.8 average. Right now I'm thinking about the 720 area as my risk level, since there was a good deal of consolidation in there before this latest break to the upside. I tried to add a little bit there as it started to perk through 750, just because I took that as a good sign and thought we really could get some nice afternoon squeeze going here. I wound up adding just a couple thousand shares. About half of that add is still open, and I'm leaving it there at 751, hoping to fill the rest on a dip. Since my risk is the 720 area, that really is only about a 3% risk, so I'm very comfortable with that. And I am willing to take a little bit more size because it is such a tight risk. We're retesting the 760 area right now. And it starts to perk through, and we're at another new high of day. So far, I'm noticing that this spike is not nearly as fast as the breakout back in the $4 area was. I canceled my 451, the rest of the order that I had open still, just because this hasn't had any kind of real pullback yet, and I am hoping maybe it dips a little bit further and I can get the rest of my entry in the 740s. You can see I just threw my order in there at 742. So just above that 741 high of day break that we had. I'm happy to just leave it there, and if it fills, it fills. If it doesn't, no big deal. I still have pretty good size on this move. The dip is back into the 740s though, and my 742 does fill, so now I'm 20,000 shares from a 744.5 average. And if this breakout fails, if it panics all the way down, cracks under that 720 or 715 area, sure, I'll cut the loss. But into a dip like this right now, this is where a lot of traders get scared. I'm not getting scared. I'm okay holding through this. My risk is still intact. I'm going to give this time to work. While I'd love to just snap my fingers and have it be at $10, I know it's going to be a lot more choppy of a path to get up there. We continue to dip a little bit here. We were into the 730s there for a minute. Right there, we had a pretty strong perk right back to 760. So now this is starting to act like that channeling action we typically see. Right now, that low on that dip is about 737. High is 766. Pretty soon I will be moving my risk level up to that 738 area. I'd like to see it consolidate a little bit longer first before I make that decision. But I am impressed with how that last dip held. So another 10 to 15 minutes of consolidation, I would probably move that risk level up, or if it breaks through the high soon, then I would also move the risk level up. Right now it's still a very choppy start to the breakout though. We failed in the 760s again. Had to pull back to the 740s and now starting to perk once again. Finally right here, we did just tap a new high day, and here we go, up to 780 now. So now my risk is going to be more like that 7 cents a share down to 738, where that one dip held. With about 45 minutes to go into the day, I'm hoping this can really get a squeeze going, get us up to the $8 area, maybe higher. This really is the exact same situation as that VLTC breakout we looked at in the last example. As long as this is holding together, I want to take it overnight. I want to give it a chance to gap up. I want to give it a chance to have that morning spike tomorrow. And that is what I want to be selling into. So yeah, there's a little temptation when it's up here, but I'm trying to hold out for the bigger picture move. More choppiness and another hard dip back into the 750s. But a 750s dip doesn't scare me. Trend is intact. Right now, it's been about an hour since the stock broke out, and we're only 20 cents past the breakout level. So this has been a lot of choppiness, a lot of grinding, and it is definitely hard to hold through. I'm a broken record on this, but this is what it means to be patient. Sitting through stuff like this. When a win is no sure thing. The last 10 minutes here, we start to get that perk. We're up to another new high a day. Approaching the $8 area. There's a big seller at $7.95. He just gets chipped away. And here's our $8 test and our $8 break. So this is a really nice close. And I'm more than happy to take my shares overnight, and I'm looking for a gap up and a spike. Unfortunately, the next morning, we don't get the gap up. With just a few minutes to go till open here, we are gapping down right now. We're down 20 cents a share from where we closed at $7.93. And a gap down to me is a bad sign, especially on a chart like this, where yes, it was breaking out past that 740 area, but it is still a very extended chart. There's no denying that. So I'm worried about a gap down. I'm worried that this could be the trend break. I'm worried that this could lead to some morning panic, and before we know it, we're in the low 7s or high 6s. So unless this has a miraculous recovery in the next few minutes, I'm going to have to sell right at the open. I'm going to have to get out those shares to protect myself, because I don't want to put myself in the situation where I'm holding and hoping through a morning dip that the stock is going to come back. The offer lifted a little bit there on the level 2 for VLTC, so I'm hoping that just in this last minute, maybe a big bid comes in, maybe something happens and it turns into a gap up instead of a gap down. But so far, no luck. It looks like it is going to be a gap down. So as the market opens here, I'm going to be selling, no questions asked. In go some of my sell orders, and I'm just taking off a couple thousand at a time, just moving my order down a little bit at a time. I am chasing the weakness here because I don't know how hard this is going to flush and I don't want to stick around to find out. So I'm locking in what I can while I still have profit. And I did chase the panic a little further down here because I started to get scared. It started to speed up. I only have 1,100 shares left now, and at this point I'm just waiting for a rebound to sell the last 1,100 into. I put my sell in at 758. It starts filling. I'm left with just 400 shares at this point. Since it is just 400 shares, I will leave the rest of my order in there. And if it has another pop, it should fill. But this is a disappointing trade for me, and I did just fill the rest of it right there. But my profits got cut down big time. I was up at least 6 times this much going into the close yesterday, and the gap down in my chasing the panic wiped it all out. End of day, it turned out to be even a little bit more frustrating because VLTC did recover, and it did wind up spiking up to a high of 989, so near that $10 area that was my original thought of how far it could go. And the move it had to get there really is pretty rare after a gap down, where it broke past this $8 area after some consolidation and then squeezed right on up to 9 in the next 30 minutes or so. That's a move I've only seen a couple of times, and I wanted to position myself to rebuy that. I was ready to rebuy that if that move happened, and unfortunately, it just blew through way too fast, never really offered a dip, and I froze in the moment and I never got my fill. So I missed out on my chance to get my shares back, and I missed out on that huge run up into the 989 area. So the reason I included this trade was just to show you that it isn't always perfect. It isn't always that gap up and morning spike like you want when you try to stay patient and you try to give the trade a little more time to work. Don't necessarily take this VLTC example as a sign that you should hold through gap downs and you should hold through morning dips, because like I said, that breakthrough 8 and up to new highs, that is pretty rare after a gap down. So anytime I find myself in this situation, I'm going to do the exact same thing every time. I will always be out into the gap down. But for future plays, the one thing I might change is I might try to be a little bit better about pulling the trigger on that breakthrough 8, that break past the prior day's highs, because I do want to get back in there and have a chance to capture some more of that squeeze. So unfortunately for me, patience did not work out this time for VLTC. But I had my goals very clearly defined going into the trade. I knew that I wanted to try to stay patient, try to give it a chance to work, but it was a gap down that killed the trade for me. Here are the key takeaways from Chapter 8, and the first two really go hand in hand. Volume and volatility are my main concern, and the breakouts that have that volume and have that volatility are a very powerful squeeze setup. Yes, sometimes you will see charts building towards their 52-week highs, volume will be nothing special, volatility won't be great, and sometimes, yeah, those breakouts will work out, they'll have some decent runs. But they take longer to develop, they're not as volatile, they're not as crazy. I just found that the percentage gains aren't quite as good, I don't feel they're as reliable, so I just don't like them as much. What I want are the breakouts where the stock had a huge burst of volume, a huge run, pulled back and consolidates for a few days, and then breaks out. Those are the ones that can really get running, and those are the ones that I want to be there for. When playing these breakouts, remember, you don't have to get in at any cost. They are choppy in the beginning. You can buy into a dip if you miss the initial break. Chasing spikes usually leads to more emotional decisions and leads to losses. I try not to put myself in that situation. I would rather practice the habit of being patient and buying into a dip later than chasing a spike and getting in at any cost. That will make me a more successful trader in the long run. Finally, just remember with these breakouts that the breakout level, once it is broken, it does not have to hold perfectly. I like to risk off of a previous intraday support level, not the breakout level. These can be choppy. These can go over under a few times. Don't be one of the traders who gets shaken out for no reason. Go in knowing the risk, knowing the previous support areas. If that breaks, great. Get out, cut the loss, move on to the next one. Just don't go in with unrealistic expectations of the stock acting perfectly.